Alright, if we break down here, guys, I'm sure for the same cash flow targets, I appreciate you for being here.
I'm sure right now it's target hit. This is what we call a magic hour.
Alright, I'm taking this.
Upside ahead, the momentum to the upside ahead, everything aligning, live price and historical data, right?
Right there.
Welcome, this is PackTV. Sit back, relax, and watch how we day trade with statistics.
PackTV, God-given, so I gotta make it happen, I'm on mission. Not like them, I'm different, that bag come with a pension. Talk about that business, like I'm hard all in the pain. Shining hard, don't need no chain. All this drip, it feel like rain. Everything on me, got it on my name. They don't got it like this, they don't talk it like this. I was built for this. That TV not like guns, take it away.
Stop me, it's me. If you're doing this for the women, you're losing. Do this shit for yourself. I do this shit for myself. They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Puppet masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn the script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. A lead over production, too many miles out of throne. China rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn the script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain.
Welcome, this is PackTV.
One more time, it's the plan. It's the magic hour. Drez catches sings on my brothers in the rain. Karl with the boom, I going in, turn the page. Miguel catching 10 points, me and number same. It's the magic hour, all the money getting made.
Drez catches swings on my brothers in the rain. Karl with the boom, I going in, turn the page. Miguel catching 10 points, me and number same. It's the magic hour, all the money getting made.
Welcome, this is PackTV.
One more time, it's the plan. It's the magic hour. Drez catches sings on my brothers in the rain. Karl with the bummer going in, turn the page. Miguel catching 10 points, being not the same. It's the magic hour, all the money getting made.
Drez catches strings on my brothers in the rain. Karl with the booger going leads on the page. Miguel catching 10 points, be another same. It's the magic hour, all the money get made. Magic hour, hey, magic hour, hey, PackTV, hey, PackTV, hey, magic hour, hey, magic hour, hey, PackTV, hey, PackTV.
Good morning, everybody. Hope you can hear me good. How we feel? See, nice. Happy Father's Day. Yes, sir. Oh Lord, what we got here today? What do we have? Let's see. We open on a gap down. Right here. Went down. Made a low at 1945 around there. Then we push. Got out Sunday's range. Made Asia short falls. What's that?
What up, dude?
What's going on, brother? How
Not
you
much.
doing?
I'm collecting some data, but I figured I'd jump on and chit chat with you. I can't share the screen right now.
Oh, that's nice.
I'm not trading though, but I didn't want to see you up here all lonely by yourself. Let me hook at my head.
Yeah. This is first time I look at the charts. Yeah, guys, I see us got out Sunday's range right here overnight. London right now we got a 3 o'clock, 3:15 high day. Yeah, and we went short for London. So we got short, false, short. Short, false, short. That's a contradicting market right there, guys. I gotta do my war game for P12 mid. Let me see what we got. Say 89%. Saying we're gonna get this up to here, but we got a new hour opening right now, 7 o'clock open, and then we get up this weekly open. I don't know why you say weekly. The weekly opens right here. So we above weekly open, midnight open, and 6 a.m. open. So patience for me. I missed the long last night. I was not looking at charts. My daughter had me busy. Yeah, and let me see. Yeah, I can see us making a new higher days as long as we stay above 6 a.m. open. Getting just free Friday's high, whatever that high was. Yeah, Thursday's high. And then we can come back in. So as long as we stay above 6 a.m., long is in the table. Mm, yeah. Mhm. We above NFP high. Yeah, we went down last night. Couldn't close below NFP high. Shot back up, and now we here. Oh, yeah. What you got, guys? Anybody traded last night? Short one. Short one. Short none yet. Yeah. See. Uh, let me see. Dollar pushing. Mm-hmm. My use. Check. The VIX is calm. Um, yeah, oil dropping. Yeah. YM pushing. ES. Okay. RTY pushing. Okay. Yeah, look at that, guys. Woo. Okay. New highs. New highs right there. Yep. New highs. Fresh out the. Mhm. Yeah, so we got shortfalls for London. One candle took everything off. Yeah. Now I just gotta be patient to see if we're gonna continue up. It's gotta be a tweet. Yeah, this has to be a tweet. Somebody's talking right now. JD Vance is talking right now. Said the strait is open. Strait Hormuz is open according to him. Yep. Yeah, bro. Thank you, guys. Yeah, this is news, guys. This is news, kind of. Um, Headline risk. I'm patient. Nothing for me to do. Just know that we got a new high. Um, got P2 highs. And yeah, let's go. Let's go. Yeah, I gotta be back in 1 second. Got you. Okay. Give me 1 second, guys. Okay, we back. Can you hear me now?
Yeah, you good, man.
Can you hear me?
Yeah, you good, bro. Sound good.
Yeah. Okay. Because my connection is acting up right now.
Yeah, Restream's not locking you right now.
I don't know what happened. See the screen.
This is the trading version of Verizon commercial right now. Can you hear me now? Can you see my screen now?
Hello.
There you go. Third time's charm. You are coming in good on my end.
How about now? You good?
Yeah, you're
No.
good, bro. Nope. All right.
Oh.
We can hear you this whole time, bro.
Yeah? Yeah. You hear me?
Yeah, we can hear you this whole time. You're good.
Okay. Nice. Yeah. I leave this happen. Oh shit.
We just corrected that whole move.
Yeah. Yeah, JD Vance is talking right now. So yeah, this guy's headline risk on site. We got the Pito high on that move. We suck back in. New York one is in 15 minutes. I'm not doing anything for the next 15 minutes. Yeah, my process is simple, guys. My process is I trade a lot from the Sunday range. So first hour Asia, I let it form, first and a half. And then I see if we are like this, away from it, we tend to suck back in and use it like the low or the high, use it like support or resistance. I look into it. I get my swing, and then I could take, either long for cash flow trades or a short. Same thing. So everything revolves in Sunday's range for me. Then when I sit in the morning, I see that we above it. So that's bullish to me. Meaning that we're gonna get whatever London high push, it was gonna get taken. So yeah, we got it. Didn't trade it because I was busy here. But Most of the times from 6 to 8:30 is cash flow trade. What I mean by that is 15 to 20 points, nothing else. And then after 8:30, that's when I get to go move. Like once we got the New York 1 range and we see the direction we heading, either low or long or short, I could take a 9:30 trade targeting either a new high or a new low day, depending how we looking and what variables I got from London and Asia. P12 mid is key for me for a continuation or rejection. So let's say we are New York 1 forming 15 minutes. It starts. Once it forms, I see if we are close to it or above it. We tend to go down and then make the move. Or sometimes we make the high and then we tend to go back into the mid. Like it's really, really high probability to touch midnight, P12 mid during the day. So basically 12-hour candles, I look for the structure. I see I have whatever I have here. So right now I have so I use ICT for some of the stuff. This is infer value gap, right? Inverse value gap. We got out of it, but we stick inside. We can get out. Nobody above it yet. So yes, we made the high, new high, but we've sucked back in. So now it's patience. Next 15 minutes, we can take a trade, guys. I can take a trade on stream. Depending how we're looking for the next 15 minutes. Because right now I have a high, but I have no confirmation on the swing. I need a swing, meaning I need a middle finger. One high to the right, one to the left. So if I have that, then I can take a trade short. Shorting this move. Leaving this high for now, coming back to the mid, and then see what we're gonna do in New York Open. Yeah. Yeah, it's pretty simple, guys. I keep it very, very, very simple. Also I use NFP. So everything I do, I learn from the bootcamp. Yeah. So you will learn high time frame stuff that I use intra-day. Meaning NFP, Sunday, Tuesday, range for the whole week. And P12 mid. So I stay on the 15-minute chart and I look for move based on that 12-hour structure, higher time frame things. Sorry. NFP is the first report job number. So the first Friday, usually the first Friday of the month, we get where is it? We get a range, right? Usually it's huge. So when was NFP? When NFP was on when was NFP? Right here, the 5th. Right? That candle, I stretched out that level for the whole month. The whole month. And how I use it, if we above the mid, we are bullish. We below, obviously we are bearish. Looking for lower prices, looking for these lows. Right? Last week we had a gap. Came into the middle of that gap. But we didn't touch the mid. This is the mid right here. You can see my chart right here. NFP high 75%, mid 25% of the range, and the low. So We started here. We found a swing or double bottom, whatever you want to call this. Started turning up. We got out of it. Came back in. Got this candle, and now we're here. See how we body tell the story, right? You got out, getting close, jump back in. Now we fighting that high. Last night we fought that high. So you see last night this low. Got out a little bit inside here. This is that wick. Came back in. Put a new high. Right? So very, very, very interesting, those levels. So if you want to learn more about it, you know, Bootcamp. It'll tell you everything you need to know about NFP range. Yeah. So again, below, above the mid, I'm bullish. Below, I'm bearish. Higher time frame wise, it's not like oh, I gotta see that we are going down. I gotta see it swing. You know, not just the level. I gotta see structure breaking down, and then I can make my decision. Hopefully that makes sense. For the whole month, yeah. For the whole month, yeah. For the month of June, I'm using this range. The whole month. New NFP, then I in trader range. Sorry guys, I'm at work. But yeah. Oh, nice. How are you going? You like it? Through the bootcamp. Whoa, what happened? Y'all lost me?
You were good.
I'm good?
Yeah, you're good.
Okay. It's coming in and out for me. Sorry, guys. I don't know what's going on. So, 8 more minutes. For New York 1, let me see London on you looking like. London on you. You got short fall. 80. So depending where we open, these levels right here got 87% are getting hit, and we right here right now, and P12 mids is at 88%. Okay. Yeah. More patient, guys, for me. More patience. Yeah. I can see the chat. You write it to me. I cannot see it. You guys hear me, right? Oh, I can see the chat finally. What? What are we doing here? Go. Year one begins. Hopefully it goes up. Don't know are you broken right away. Patience, patience, patience.
Valdianis, you're live now. I don't know if you're coming off mute. Hi guys. The reason why you're not here in Drez is sometimes he is at work, so sometimes he does have to step away. But he has been here definitely longer than the 40 minutes you're saying. Mimar Reld. I know I was down here, I don't know, 5 minutes ago, and I think he was talking. So, anyways, I'll be honest, you're live. We get to see your camera while you're driving around. If you wanted to talk. Otherwise, Drez, I'm sure will be back in a moment. He does, like I said, work from where he trades. He's one of those few that have that benefit. So sometimes he has to step. Oh, I think I heard you, Aldianis.
Yes, sir. Good morning, everybody. I'm working myself. I'm going home now. That was my last ride. So, yeah. So, Drez usually gets busy with the inspector, so he has to go like that and be quiet. But yeah, he said he was he just got into the charge. He missed his long from last night, and he's just being patient now and waiting for 8:30. So if anybody was wondering what he was looking at, that's what he was looking at.
Hello, can you hear me now? Yo, no.
Yes, sir. Yes, see.
What's up, bro? Nah, my
Good morning, bro.
Here, popping up. My fault. You know.
No, yep, we got it. We understand, sir.
Yeah, she popped off here, wanted me to show her something in the label, so I had to go. I'm sorry, guys. I'll be working here. I'm sorry. Especially Monday, new week is start of the week is kind of tough, but we make it happen. Yeah, I'm waiting here. I'm still not in a tray. I have you see my chart is clean. Just this candle is news candle, right? We knew that. We saw it live. This is headline risk. We got New York 1. London OU is broken. We got a West P12 mid is at a what? 96% to come back here today, guys. Now, do we make it now, or do we form this New York range, which goes from 7:30 to 8:30, first hour, right? We make a range, and then either we take the low or we take the high. We take the high, then we go long, probably a new higher day because we don't usually make higher days at 7 in the morning, right? We could, but we usually don't. So patience, guys, patience, patience. Right now we're just dancing here, up and down. Just wait. I'm waiting. I missed the long, like Odiani said from last night. Beautiful long. But it was Father's Day. So my daughter had the premier attention. Right? They didn't let me go. Went out. No shot for me. And that's okay. I know I'm gonna get another move eventually today. Just right now. We above the levels that I like. We are above 6 a.m. Sunday range. Sunday open. Right here, 1800 open. And yeah. We got Friday's high on this move. And pizza high. So probably range here. I don't think we got news at 8:30 today, don't we? Do we? Let me see my calendar real quick. Today's the 22nd. 8:30. Huh? Yeah, we got Canadian news. Shout out to Pocket. We got Canadian CPI. Okay. We got Canadian CPI. I mean, it's not USA news, but they still move markets. So, yeah. Okay. Interesting. E. Yeah. Right now, NQ is leading the pack to the upside. So NQ is above these levels. YM actually took the low, this low, 3-day low, right here, overnight. NQ actually pushing. So it's leading the pack right now. What else we got? Oil on that news, probably tanking. Yeah. And lower this. And the 10-year pushing. Okay. Yeah, I also look at other markets to trade. Not to trade, but to have a better glance of what the week is gonna look like, or who's leading, who's not leading. If this move is reasonable to go higher, stuff like that. So yeah, it's a lot of. Woo, okay, what happened now? We're moving. We are moving to the downside. Now that we broke London on you, this low or this high, it's not safe. Meaning, we're gonna take either this low or this high, because we are broken. We broke it, right? So, yeah. How we looking on the weekly? Weekly, we hit the MAE, not yet. Close by. Yeah. So, like I said earlier, above Sunday range, we are looking for a weekly move higher and going to this blue box. 300, 840s, 900s, and 120 and 230s. Yeah, above Sunday range. Tomorrow we get Tuesday range, so combine those two, and it's power to you. What do I mean by that? So what I mean is this is Tuesday range, this yellow box, and this blue box is Sunday. So last week, on Monday, we started. No, that's not. Right here. We started Sunday, we pushed. Made the higher week on Tuesday. Shout out to Austin. Right here. Created that range. Sucked back in. Even got a low on a Wednesday. And then, so higher week on Wednesday, Tuesday, low week Wednesday last week. Pretty normal. And then we started to push back into the range for the rest of the week. This week, we actually went lower and pushed higher. So we are here right now. first day of the week, so I'm not tripping. I'm just watching, right? Just watching. Above Sunday again, bullish. Below Sunday, bearish. NFP, same thing. Above the high, I'm above the main. Actually, I'm bullish. Below, I'm bearish. Right? 6 a.m., same thing. Above 6 a.m. opening, looking for high prices. Below, then I look for mid, between mid, and global is open, aka 1800 open. Why are those? Because those are 12-hour opening prices, right? 12-hour structure. This is what I follow. 12-hour is gold, right? So data line with data. What we do here in the pack. MAE, MFP stuff. Daily profiler. Direction, daily direction. All right? And yeah, that's the sauce. That's the simplest way I can put it. No rush. No FOMO. Let it come to you and hit it out the park. Yeah, I don't do the 1 minute chart. I do the 1 minute, I'll be lost in the sauce. This is gangsta right here. I don't do that. Well, I trade in Q, guys. So if you're new here, I trade in Q. And no, 1 minute chart is not for me. So you're right here. Nope. I can trade it, but I don't. I'd rather trade my 15 minutes and up. It's better for my sanity. That makes sense. Hopefully you guys hear me. I don't know. I cannot see the chat. You got questions? I'm sorry. I'm not ignoring you. I just can't see the chat. Yeah. We got 7 minutes for a new hour open. 8 o'clock. Yeah. Let me see. What's the time for P12 mid? For P12 mid, we got a 97%, 96.6, right? So 97. Mo is 930 to 945, or medium 830 to 845. So between the hour of 930, which is the most that happened, we can go back here, P12 mid, or 830, we can make the range like we said, with the high and the low between the first hour, and then go short. It's straight to P12 mid, right? And retest this here in the Sunday range too, because this inside that Sunday range. Yeah. I don't like chasing moves. No. So if I trade here, the moment I get long, he's gonna go down 300 points. The moment I get short, no. Let it wait. Let it wait for a key time. Right now, we just ranging. Oh, if you trade it, you just wait for a new hour to open and fix the volatility there. That's what. So if you're gonna take this move, don't rush into it. Wait 4 minutes and then take the trade, or the first 5 minutes of the hour, then take the trade. It's better. my opinion. To wait. You still driving?
Yes, sir. I'm gonna be home in 5 minutes though,
Hey,
and I'm not driving on the opposite side of the road, people. It's a camera effect. That's insane. Can you imagine?
yeah, yeah, man. Oh, he's driving.
Yeah, he's like, oh, he's on the other side of the road.
How was the weekend, bro?
It was it was busy, but it was good.
Yeah.
Yes, sir. A lot of Uber. Watched, listened to a few of the games from the World Cup, and yeah, kept myself busy. Yeah, I did a little back test as well. Yes, sir. Trying to sharpen the tools. Um, Now that I got your attention, guys, I do want to apologize for not being up here for the past few weeks. I um, I went through a family situation. My uncle passed away, so I decided to take a little break. And then after that break, I decided to change my schedule, including my trading schedule. And most of the days now, I don't take a trade till 9:45, 9:50. So I make it home like around 8 o'clock, around this time, and then I'll place my trade. Um, Usually after market open, because when I get home at 8, usually the magic move already happened. So I just gotta wait for after market open for for the next move, right? So that's the reason you guys haven't seen me. Pretty much, I have to rearrange my schedule, and I'm getting home after 8 o'clock. So it's pretty much magic hour is done by the time I get home. So, but been missing everybody. Been missing being talking to you people and showing, the workflow and the executions and all that stuff. I hopefully in the future there will be more free time for me to get back into it like I want to do. And yeah, for the meantime, you guys will just see me here and there. So, but you're in good hands. You got Drez and Karl, so you guys are in great hands.
Yeah, car didn't put the alarm today, probably.
Yeah,
See, my guy's in Hawaii.
they hit the coffee from him, and he can't wake up without it.
He got 3 hours. And right after us is Austin and Brandon, the GOAT. So
Sure.
yeah, guys, you are in great hands for sure. So Cody, yeah, my guy too. PTFX. And Bowie was earlier today. Hopefully, I think he got a great section. I don't know what time he started, but I don't know. Look ranging from 2 a.m. on. Oh, yeah. He don't go for crazy target as well, so he probably did some damage. See, we are pushing. We're right here at yesterday, Friday's high. That's Friday's high. No, that's not no Friday high. What high is this? Yeah. Friday high. Right here. Okay. So this level right here, guys, is key. P12 high. So we get above it. Party continues. We started doing some nonsense here. We could do some dropping, right? So between P12 high and 6 a.m. right here. This is higher resistance. You could say that. Could be a look above and fail type of situation here for the moment. Looking for P12 mid later on. Or we could go up and hold it, keep going higher. Yep. So yeah. Now that we got this pre-open, that's good news for the market, right? And here, when we move this slow, just market just doing what they're doing, getting in position for later on. Yeah. On the 1 hour, we're creating a swing right here. You just gotta wait more time, more patience. Yeah. Back in my time, I want to be in every move. But now, nope. You don't take every move the market give you. You take the move that you wanted, or that you practice, or that you baptize, or that you created your business platform. Clarity in the chart, right? Because not every move is going to happen, but it's something that you come in and test every day. Then you have more or less better idea on where to come and execute, like Yanni said. You know, the guy changed his schedule. He was a magic trader. Now he 945 trader. But that don't come out of the blue. He went in the chart. Look for that time. Get a trade. Around 79 coming up this hour, we'll catch up with City Sharp, Principal Asset Management. We're not getting pressuring markets. James Eberhardt of BNP Paribas on how the Fed could hike rates as soon as next month. Plus, Eric Johnson of Cantor Fitzgerald bracing for volatility just around the corner. We begin this hour with stocks holding steady as investors await another key week in inflation data. City Sharp, Principal Asset Management writing the near-term inflationary implications of AI capex. 8 o'clock, new hour open. Investors can position for both pushing higher. Resiliency that joins us now from Austin Mick. We also position for rate hikes. Does he speak to a high? Let's see what happened there.
We've seen oil prices come down more than people were anticipating. That's been very clear. The thing that we don't think has been appreciated to this point is that when you look at the PPI inflation numbers, which is very, very hot, the things that are really driving it, it's not just actually some capex build-out. So what's going into data centers?
Yeah. Not exciting when I don't get a trade.
With copper, natural minerals. Those things are all there, and that doesn't look like it's going backwards. So from our perspective, inflation certainly looks structural, it's higher inflation. So maybe it doesn't have an impact in the next 6 months or so, because you're looking at the future. This does suggest higher rates.
Well, let's sit on the sequencing of things, because some economists are pondering the idea that upfront it's inflationary or the AI spend, but further down the road, the technological developments become disinflationary. Do you see it quite the same way?
We do. So what do I say about
And also, it's hard to trade. I guess 97 probability they're going here. In my opinion. Yeah, we cannot go there. Just keep going. That's good.
At that point, the question becomes, is this a story which is more than just geopolitics, and do we need to really focus on the AI build-out? But to your point, if you're looking out beyond the next 2 years, 5 years, then it's
Also, I don't know about you guys.
you have a Fed that is more willing to hike, at least perceived to be.
I can look at candles up and down and not take a trade all day. Back in the days, no, not the
Why
case.
would you then have that much more confidence to go to US dollar denominated assets?
Discipline.
I think there is. You know, as we're going around the EU, for example, that has been really
Wait for my trade.
yeah.
Somebody struggling with that. The weekend you find your move that you want to take, and just be patient. Tell yourself that. No, that's not my trade. Not my trade. I be talking to myself. You know that about me. That's
energy security and infrastructure. Those are really key in order to ensure that Europe.
I be talking to my candles.
Have you repositioned at all your portfolios since the sort of pivot from, or at least perceived pivot from Kevin Warsh, as well as some of the earnings that have continued to deliver in a very strong way, despite some of the skepticism earlier this year? Has it sort of made you reallocate a little bit?
Oh, we got. Oh, you got the chart on. Okay. I see you. You back home. I can see the chart. I don't see the chat though. So if you're talking to me, I'm not ignoring you. I can see what.
Oh, I was muted by mistake. I wonder what happened because I joined and I clicked share screen and then it switched to my screen. So I'm not sure if I managed to.
Because I added it to the screen.
Oh, you added it? Okay.
Because it beeps for me, and then as soon as it beeps, I add it.
Got it. All right, cool. Well, let's change this. It's already in New York. So we got shortfalls.
Short for what? London? Asia, yeah.
Shortfalls, and then we got shortfalls broken for London as well. Man, I don't like that shortfalls though.
For what? For London? No.
For London. It basically it just moved in a range. It didn't really decide to go either way. Well, except if you count the news over here. That news week. Yeah, confusing day, guys, for the day profiler for me.
Their investment grade bond rating, or company rating from the likes of S&P and Moody's, now they are delivering on it.
I'm not gonna count that with. What time was that? 7 o'clock.
How quickly they are just trying to pour out as much capital as possible to bring us.
The price of capital, the stock is down by 4% this evening. The race for capital. How would you process the race for capital? How do you internalize this one?
Yeah.
Going to
supply side of things. They can just a little bit more.
What was the opening price for Sunday? 576.
For what?
For Sunday, 577.
Yeah.
Change that to 5.
How far is this going to go, and what can we do to hedge against the potential problem?
Yeah. I gotta go. Do some walking. I'll be back.
All right. You only got 10 minutes. So Brandon come in. And this was a beautiful long. If you were, it's kind of scary because it was moving violent. This was like 100 point, like 2 minute candle, pretty much. Pretty sure in the 1 minute, same thing. Probably like 100 points in 1 minute. Yeah, 86 points in the 2 minute time frame. That was a very violent move, but that was the long right there. Kept going higher, and now we're slowly just grinding a little higher and a little higher. But right now, you can tell after we put in that 3 a.m. high, we were ranging in that same area. Right, this was classic range one type of hours, except for this 7 o'clock super wick that we had. So little I gotta choose this. So we had above 6 a.m. open, above Tuesday from last week, above Sunday high as well. And so far, no reason to short. We gotta see us getting below that 6 a.m. open before we can start. So we're gonna go to the people midnight open to retest that, right?
Yeah. Yeah, we're testing right now. We're testing Pito High right here, right now.
Yeah, we also on Tuesday 50% from last week.
Gee.
It's right in line with the Pito High as well.
Mm-hmm. Yeah, a lot of patience from you and me.
As all these politicians want either to see them fallen for this country, it's just been such a joy over the last week to see the Scottish take over Boston, to see the people of Boston fall over the Scottish. I think that's been just the key piece of this World Cup. I really enjoyed that. Yes.
Shout out to Jerry. Loving this indicators with the MFE, MAE. Really amazing information. Go for London short true. It's short falls. Not convinced by it, but you know what? I'll stick to it. It's short falls. You know, if you're not familiar with what the daily profiler is a dashboard where we have variables that we enter on it, and it'll give us the most probable outcome to do after those variables are selected. And for us, When we say short falls, means that we have a range for London, which is 2:30 to 3:30 in the morning. That range gets built. We break the one side or the other. That is, if we break to the upside, it's long. If we break to the downside first, it's short. And then false means that after we broke one side, before the next session started, which is New York 1 from 7:30 to 8:30, we came back and broke the opposite side that from the original one that it broke out from. So in this case, we broke down short to the downside. So we have London short, and then false because right before 7:30 at 7 o'clock we had this giant wick that broke the upside. So that's kind of forward. But I mean, it was just like a news impulse thing. I mean, these are the days where kind of is throwing a range at you. But you know, I'm gonna stick with the data. I'm gonna put short falls, and then I'm gonna see and wait for 8:30, 8:45. See what I get from New York, and then I'll start doing my work gaming then. But just by having this data like that, I believe Drez said it early. P12 mid has a 88% probability of getting hit, and that is the mode and the median is we're past the mode obviously because we were crazy.
88. Well, you got 88. I got 96.
What do you have for London? Short true?
Short false.
Short false?
See. Broken.
Oh, because mine is not broken. Okay.
Yeah.
See, but I don't think it is broken yet. But obviously, if we do go down, we're gonna have to break it.
Yeah.
Yeah, because for me, it's
Yeah.
Let's put broken on it because in order to go down to that mid, it has to break it anyways. So yeah, that's 96%, and now the mode is 9:30 to 9:45, and the medium is 8:30 to 8:45. So we are about to enter that time frame, 8:30, 8:45, all the way to I would say 10, where we do something called firecracker, where maybe we break to the upside for New York 1 and then turn it false and then go all the way to the P12 mid and retest that level and then decide if we're going to continue down and make a new low or if we're going to go back up and range or make a new high. So yeah, just being patient right now. No need to rush it. If that short is going to play out, then it'll be obvious. And then if we come all the way down, let's say we just melt, like a 1 minute candle just melt there, gives you no entry, and then we start bouncing from there, creating bullish structure to go back up. And you know, that's a good long to take, like a retest in that open P12 mid, right? Previous month's highs as well. We bounced from it. It's a little lower, but that's where we bounced from last night. So, see. So yeah, no rushing, just being patient.
Yeah. Patient phase, guys.
Yeah, Jojo Cat. That's Miller, right? Jojo Cat.
See, we love coffee. We love coffee, Miller, right? Yes, sir. Let's go, Miller.
Yes, sir, Miller. That's no matter how you look at it, it's gonna be broken.
See.
E.
No. Low coffee. Yeah, I mean, I think we are finished here before Pack can come and kick us out.
Yeah, we're just waiting for Austin and Randy.
Yes, sir. The Pack will kick us out real quick. Oh, you're Pack? I don't know if he's here. Maybe taking.
Yeah, he's here.
Austin is here. Yeah, we ready, Austin. Thank you guys for tuning in. Sorry for the connection situation. But yeah, no trade for me. Just being patient, and yeah, you in good hands now. So let's get right. Yes, sir. I see you guys next
Did you
Monday.
find value in the Magic Hour trade team? You can find them on X here. Watch them trade daily by joining the Pack Trade Group Discord in the description.
Alright, if we break down here, guys, I'm short for the same cash flow targets. I appreciate you for being here.
I'm sure right now. Target hit. This is what we call a magic hour.
Alright, I'm taking this. Upside ahead, the momentum to the upside ahead, everything aligning, live price and historical data, right? Aligning.
Right there.
Welcome, this is PackTV. Sit back, relax, and watch how we day trade with statistics.
PackTV, God given, so I gotta make it happen. I'm on mission, not like them, I'm different. That bag come with a pension, talk about that business. Shit like on hard, all in the pain. Shining hard, don't need no chain. All this drip, it feel like rain. Everything on me, got it on my name. They don't got it like this, they don't talk it like this. I was built for this. That TV not like guns, take it away.
Stop me, it's me. If you're doing this for the women, you're losing. Do this shit for yourself. I do this shit for myself. They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Pumping masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. introduction. Too many mouths have been thrown. China rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down, burn it down, burn it down. You were born in the crossfire, raised on a rerun lie, told to choose a side.
Welcome, this is PackTV.
One more time, it's the
All right. Welcome, everybody. Welcome to another episode, another week of PackTV, where every single week, PackTV is a London to market close live day trading session where we take our statistics and our tools that you guys learn in the boot camp up here in that little QR code if you want to scan it. And we take it and we apply it and we live trade it every single day in front of you, Monday through Friday. Monday, you guys get to see what our typical day is every single day. And what these streams can help you with is it shows you what it truly looks like to follow an objective data-backed system, something that you do every single day. No changes, no deviation, nothing like that. We lose, we win. We showcase the entire good, bad, and ugly of realistic day trading so that you, the viewer, can see the true realities of day trading and also see what it looks like when we say a live price with statistics. So welcome, everybody. Welcome, Mickey. Let's have a good day.
Let's get it. Yeah, I'm gonna need you to go first because my trading view is currently working with something else to collect volatility data. I haven't slept all weekend.
Oh no!
I discovered a hack for trading view, so now I'm like exploiting all resources while that hack is open.
Oh really? Like data?
Yeah, just trying to collect some volatility data.
I dig that.
And it's weird because I have a whole separate layout dedicated to just that, but it's controlling all layouts. It's like, oh, weird.
Well, welcome everybody. Good morning. Good morning. Happy Father's Day after Father's Day for all the father traders out there. Let's do a little roll call.
You really need to say thank you to your father, because if it wasn't for him being so persistent, your mom probably wasn't in the mood. You wouldn't exist.
Dude, fun fact about me, I was born on Father's Day. Did you know that?
No, I didn't know that. That's
I was born, some Austin trivia. So I was my dad's Father's Day gift. It perfectly landed that year that I was born on Father's Day.
Now, would he say gift or never mind?
Well, depending on the day, we might have some different definitions of gift.
So if you want today, like I can control the dashboard and you can do this, or either or. It should be about 20 more minutes till I get my screens back.
Ah, man. Yeah, I can go. I'll go. Just kind of go as is. But before we get started, I want to see all you beautiful people. We got 60 people in here. We got 63 people currently live. Let us know, 63 people. Usually we get the same people. Sometimes we get some new people coming in here. So if you're returning here, welcome once again. Let us know in the chat, as always, where you're watching from, what you're day trading, using statistics, not using statistics. And then if you're new here, let us know where you're watching from. Now, let us know you're new. Where are you trading from today? What part of the world are you in? We got Australians, Germans, Canadians, Antarcticans. No, I'm joking. Brazilians.
We have a lot of Germans, and they sound
We
like
have a lot of
hate us every
Germans.
time they talk. But they really love us.
We got Omar in here. Omar Trades. I like the name. Omar Trades. Good morning, Omar Trades.
He has been doing such an outstanding job.
He's one of the bootcamp members that's actually really interested in this stuff.
Yeah, he's doing great.
We got Mr. Scotty, as always, Pack OG. We got lovely Mrs. Brooke, another Pack member, fellow bootcamp graduate. We got Jet in the house. Good morning, Jet. Echalake, my daughter was born on Father's Day too. Look at that. Well, your daughter and me share the same birth.
Now I'm gonna have to go check. I'm gonna go check to see if I was born on Memorial Day.
What's up, Ultra? Good morning, AC. Which inner wolf are we today? Dude, we'll see. We'll see if we're the bad wolf or the extra bad wolf. What's up, Second? Good morning, Second.
It's May 30, 1984.
We got Mr. Colin in the house. Good morning, Colin, with the Wall Street Bull. Good morning, 3U. 3U had a really nice little post this weekend showing Andrew's Mr. Trades Don't Lie, Claude / Trading View automation. It was pretty cool. Omar's from Australia. There's another Aussie. We got like
listen
three
to this.
Australians.
Listen to this, right? So May 30th, 1984, Memorial Day fell on May 28th. My birthday was on a Wednesday. However, before 1971, Memorial Day was always observed on May 30th. So
May 30th,
which is my birthday.
So it was
before 1971. Yeah. So before May 1971, Memorial Day was on May 30th, and that's my birthday. And I did 20 years in the Army. So see, I did 20 years in the Army. If you're born on Father's Day, you're gonna have like 20 kids because you're meant to be a father. That's the universe telling you.
What if it's like the world's biggest irony where I just don't have kids?
You're gonna have kids.
Morning, Mr. Miller. EP feels new every day. I mean, you gotta catch some traction at some point. Good morning, Daredevil. Good morning, Mr. Wes. Mark. Good morning, Mark. Good morning, Max. Max is feeling brand new today. Isn't Max? Where's Max from?
He's from Germany, and him and Hessel met up this weekend. It's pretty cool to see like Pack members like meet up. They're both from different parts of Germany, and they've been trading buddies since they went to the boot camp, and they're finding quite a bit of success. So they spent some of that hard-earned prop payout money and grabbed breakfast and lunch with dinner.
That's pretty dope, man.
Yeah.
We are international, baby.
I love when people meet up.
Hey, wait a minute, AC. You're supposed to be naked on Mondays.
Pants only. Pants only.
Daggone it.
He is from the waist down.
Yeah. I'm naked. It's just you can't see it. So just envision what you think right here, and then just look lower. I don't know what to tell you, David.
He technically is underneath his clothes. Just saying.
Dude, we see. So what Miller's talking about is somebody shared this on Twitter, and dude, I'm telling y'all, like, if I was a woman, I mean, it's 2026, so I mean, I can, but if I was a woman, bro, this woman was in her bikini, like doing like trade recaps. I was like, listen, hey, whoa. I mean, I guess I could do a shirtless stream. I mean, I might do it one day. You guys don't know. You never know. Maybe I'll do that for like a huge milestone. Like, I'm not going to do it for 70 people, but I might do it for like 500. I don't know.
You guys gotta work for the Chippendale action on this stream.
Yeah. Broccoli man, Mexico here, new to the channel, dude. Broccoli man, welcome. I like the Mace Windu profile picture. Look at this, Broccoli man. You probably like this. Look at that.
Nice. I like that.
Mandalorian coffee, dude. I am a Star Wars nerd. My birthday was Star Wars this year.
Nice.
So it's destiny, Broccoli man, that you are here today.
So huge congratulations to, let me find them. But we didn't do a YouTube on Friday, but we still did our contest giveaway. And so, damn. Huge shout out to Mr. Stanman, who won. He said, and the question of the week, just to get you guys up, was, what's the trade you keep losing the same way? And his response was, I lose the same way in chop, 1,000 small cuts. My edges brittle, but consolidations are weakness. That's why I'm curious about data and distributions, not to predict the market, but to tell me when to sit still and wait for my edge. Less is more. So you'll be joining the boot camp because he won it. And so now he gets to see what most people don't like to accept, which is we range more than we trend. And it has nothing to do with sitting on your hands. It has everything to do with building a risk profile that can sustain that chop or that range or whatever you want to call it, right? Because you're not going to get rid of the range. So why not use statistics and distributions to place your stop in the most statistically sound area and place your TP in the most statistically sound area? And then that's true piece on the chart. So like, I'm excited to see, because like a lot of you guys get under the illusion that you should be taking these tight stops and, you've got to get these 100 handle bangers. And like, that's one thing that we completely debunk with data is that that's not realistic over time. So it's better intraday. It's not. So it's better to just go on and build the risk profile to something that has more of a realistic expectation. And that's why most of our traders are successful. But yeah, what are your thoughts on that one, Austin? I meant to send you that.
I mean, it's just a tale as old as time. I think recency bias is the hidden cancer of so many traders. Is you think something is a high probability, or you think this is a good thing, or you think that this is something that is repeating. And then if you actually built data around that event, not the trade, people think that when you build probabilities, you're building it off of a trade performance. You're building it off of the environment, the probability of something happening. And if first and foremost, if you don't have that data, well, then you don't know the variance of that. How often is that probability going to hit? How often is that probability not going to hit? And then the flip side of the coin, people think that we use statistics to win. We don't. Like, you can win a trade by just randomly clicking buy and sell. But what we use statistics for is to measure our downside and to manage our downside, because we can all agree as day traders that no matter how you trade, it's risk management. Well, if I were to ask you, what's the best way of managing risk? Knowing what my drawdown looks like and I can visualize that drawdown over a long span of time, or I don't have that data and I'm just going off of every single day, this is a good trade, this is a good trade, but I don't know over the course of 100 trades if that actually is, number one, high probability, and then number two, positive expectancy. Can I actually, with the way that I'm entering the market, get a net positive expectancy through the thing that I think is very high probability? So it's just, when you apply statistics to any way of trading, there is no singular way of trading that we teach here that you have to apply statistics to. It really just makes you more aware. It makes you more understanding of risk. It makes you more realistic in terms of expecting what the performance of the market can provide. Yeah, it's just.
I will add to this. Like he says, that's one of the key answers, but I think the biggest key answer is that people will overfit to run away from a consecutive loss period or a max drawdown time frame. And one tool that we offer in the bootcamp, in the Pack Trade group, is something called the gun shift. And like, people know it in such a linear state where it's like, here are the different moves and it takes it on NASDAQ. But then you have multiple assets you can trade this on. For example, I lost twice in London, right? It was down $600 in London, but because of the Asia trades and the other moves and the other assets, I'm up 400 on the day, right? So knowing how to actually properly hedge, not the way that institutions do, because you ain't got the book to do that, but to actually understand how to smooth out that risk through portfolio cycling or hedging with different assets or different moves, uncorrelated moves. You know, that's where the true edge of trading, because what you'll find is that there's different market environments and volatility condition states, right? And everything works in the most picture perfect market environment and volatility state. And guess what it doesn't do when it's not in that market environment and volatility state? It doesn't work. And so that's where, like, knowing how to smooth out your consecutive loss in your drawdown periods is the true enigma of trading. And like one thing that we teach is portfolio cycling. We haven't even started digging into multiple assets and uncorrelated moves and all that. There's a multitude of ways you can do it.
Yeah, it's just spreading risk, man. Spreading risk, understanding the variance of the things that make you manage risk, aka your model, your strategy, your edge, your framework, whatever you want to call it. But let's get into some analysis, shall we? You want me to go first?
Yes.
All right, guys. So every single day that we do this, Mondays and Fridays, you kind of see Mickey and I do our war games very in depth. Monday or Tuesday through Thursday, Mickey will do it here by himself. So let's go to the 60-minute chart. I kind of show you guys every single aspect of how I analyze the day every single day and apply the tools, the statistics, everything that you guys learn in the boot camp. And this is what you see me do on the chart. So starting at 8 a.m., why do I start at 8 a.m.? Because a lot of statistics have probabilities that start around 8 a.m. of getting retraced more than they don't. There's a lot of edge in this time period of getting those retracements. So what I like to do is I like to see, do we first and foremost, are we mean reverting in the pre-market, or are we trending away from wherever the current footprint of the day is? So right now, starting at 8 a.m., to find my footprint, I just want to find the most recent wick where the bid and the ask currently is. And this is the most recent wick. All right, there's no science to it. If you're new here, there is no science to it. If you're already thinking about asking a question about trying to find the best footprint, you've already missed the plot. It's just a wick, a series of wicks that is the closest to this bid and ask. Why? Because it's an untapped wick, and we have visual evidence here that whenever in this 60-minute span of time, whenever price came all the way up to here, we sold back off to here before we closed, or actually before here because it's a bearish candle. So somebody or something or a group of some things, whatever, we have context that when price was here in the most recent market, something was able to sell this market down. And then the next candle, same thing. So if we are above a lot of statistics that you're going to see me get into, well, then what I want to see is, does this footprint give us context for now the catalyst for this mean reversion to start, or do we break away from it? And if we break away from it, that's a little bit of a telltale sign that if it aligns with my analysis, maybe this is a good trending where we break away from statistics. This is just an area of context. That's all it is. It's nothing crazy. It's nothing super in depth. It's just an area of context. Next thing that I do is on the hourly chart, I look at where we at within this weekly candle, because we as day traders, we like to do something called day trading. Okay, so keyword in day trading, daily candle, right? We trade the daily candle. We as day traders are trading something every single day that repeats, and that's the OHLC, the open, high, low, close. If you're a candlestick trader, the open, high, low, close of your X and Y axis of the daily candle. That's what we do. That's what we do every single day. So then why not derive where that wick could be made on the daily candle, because us as day traders, if we can find where the wick creation is being made, just like on a 1 minute chart, if we watch these 1 minute candles print, we can see an open, high, low close in real time in a very quick amount of time. We can see where the wick is being made. We know statistically the first quarter of any time-based horizon that can be split into 4 is where we typically see the wick being made in the first quarter. So all of this to be said, we can actively see, okay, well, if we know where the wick is, we know where the body is most likely going. So if we know that the wick, we know that if we form a wick in a very high probability area of time and price, and when we say time and price, time of day, and then the distribution, so how much price moves up and down from a price percent perspective. We do not use points. We do not use ticks. Price percent. If you get this price range tool, we get this all the time. That's why I'm overemphasizing it. If you use the price range tool, go into here, it is the price range. We do not use pips. We do not use points. We do not use ticks. Everything we talk about is price range percentage. So if we can understand where this wick is being built from, no matter the candle, and then we get the evidence of where the body is going to be formed, that's pretty good for us as day traders, right? Because we can capitalize on that movement of the daily candle. So then that's what we try to do every single day using the daily profiler combined with the daily candle that we have today, is we can see that with this weekly candle, we have a statistical, from this weekly candle, we took the low. So we made an actual wick of the weekly candle to the downside, and we actually are now making the body of a bullish weekly candle to the upside. What does that mean, and why did I say that? If you look at last week is a perfect example of why I track, does the weekly candle have a wick? Because sometimes, like what we did last Sunday, where we just pump up and just keep on pushing to the upside, this is a prime example of where throughout the week, I am very hyper aware of is this the daily candle that makes the wick of the weekly candle? And then if I'm also not looking at in terms of today with where the weekly candle is for the wick, I'm looking at is the higher low of day contributing to the higher low of week. So today's a Monday. We know statistically Mondays and Tuesdays set the wick of one side of the weekly candle, then Wednesday to Thursday creates the body, and then Thursday to Friday sets the other side of the wick. That's typically how the market moves from a weekly perspective with NASDAQ. I'm only talking about NASDAQ. So going down to the 5-minute time frame, because now we can see here's the weekly open, this white line right here. I don't know why my indicator is projecting a weekly open as Thursday's opening price, so we'll turn that off, figure that out. So this white line is the weekly open, so we'll have to figure that out. And what we can see here is going into the day, I just do the same thing as I do on the weekly candle, I do on the daily candle. We have an out of statistic low of day. So I label this out of stat low of day. Why is this out of stat? Because the 4 major times to make a high day low of day, 18 to 1900, 3 to 4 a.m., 9:30 to 10:30, and then power hour, 15 to 1600. So because that low of day is not within those 4 time periods, it is out of statistic. We do not typically make wicks at 1955. Same thing for the high of day. We do not typically make, unless it's a news day, and we did have a little bit of news, we do not typically make high of days at 8:30. So we're going to call this an out of stat high of day. Now that we're kind of formatted and we can see where this daily candle is where the wicks are, and is there any evidence that we're in the wick or the body, anything like that, we want to see the statistics. What does the statistics give us in terms of just a little bit of edge on if we're going to mean revert, where are we going to mean revert to? If we're going to trend, where are we going to trend to? This is the whole point of statistics. All right. Live price tells us where, statistics tells us where to. That's all statistics are. It's not predictions. We're not trying to accurately predict something that is not going to happen. We are just trying to say that if live price is agreeing to a bullish side, this is where most likely the price will checkpoint to. If live price is agreeing to the bearish side, this is most likely where live price will check point 2, AK statistics. So because we're extended right now above a lot of statistics, we are what I like to call extended, where we're above all statistics. That's just it. Like, we're above opening prices. We are above bearish levels. You can see here, this is an indicator that the Pack Trade Group has, where you just see levels every single day that are backed by high probabilities. You can see all of these, 84%, 77% in the most recent 75 days. You see P12 mid is down here, and then we have midnight open, this yellow line. So every retracement statistic that I care about, opening prices 1 through 7 a.m., below price. Midnight open, below price. P12 mid, which is the halfway point between 1800 to 6 a.m., below price. So because we have all of these reasons to go lower, I'm not just going to marry shorts. Okay, I'm not going to have a bias. I never trade one side of the market. I look at both sides of the market. If we do the higher probability, which is the mean reversion, well, then when? Okay, because now we have the where. We have the where. If I take a box, turn on the daily profiler here, we have the where, because I like to see the Asia OU. We got the Asia OU here. We have midnight open here, P12 mid here, weekly open here, opening prices here. So I'm going to take a square, and I'm just going to highlight where to. These are all the areas that price could mean revert to. We'll make it a big white box. So this is the mean reversion, where to. And so what would we have to now see within live price to tell us where to, where these statistics are? That's with time, because we know that right now this is not an in-stat high of day. So if this is an out-of-statistic high of day, then that gives us confirmation maybe the high is not in, which means what? Higher price movement. And if we have higher price movement, well, I'm not trying to just go short right here. I want the highest probable area that's going to then give us the catalyst to come to all of these retracement areas to the downside. And what is that? I like to use, and we in the community like to use, 2 major things with live price, only 2. And that's 930 and the P12. Those 2 major higher time frame components is the major things that we use to let us know, okay, is the market now accepting lower, or is the market now accepting higher? So because the fact that we've taken the P12 high, which is the first half of the daily candle right here, okay, so the first half of the daily candle, because live price is currently accepting above it, we're bullish, right? We are showing no signs of retracing to any of these stats below. We are accepting above the first half of the daily candle high. And so then this tells me, because the pre-market is bullish, I shouldn't be trying to find a short right now. I should be doing what profitable traders do, which is wait, be patient. And so when does that next time period allow me to then start looking for shorts? 930, because we know the next major time period to make a wick or a potential wick of this daily candle is 930. So let me get rid of this box. And so because we can see that 830 is an out of statistic time period, and let's say 930 opens up somewhere here and gives us a good, and when I draw this box, I'm just drawing the high and the low of 930 to 931. So if we make an in-stat high of day of any degree around 930 and we get below it, I will be looking for shorts with extended cash flow shorts to the downside for all these statistics below. This is what we love to call a firecracker. And then if we stay above 930, and then I'm going to draw another box to represent 945. If 945 stays above 930 and we get above it, I will be looking for what we like to call a long true for New York 1 from the daily profiler perspective. And I will be looking for a trend continuations to the upside. And this will be that live price signature that we are very aware of, because we don't just look at statistics for the high probability. We look at statistics for both sides of the probability. If we know that we just have to literally let 930 sell, and we just have to trade towards the statistics that typically get mean reverted. Nikki said this morning already, right? We range more than we trend. This is the evidence of we range more than we trend. All of these overnight levels, these are all getting retraced more than they don't. What would that insist? That would insist that we range. So if we do the minority, which is trend, which is just make face ripper price movement in a single direction. Well, then that 9:30 to 9:45 time period lets me know that a lot of these statistics start to drop off around 9:45 to 10. That's like the expiration of a lot of these. And that lets me then start to trade towards the minority statistic, which is about 20 to 30% of the time that we trend away from these statistics. So going into the day, that's kind of my trade plan, Mr. Mickey. I'm going to hand it off to you. Then we got a special guest I see in the back room, Mr. Chris himself. And if you guys have any questions, but as we're going through any of this, please drop it in the chat. If you are talking, Mickey, you are muted. Is it because Friday and today is one daily candle? You know what? Because we had a holiday on Friday. I bet that's what was throwing my. That's something that throws a lot of trading view indicators off. I've noticed is when we have holidays, it messes with opening prices. So you might be right. That's probably why it's doing that.
Okay, I'm here.
Good. Okay.
Yeah. And to kind of caveat off of that, yes, like in the data we collect, we've already incorporated that because we know that the CME collects them as one day. And so our data collects them as one day as well. So with that being said, all right, let me share a screen. There we go. All right. You see my screen? Oh, that is my screen.
Yes, sir. You sound good.
All right.
I can see the gunship light.
All right. Let me check one thing real quick. All right. So we know that this whole daily candle right here represents Thursday and today, or Friday and today. And we knew since 1500 that we could put stats on Thursday. 1500, we could put stats on this, the action of this candle and this candle for this candle. It's already halfway done printing. Right? And so we're going to do that together. We're going to say, hey, C1, which was Wednesday of last week, was a bear. C2, which was Thursday, was a bull, meaning a green candle, and we closed above the high, right? Closed above the high, right? We knew that the highest probability was that C2, a Thursday's high right here, was to get taken out. It had a 73% probability, right? We know that the low had a 10% probability. So right out the gate, we knew coming into today, if you didn't pick up on it Friday, right, that whole pullback that Friday gave you did not breach the previous day opening price and couldn't stay below the previous day mid. So that's a sign for shoot for the higher probable movement, which is previous day high, right? It's that simple. Now, so we took out previous day high, and now we're going to determine, God, I love data, right? The high day, right?
I'm totally soundboarding that, by the way.
Huh?
I'm totally soundboarding that, by the way.
So we know that this signature between Wednesday and Thursday into today has happened 274 times over the last 20 years, right? And out of that 274, the 30th percentile went to 0.16 off of the previous day high. So we're going to take our measurement tool right here, and we're going to go to 0.16, which is right there. And now I got to find my cool little boxes that I erased. Dang it. We're going to draw new boxes. Right? So we know that right here at the bottom of this box, let's make it green. Right? That has happened that in the last 274 days, 70% of those days kept going past this level. 30% of the days reversed before that level, right? And then we are going to find our 50th percentile, which is at 0.29, meaning 50% of the 274 reversed before hitting that level, and 50% of that 274 kept going. And we said that was, dang it, at 0.29. So we're going to take our measurement tool and we're going to draw up to 0.29, which is where we currently are. So we know right now we're at the 50% probability of continuation versus reversal, right? Now we're going to right click on this and we're going to sync globally, right? And we're going to see that popped up right here. Right now we're going to do the 50 to the 70th percentile zone, right? So we know out of the last 274 days that the 70th percentile is 45, meaning 70% of the days reversed before hitting this zone and 30% of the days kept going. So once we get into above 45, we know volatility is expanding, meaning the ranges are getting bigger, and that we are in an anomaly daily candle market based off of that pattern. So 45, right there. And so now we have our zone. And let's sync this one in right here. So we can start expecting some mean reversion, right? Somewhere in this area. So now we're going to go to the daily, right? And we see that 7:30 to 8:30 has its own collected MFV, right? So the moment we break out to the upside or the downside, there's an MFV value attached to it. The same way we did with candle science, we're going to do with this. I'm on the 5-minute. Let me get this back on the right one. This is set for Asia right now, or some weird range that I was messing around with. That's good music. All right, and we can see that this one, right, for this breakout, we see the same concept over the last 76 days, right? This is our 30 to 50. So we can see right out the gate that we're going to overspend the daily candle range, right? Because 70% of the last quarter's volatility made it up to here. And our 50 to 70th percentile is right here. And that's based off of the MFE of this 7:30 to 8:30 coming up, right? So we kind of have the identification of what we're going to expect. We're going to turn this off now. And we know that we are in a short pause, none a short pause broken. Two, they bought up the Tokyo markets, they bought up the Frankfurt markets, and now they're buying up pre-markets, right? So we're going to put that in the daily profile, and we are going to see what the two possible scenarios are for New York. So we went short false, and then we went short false broken, and then we're long right now. So first and foremost, we can see Asia's got an 87% probability, but the time factor of getting returned to, but majority of the time that would have happened by 4 o'clock in the morning. 9:30 to 10:15 doesn't typically happen. So that is a low probability, even though it says 87%. Now we can see there's a 77% chance that we go up to come down between now and 11:30, and there's a 22% chance that we just keep going up. So there's a 22% probability that we trend for the rest of the morning to the upside, and a 77% chance that we go down. So we're going to war game both those scenarios. We go up to come down, right? We can see that we can definitely expect some range today, like the price model is telling it clear as day, right? We can see if this is the case, right? We can expect to make a high of the day between 9:30 and 10:30. And then a low of the day, it was either the current low of the day, which is at 1955, or we're going to make another end-of-day low of the day, and we're going to let live price determine that, right? We can see that the high of the day is usually put in between 0.7 and 0.8 basis points, mode to median, off of the Globex Open. So we're going to put that in, long false, and we're going to say 0.7 to 0.8 between 9:30 and 10:30. And we can see we already blew past that. So now we're going to get into how do we determine the true versus the false, right? Do we go up to come down, or do we trend up? Well, one of this, we'll talk about the true because it's a lower probability, the 22% step. And we do these steps every single day. Step one was blowing through the long false high of the day like we have done. Step 2 is 40 basis points off of the 6-9 box. 2 completely independent data points that point to that true more than the false over time. Step 3, if we breach through the 50 percentile of the 730 to 830 MFE, and then step 4, do we get a 4-step reversal? Now, what is a 4? So that's how we determine the true versus the false, right? So how do we determine the false? Well, can we get below 930? Step 1. Step 2, if you haven't noticed, I like 4s, right? Why? Because all the weird little ICT people that do the 369, they like these little weird ass numbers. So I go completely opposite with everything I do, right? Like 369, every number can add or subtract to it. And I'm like, they all have the same level of probabilities, you dumbass. But anywho, I digress, right? Right, so can we get below 930? Step 1. Step 2.
Mickey.
Yo.
I mean, you have a price range tool on your chart, and it's currently at 123 points. And if you add 3 plus 2 plus 1, what do you get? I'm just saying.
I'll find a way to make 4s the alternate. All right, so step 1 for the reversal, can we get below 930? We already know that there's a 77% probability that we go up to come down, right? So we got to figure out where. And so we know where we're going to determine the true data. Now we're going to determine, which is the 22% probability. Now we're going to determine where the false data is. So step 1, can we get below 930? Step 2, can we get below 9 o'clock's 50%? Step 3, can 10 o'clock take out 9 o'clock's low? And step 4, can we make an instat 10 o'clock high for that hour? All right, and then we can determine, doesn't mean we won't be trading in between that, but at that point, we can continue holding our trades lower for our targets to the downside, right? Because the major pivot or the high of the day is in statistically, right? So let's see what the stats are for these probabilities to the downside. We got a couple. We got settlement right here, and we're going to be looking at. We got this cluster of data right here: Globex Open, P12 Mid, and Midnight Open. Now this P12 Mid is on a 1 streak or 2 streak miss streak, because we'll include Friday. So we're going to go back into our data, and we're going to select false. It's already selected, and we are going to go to our levels. So settlement's the first one below us. We're going to say settlement on a Monday has an 80% probability of settlement fill. All right, so we can see that that is right below the long false signature. So right here. So bing, bing, ding, ding. That's a high probable target. All right, now let's go to the Globex and the Midnight. And then 25% of gap fill, 50% of gap fill, 75, wherever the 930 opens, and if we drag that to settlement, we put a quad 25, 50, 75. These are the probabilities for that. So you can see that it likes to fill the gaps based off what Asia and London did on a Monday. All right, so now we can see Globex Open and Midnight have higher than average probabilities of retracement, but we got to get the 4-step reversals to be able to target these. All right, if we cannot get the 4-step reversal, these probabilities, live price is telling you, it's going for the 6%. It's going for the 14% here. All right, and then the last level is P12 Mid, which has a very high probability of being retraced to. So any shorts, any longs I take, I will be utilizing the gunship. So let's pull up the gunship. Let me make sure this is still collecting data. All right, it's still collecting data. Cool. I love that little gunship light indicator you built, dude. This is epic.
Yeah, I wish I could get it added to the regular one, but TradingView, if you're listening, y'all need to fix your stuff, all right? Y'all need to make it programmer friendly, because it sucks.
Yeah. All right, so this gold box is going to represent the market open. And if you're in week 8, you understand what this move is and what the time frame is and all that good stuff, right? And we can see that I get some pretty awesome zones off of here, right? That I will utilize to target longs off of. So this is, any longs I take, I always cover the queen 10 basis points off of entry, right? This period, right? like 10 basis points, I'm covering my queen to turn it into a risk-free trade. My cash flow target will be right here if we take longs. Why? Because this is the high probable cash flow target. This is the 20 to 30th percentile of when we get a close outside of this gold box, right? We know that this is a 20 to 30th percentile, meaning that it's a 80% probability of getting hit. So I will take cash flows here, and then my runners will go to this 40 to 50th percentile. Now, if it's to the downside, if we do get that false sell, I will be targeting cover the queen 10 basis points, cash flow around the 40 to 50th percentile, and then runners going all the way down here. And these will sync with the P12 mid, the Globex Open, and so settlement will be like somewhere in here. Globex Open and midnight will be somewhere within this zone, and same with P12 mid, right? So I will be utilizing this and those levels to kind of target. Obviously, I don't have this pop up yet because 930 hasn't even opened up, but that's my bias for shorts. That's my targets for shorts, right? So imagine when this pops up, like those MFE levels would be right here, and then I'll make my live price adjustment off of that, right? And then I'll be obviously trying to keep runners as long as possible for a new low of the day. However, that will be just I don't give a shit if it works or not. It will be based off of this low of the day data for end of day, right? So that's my trade plan pretty much. Should be a pretty epic, fantastic day. One thing I want to tell people, since we've got time, is like we keep getting this question, right, where people are like, they don't understand, right? Let's go back to the gunship, right? They don't understand, right, why the probabilities are like 40% here as they collect, and this is 30%, right? And this is 90%, right? And so, right, they're like, dude, I'm not holding on for just 21 basis points, right, for a high probable target, right? But like, that's why we cover the queen, and that's why, like, as I explained this to you, did I talk about trying to hold to this higher probable percentile? No. Or this one? No. Right? But for the long false, which has a 77% probability, I'm going to shoot for the moon, because I know I look at these three levels right here. As this happens 4 to 5 days of the week, 4 to 5 days of the week, the 930 will touch that. Right? 2 to 3, it will touch this. Maybe 1 to 2 will touch this. For me to hold targets here, it needs to go with that 77% false data, right? So a long false, like today's a long false, 77%. So I'm going to shoot for the bottom, lower probabilities, right? So if we looked at this, right, let's think like our 5-minute data was the downside. This would be 59 basis points. Now I'm going to pull up my tool where I've collected data. I'm going to go to the market open break. Right? And we can see that the 50th percentile has only happened 30% of the time. When we have momentum and a trend going in that direction. We can see the 5 to 10 basis points happen 70 to 90% of the time. Right? So that's why I cover my queen right there. Right? So if you think of these probabilities, if we put these probabilities, right, on our chart, right, like this, then all we have to do, this is the live MFE of that if-then condition. We know that 5 to 10, even 15 basis points happens almost every single day, right? 20 to 35 basis points happens maybe 2 to 3 times a week. And so now I just have to line up the if-then condition of the long false has a 77% probability, the long true has a 22. Well, the long true, I'm not targeting this because it can revert anytime between 9:30 and 10:30. Even if we get a late wet wake, it can revert, right? So like if we break out to the upside, like I'm covering my queen 10 basis points, I'm targeting this cash flow box. And then if I'm lucky, like I'll target this, right? But if I get that mean reversion, I'm targeting the lower probability 50 basis points, right, for my runners. So hopefully that kind of the market's not linear. You guys keep trying to find these trade setups that are 90% that run for 200 handles or 51 basis points. The markets aren't the dynamic markets. The human brain can do that, but if you find that, which it does exist, but it has so many if-then conditions stacked on top of it, that I will connect you with my buddy at Citadel, and if you can code that up, they'll hire you on the spot. But yeah, what are your thoughts about that, Austin? Because I know we've had some people really struggling to understand that concept. And you're muted. And he went to get coffee. All right. So now I'm going to just sit here awkwardly and stare at you guys.
All right. I'm back. Sorry.
All right.
Are you ready to bring on our freaking guest?
Yes.
He's over here just chilling, twiddling thumbs. I want to hear some Mr. Probable Chris analysis. What's up, Chris? My biggest supporter and hater.
Is this thing on?
Listen, yes, you're on. Listen, huge shout out to Chris, man. Like, he's one of the dudes that if you don't follow, like, he is number one, a badass veteran. He served in the Marine Corps during wartime, and you know, like, he's got my respect for that. And number two, like, he trades probabilities and realistic expectations and statistics. And number three, the reason I love this dude is because he, you know, has built you guys all a free website, but he's not gonna mama bird feed you. He's gonna make you put the work in, and he doesn't have time to babysit you. He's provided everything you can possibly need, so those that want it will get it on his website, and that website is nqstats.com. Chris, how you doing, brother?
Yo, what's up, dudes? Appreciate the intro. Glad to be here. Let's see what we got going on this morning. How much time we got till morning? Or market open? 12 minutes? That might be enough time. All right, let me see if I can share a screen here. See if I remember.
Hey, while Chris is sharing his screen, we just broke 100 live viewers. We got 50 to go. All right, 50 to go when we break a freaking live stream PackTV milestone. So all I ask you to do is, if you want to contribute and help us break this milestone, the only way I know to get in front of people is retweeting this tweet. So go back in the chat, retweet and like this tweet, and let's have Chris's stream here get the most views it's ever had. Take it away, Chris.
Yeah, let me figure out how to do this first.
Good, bro.
Is it coming through?
It is not coming through.
Maybe I have to stop sharing. Let me figure out how to stop sharing.
It's like Discord. If you just click that button, click window.
How do I stop sharing screen?
Hover over the screen you're currently sharing, click, and then click the three dots and just click stop.
There we go. Maybe that'll open up a slot. Irish Wave, nice to see you in the chat, man.
Hey, look at that. Irish Wave's a cool dude. Talked to Irish Wave on the phone. Was it last week, Irish, or 2 weeks ago? Really cool dudes. Real prop traders. Like, they trade props, the sim props, but they are real and legitimate ex-prop firm desk traders. Really cool guys. Highly recommend go follow them.
They probably know our buddy Chris D. Macro then, because he traded live prop during their time frame too. Another Marine.
Yeah, Chris. Pretty cool. I love Chris.
There's something about veterans who are like, I'm not falling for your shenanigans. I'm going to prove it with probabilities. We've talked about this before, but
yeah,
like, we don't fall for the smoke and mirrors. We like prove it. Like, I think it's because we have practiced so many battle drills. I don't know. Veterans make the best traders, I think.
Oh, there we go.
Stuff coming through.
There we go.
Just got it.
See this?
I can see it.
All right, cool. Finally. All right. So let's apply some stuff here. See what happened overnight, right? So from an ALN perspective, this is from NQ stats, right? So we're in a pattern 3 pushing to the upside. We've already broke London high, right? So that's out of the question. That's no longer in play. If you were going to trade that right to that target, that's already occurred. We're pushing to the upside. We made a pivot down. Think about open high or open low, high close. The day is already pushed down. It's already made a pretty deep low. Now we're pushing back through open. We're establishing above the open. We're starting to push to the upside. So you're open, low, high, close. Right. So we'll go ahead and get that off the chart. We don't need that anymore. Now when we look at where is price distributed, let me turn on. I think it's because I don't have enough days loaded. There we go. On the left-hand side, you're going to see distributions from a 5-year. I have a video about this. If you go to NQ Stats, click on the price distribution menu item. It'll take you to a price distribution video, which talks all about this. But this is 5-year distributions from a daily. You'll see a little yellow D here, daily. The AM, New York AM, 8 a.m. to 12 p.m. Eastern, and then the current hour. So the day is pretty equal, right? We got distributions on both sides. Nothing unique there. The AM is currently mostly, almost all of it is to the upside. There's push to the upside. The hour, current 9 a.m. hour, push to the upside. Now over here on the right is the same thing, but from a rolling 10-day. So if we look at a rolling 10-day, what's the last 10 days distributions? How does that compare to the 5-year? That starts to give me regime information, right? How do I start, what kind of trades should I be looking at? Mean reversion, trend continuation, and how should I structure my risk? So if I pull up a layer here from a daily regime, right, we are elevated. This is latest data looking back 6 months, comparing the 10-day rolling to the 5-year baseline. So we are elevated on a daily, right? We're up. What does elevated mean? It means that the last 10 days, the distributions of the last 10 days are greater than the baseline 5-year distribution, plus or minus 1 SDEV. So when you look at percent net change from that time frame's open, so this is daily session regime, from that time frame's open to that time frame's close, so in a day, right, the daily open to the daily close, you get a percent net change by applying just a percent net change formula, close minus open divided by open. And that's going to give you a sample of data. Take the last 10, you'll collect that SDEV, compare it to the last 5 years. You have 2 different SDEVs you're comparing. That is what this is right here. So this is telling me that on a daily basis, we're in an elevated regime. Now, what does that mean? That means that there is, in the last 10 days, we have been more distributing, right, more expansive than the 5-year baseline. Volatility is up. If we look at the New York AM, same thing. Volatility is up. The New York AM from 8 a.m. to 12 p.m., we're expanded. We're in a high volatility regime. Now, it's a 9 a.m. hour. So if I go look on an hourly basis, I can see the 9 a.m. hour as of the latest day. We're slightly compressed. We have been trending up. We're coming out of deep compression. Market will always move, as you can see on any one of these, right? On the AM, on the daily, on the hourly, you're going to move from periods of compression to periods of elevation. And when you're in compressed state, going to elevated happens rapidly. Think about it like coiling energy, right? So you're like price is trending sideways. It's building all this tension in a compressed market, and then boom, you get a expansive move. So when you're compressing and you start to get to deep compression, you get a big expansive move. When you're compressed and you're coiling, you get a big expansive move. Likewise, when the market is highly elevated, it needs to revert and relax and come back to a state of neutral, which often leads to another state of compression. So the market will always move from compressed state to elevated state, fluctuating back through that neutral. Now, this is going to do 2 things for me. It's going to allow me to structure my risk, right? So if we're in a daily regime elevated, The distributions are wider, right? The last 10 days compared to the last 5 years, they're wider. It's more volatile. We're in a elevated regime, so my risk needs to account for larger moves, right? If I'm trying to be precise and use a 10-point stop, it's probably not going to work in an elevated regime. I need to account for the fact that we're in a higher volatile, state. Versus if I was down in a compressed regime, if you look back on your charts in the April time frame where we were just slow grinding, look how from the beginning of April we started to compress, and then we got into a state of compression. Go look at your charts just on a daily chart. This is daily regime. Go look on a daily chart and you'll see that slow grind uptrend, right? And in a compressed market, you're going to get two types of price action. In a compressed market, you're going to get rangy, nothing crazy, not volatile. It's not doing anything. Or you're going to get slow grinding trends. Now, when you go into a state of elevated, right, where volatility is high, you're going to get more of those big, mean reverting, expansive moves. Your trends, right, you're going to get that up, that down, that pullback, that push higher, catch those big moves. Now, when you're looking at this data, that's going to tell me, okay, I see that from a daily perspective, from an AM perspective, and from an hourly perspective in the 9 o'clock hour. We're coming out of compression. We're already in elevation in AM. We're already in elevation in daily. I know that it is likely going to be more volatile than the baseline 5-year. I need to structure my risk accordingly. And I am going to be looking and favoring more volatile moves, more snappy trades. I might catch a mean reversion that snaps back really quick. I might want to move my stop BE a lot quicker because price is more volatile, right? So it tells you not only what kind of strategies you should be employing, but also how you should be structuring your risk, how you should be managing your trades. And that is kind of the basis of, a core foundation of my trading. Going into the morning, widen this up.
We got a 2-minute warning, Chris.
Yep, going into the morning, I can see that. Oh, let's get that out of the way. I can see that we have established some lows. We've established some highs. We formed an internal range. Are we going to accept below this before the 9:30 open? If we do, likely going to snap down to that low. Volatile. We're in an elevated regime. I'm going to expect snappier price. So I can structure my trades, get a short entry, run it to that low. That's kind of like the 9:30, my 9:30 open trade, right? So looking at how Austin trades with the first 1 minute candle, I look at more, where is the external range? Where is the internal range? Are we in an elevated or compressed regime? How am I going to structure my risk? Am I expecting snappier trades? Going into further hours, you can look on NQ stats. There's a bunch of different stats there that I trade, but specific to the 9:30 open, that's it. So can we accept down below here? If we do, likely going to snap to this low just on the first candle, being that we're in an elevated regime. As we progress through the morning, I'll share some more stuff, but looking at the distros here, most of these distros are to the upside, right, for the day, the AM, and the hour. So if we do get a snap down, it's more likely that we're going to snap and start to maybe pivot to the upside, just being that all distributions are already to the upside. There's clear willingness to accept higher. That's all I got for now. We'll pause here for the open.
I dig it, bro. I mean, this is why I like doing what we do, because it's pretty cool to see we come from different, I guess, even with statistics, right? We're looking at how we get to A to B different, but we're coming to plus or minus the same conclusions. You get what I'm saying? That's pretty cool. And here we go. 9:30. Chris, we got a question in the chat. Jet says, do you do ASMR in your free time because you have a crazy mic?
Is it good quality? What does that mean?
Yeah, it's coming in really crisp.
Oh, nice. I got some filters on through third-party software.
Dude, honestly, I'm pretty jealous. It sounds really crispy. All right, market is open, ladies and gentlemen. First thing we do is we let this 1 minute candle open.
All right, so got a little bit of a snap down, but not quite to that low.
Oh, I didn't hit that low. I was like, dude, this thing did almost perfectly what you said.
Yeah, there's not any room to get into a trade there, anyways. Just walking through the framework, but see how the rest of the morning pans out. Looking for next thing up would be looking for how the initial balance sets up.
Yeah, we got a really big 930 range. 31 basis point 930 range this morning.
Yeah, that's huge.
It's huge. Dropping that risk down. It's kind of like you can even see that change that you were talking about, Chris. You can kind of see that reflected, with you said we're in an above average expansive state within the regimens that you were kind of going over. Like,
yeah, right. We're in an expanded regime, so you would not want to be expecting, lower volatility. You will expect snappier moves, especially going into the 930 open. You'll have way bigger 1 minute open candles in an elevated regime than you would in a compressed regime. Go back to April when we were in a deep compression and look at some of your 930 opens. They're probably a third of what this was.
Yeah. Yeah, it's really cool to see. And you'll see that too. It's like, if you wanted to have like a baseline for those of you listening in that you don't really like to get into the weeds of stuff, 930, if you take the 1 minute high and low candle of 930, if you get a 10 to 15 basis point 930, that's like low volatility, but like you got to really, oh, hold on. We're taking this 9 o'clock low. We go close below this. I'm taking this short. Nope, no close. If we get like a 10 to 15 basis point 930, that's low. But then what we typically do is 15 to 20. So like that 15 to 20 basis point 930 is our baseline. And then anything above that is exactly what you said. It's like more high volatility, more expansive movements to some degree. All right, we get a crazy break here. Yeah, go ahead.
Tank into the downside.
I took 4 shorts, and if you share my screen, right? Like,
you're not sharing it, Mickey.
Damn it. I take 4 shorts, and I've already covered 1 off. Sticking with the trade plan that I was talking about. Right, stop's going to be, let me place my stop real quick, right above the 930. The rest 3. All right, and then I'll manage this trade as the MFB data comes up. Remember, we're targeting settlement, and then we're targeting Globex Open and P12 mid right now. So stops entry was around the 50, around the 50% of the 930. Covered the queen 1 right here, and then like my next cash flow target will be around settlement. I'll take 1 more off and leave 2 runners to P12 mid. But we've got to make a willingness to turn this thing false to keep me in this trade. Damn it! I didn't share. Fuck me. Here we go. All right, let's do this all again. Right. So here's the sell. Take 4. Cover the queen 1 around here. Stops at here. Right, and then like next cash flow target will be at settlement for 1 off, and then 2 running to P12 mid. And then let's see, that will be worth around 225, where my risk is worth. All right, so right here, we're going to draw our zones for the gunship. We know that we're either going to hit this high cash flow one, which is actually synced with settlement exactly, which is why I'm taking 1 off. And then if we can't do that, like longs it to the upside, and we'll target this cash flow target to the upside if we get into any longs. All right, back to you, man.
Give me 1 second. I'm just getting these projections here. Yeah, I'm currently short too, by the way. Stop is at 87, 874 even.
I don't want to counter your guys' trades, but I'm looking for upside.
Yep.
Dude, that's fine.
All right, here comes coming back to my entry, right? And if I get stopped, I get stopped. This is all about what you do over the next 1,000 days, not one day. I love your volatility breakdown, dude.
Yeah, I find it just being a good way to not only structure my risk, but also keep me in line with, what kind of strategy should I be employing? Not every market is like, if you trade one strategy, you cannot trade that strategy the same way with the same risk every day in every regime. You're going to get rolled
Especially
over.
when volatility is expanding, like you've got to reduce some of that risk. Volatility is contracting, you've got the permission to do a little bit more risk, right? Like that's
Not
why
only
blow up.
you can reduce risk in two ways, right? You can widen your stops, right? Or you can use the same stop but just reduce capital. I prefer in an elevated regime to just have wider stops because if I'm using a set percentage, 1% or 0.5% of my account, it's going to scale anyways based off of where my stop is. Like the contract quantity is irrelevant. It's going to be the same risk every time. If I just use a wider stop,
All right, getting stopped up here for 225. If you look at my screen, right?
Yeah, I got
Stops
you.
go up to 930, and then this will be worth around 225 if it takes out that 930 high. And I'll be waiting for 945 at this point to start considering longs for a true day. And remember, we have our true day signatures already identified that exact level, right? That we have to. That's where we call it a true day versus a false.
Yeah, I got stopped on my short too. Yeah, I'm not going to take any longs until we get above 945. If we hold this high day and this was just like a pullback to continue lower, then I'll take that short again. If this was a pullback to continue higher, I'll wait for 945.
Yeah, you can also be in a elevated state, right, while compressing. That's the purpose of having the charts up and seeing, historically day by day how it's panning out. So if you're elevated and compressing, you're coming out of an elevated state. So if you're coming out of an elevated state, going into neutral, going into compressed, then volatility is reducing. Just because a lot of high movements have been happening lately, the market's always going to move from elevated to compressed to elevated. So when you're going into a compressed state, it's also a scenario where it can dictate, how you should structure your risk, what kind of strategies you should be employing, etc. So being in a stale compressed state is different than being in a compressed state while actively elevating.
You can take this train and explain that. Like I'm on pause until 9:45 anyway.
Yeah.
Right now, I'm just hyper focusing on, are we staying above this 930 here? And if we stay above this 930, I'd love to see 945 stay above 930. I don't like to see 945 open inside of 930. If that's the case, I never key off of it. But if we actually do start getting away from 930 and 945 opens like this, something with a gap in between the 945 and 930, I will take this long. If this was just a unfortunate pullback here and then we get back below 930, I will retry for another short.
All right. Screen coming through.
There you go.
All right. So this is a daily chart. I'm just using a daily chart because it's easy to explain. It's easy to see. So while Mick is waiting for his stuff.
So give me 1 second, guys. I'll be right back.
Here's your compression. Let's move this a little bit. Going from April 2nd, compressing from an elevated state through, before we start, making any kind of headwind to the upside, to about May 7th, right? So from beginning of April down to about May 7th. If you go to the chart and you look at from the beginning of April, right, to about May 7th, before volatility starts to peak up. And if we look at another one, just another example of going from elevated to compressed and being in compression, February 13th down into compressed state to about March 24th. So February 2nd to March 24th, February 22nd to March 24th. So either compressed or compressing. What is happening during this time? In a compressed state, you are more likely to slow grind chop or slow grind trend. The volatility is not there, so price is going to move slow. It can move slow sideways or it can move slow up. It's not going to tell you what direction it's going to go. It's just going to tell you the state of the market. So there's your compressed or compressing, slow sideways. When you start to get out of that compressed state and now you're pushing up into that, March 24th, boom, you start to move up into the April 1st.
Taking this short again, by the way.
Yeah, I did too.
Big volatile days. Going back into a compressed state, slow grind uptrend. Coming out of a compressed state to elevation, big volatile days. And that's going to allow me to structure my risk, just as I was talking before. And this is applicable to all time frames, any TBR, any time-based range, not just days, not just AMs, not just hours. You can apply this to 5 minutes. You can apply this to 4 hours, 3 hours, whatever you want. The point being, it just allows you to have expectations and structure your risk accordingly.
Heck yeah, bro. Tell everybody this all the time, bro. It's not really the strategy or the entry. It's, can you define risk around something that gives you positive expectancy? You're still going to lose, still going to have losing trades, still going to have losing days, still going to have losing streaks.
Be looking for a long scalp here in a little bit. Looks like it's setting up for me.
Okay. I will say these digs down.
Yeah.
I'm holding this short, but if these digs keep taking these like wicks, acting as if we're going false, and then we get above 930 by this point. So for those of you watching my trade, if at this point my stop gets short, or if my stop gets hit for this short for 945 plus, I will take the long, and this will be my final attempt. So if we get stopped out of this short, I get above 930, I will give it one more attempt. And if we just can't make any direction outside of 930 where I can at least cover my queen 10 to 20 basis points, then call it a day.
Yeah, Jonathan, I use NT, NinjaTrader. None of these indicators are published anywhere. It's just all personal coded stuff. All the framework is shared. I share that through NQ Stats and on the YouTube. Like, everything is there for anybody to replicate. I just don't share the tools I create. If somebody wants to replicate it, go for it. But I'm not going to give it to somebody so they can turn around and sell it.
Exactly. And not learn how to trade off of it.
Yep. they get it for a week and they're like, all right, selling it.
But it's 2026, man. You got Claude.
Yo, for real. Like, I'm telling you, like, most of the stuff that like I use now, like, I do not share anything.
Yeah. There's really no excuse to like say, oh, can't make that indicator. Like,
Yep.
if you have the framework, if you have the like why behind it, just tell Claude the why, right, and it'll make the tool for you.
There's absolutely no reason. Like, and it's so easy to replicate anything. Like, I don't even need to have an understanding. Like, it's so easy to just to pull Claude any indicator as long as you have the description and the about you, or even a screenshot with a bullshit explanation of it. Claude can make it in like seconds. You know how to utilize Claude.
Yep.
That's why these boys selling indicators, they're going to be out of business soon.
There goes the long scalp I wanted for a, would have already had, I wanted that low to get taken. Don't like taking longs right before a low, but it's unfortunate. So trading on a lower time frame, I use some trend distribution data on a lower time frame, 30 seconds, looking for just quick snaps. So we're in an elevated regime, right? I can take advantage of that, right? I can exploit it by, there's going to be quick snaps. So in a quick snap market, I can grab one-to-ones relatively easily. I shared Austin the other week. I was just nailing them back to back. I was sending him screenshots of my equity curves and stuff, and it's pretty wild how
he was sending me his degeneracy.
Pretty wild how in elevated markets you can get one-to-ones like
easy.
Yeah, easy, super easy. If you have an edge, right, and the edge is more accurate than it is not, and you're trading one-to-ones, it automatically you're on the side of profitability just by the defined risk. But what I like about scalping one-to-ones in a elevated market is I can be in and out of the trade in less than a minute and get my one, get my +1. Now, you wouldn't want to start trading that way in a compressed market, right? Lower volatility, you're likely to get maybe stopped out. It's not going to move as quickly. So that goes back to, knowing what regime you're in, structuring your risk and structuring your strategies to take advantage of the regime.
We're going to pull back here on this short, close above 930s mid. May get stopped out of here. We'll see. And I'll give this one more attempt, like literally just one more attempt. Like if we go true, if we do go long true, I'll be looking for expansive targets. If we do correct here right now, I'll just either hold this short, or if I get stopped and we get short again, I'll take this one more time. And this is my weakness of how I trade, is just not even being able to cover my queen because we can't even get 10 to 15 basis points outside of 930. There we go. Stopped on that one.
There's a lot of different ways to use stats too, right? Like you see Austin and Mick, they're trading around statistics as their entries, right? Their price goes up to this MAE and they're taking it to the MFE. That's one way to use stats. The way I trade live price, strictly live price, using some custom tools I made to account for recent live price. I overlay that on historical statistics, which are going to tell me where targets should be, right? Profit targets. It's going to tell me how likely those profit targets are to get hit. It's going to tell me when I can expect reversions, when I can expect trends. All my trades are based off of strictly live price, with the confluence of using stats. So like, I'm not entering a trade based off of a stat. I'm entering the trade based off of what live price is doing today. And if stats are overlaid and provide confidence, maybe I up my risk. If the regime is there, maybe I use tighter stops, wider stops, more risk, less risk. It dictates the strategies I use. And it's going to allow me to take my trades to certain targets that have a high probability of hitting, as well as if there's multiple stats overlapping saying the same thing, it's a higher confidence trade. I think a lot of people make the mistake of just betting a flat rate all the time.
Yeah.
And not taking advantage of confidence. If you have 5 things saying up, all right, that's a higher confidence play than one thing saying up. You should leverage that and take more risk.
That's what I like to call being dynamic.
Yeah.
Because the market's dynamic, you know? It's like not every trade's going to be like this trade. Like both of these trades were 3 micros. That's it. 3 micros.
All right.
Sometimes it may be 5 micros, 6 micros. If I can define my risk even tighter with everything stacked in a single direction, like you're saying, where everything's kind of like in the same favor of the trade, well, then I'm still going to lose. Like, right? Like, look, this is 0 for 2 right here. Like I traded towards everything that has probabilities telling me lower. We have bearish levels, opening prices, midnight open, really good high of day, but still sometimes we as traders, we fail to level of our systems. And I think that's really the definition of being a profitable trader is just, can you fail to level of your system? Can you trade and make it to tomorrow, even when you're having a day like today where price action isn't being indicative with what you're trying to do?
Dude, I'm talking and I'm literally missing. Let me just show you. I'm missing trades because I'm talking and trying to explain stuff, which is fine. I don't mind. I'll come on here and talk. But let me show you this chart. How many trades I've missed?
Dude, call them out, bro. Take a trade.
It happened while I was explaining.
It won't hurt. I promise.
I wasn't even on the right screen. Here, look at this though. This is just one of the overlays for my scalps. So let me know if it's coming through.
There you go.
All right. Now, I know what regime we're in. We're in a snappier, more volatile regime. I want to leverage that. I want to take one-to-one scalps. I'm going to be in and out of the trade relatively quickly. This oscillator is a custom oscillator I made that measures current trend against recent trend using Gaussian distributions. Every time we go extended away from the mean and recent trend snaps back over the more larger term baseline, that's a scalp opportunity. This is a non-lagging indicator. Well, I guess it lags by like 1 30-second bar. Now, structuring my risk at the low when this shifts, I've got a 1 there. That's a 1R up at the top. When it shifts, what's the bar that it shifts on? Second bar. So up at the top, second bar it shifts. There's another 1R. That one went like 20R. Down here at the bottom, when's the bar that it shifts? That down close bar. All right, so if I got in at the close of the bar, there's another 1R. It went 4R. So any of these snappier away from the mean trades. Now, if you're just hovering the neutral, right, it's not something you want to be in. You're looking for those snaps, those reversions, those high volatility reversions. So getting away from the zero line, getting away from the mean, and then trend, short-term versus near-term trend, snaps back. You're taking advantage of the volatility. So there's like 30R possible here in the last, since market open, and at least 4 1Rs. 4 1Rs with the potential of like 30Rs if you maximize every trade. It's just crazy that in an elevated regime, there's that much opportunity if you can leverage it and find a way to take advantage of it. And that's my spiel. So I'm going to try to catch more of these trades. I'm going to stop talking.
Yeah, I'm super focused right here. I'm waiting to see if this high day holds. If we get below 930, I will try this one more time. Even right here is a really decent short. So if you guys see this purple box is essentially the probability drop off of a continuation versus reversal. So because we got above 930, this purple box is basically just showing you if we stay above it, it's continuing. If we get below it, maybe this is now hitting the other side of the range. So it's just telling me, okay, we're getting below it. Now, if we get above it, I can long. If we get below 930, I can short.
If you're
Pretty
using,
unfortunate we didn't get at least 10 basis points out of 930, so that's pretty annoying.
if you're using NinjaTrader, I made my own version of this, but if you're using NinjaTrader, Google Ascendo Trading. They have a risk tool that is like next level for structuring your trades. I've shown Mick this before. I think I've shown Austin too. But like it's a drawing tool. You draw your stop. You anchor it. It's like a fib, right? You would the first anchor is your stop. The second anchor is your entry. But you can code in your risk, percent of the count, static contract, static dollar, et cetera, et cetera. You can tell it to automatically, when you let go of the second anchor, market you in, limit you in. When you get in, it's going to set your stops. It's going to set your targets. It does everything for you. All you need to do is click the mouse 2 times, and your entire trade is the size is there, the stops are there, the targets are there. You can have it auto PE, you can have it scale, et cetera, et cetera. Like it is an awesome tool. I think it's like $100 and something bucks on their website, but not too hard to replicate, with Claude. So if you don't want to replicate it and spend the time replicating it, just buy it from them. It's worth it. You'll the simplicity that it gives you and the edge that it gives you to be able to get in trades like without doing any mental math is awesome. I think it's worth the price that they charge for sure. But you can also replicate it too if you want.
Get a close above here. I am long.
I am flat for the rest of the morning, right? Like, so I know this structure, and like, unless 10 o'clock shows me a clear line signature up, like I will stay flat, right? Or line signature down. If I get a footprint rejection at 10 o'clock, that'd be cool. I'll attempt a short, but we got to get below 930 right now. My job is just when the 930 is this big, like usually, right, I can't cover my queen effectively. So if I can't cover my queen, my job's to sit on my hands.
We've got prior week high at 975.
Yeah, I need to get that indicator off of you now that I actually understand how to use NinjaTrader. It's becoming my primary platform.
Yeah, man. It is an awesome tool. All right.
This is a problem I have with NinjaTrader is like that it does not let me see all my risk right there on the spot.
This first half hour, we're closing out the first half hour of the initial balance range. We've gone nowhere. Initial balance is a trend continuation stat, at least the way I trade it, right? Looking for directional confluences to run the high or the low of the range that is set. We've gone nowhere in the first half hour. We've gone up and down and up and down. Really need to see some expansion going into the 10 o'clock hour. About around 10:15, 10:20, 10:25, I'll be looking to position if we can get some expansion out of this little box range we've set. If not, then that one's going to be a bust. IB the way I trade it is a trend continuation type stat. So if we're not getting live price agreeing, we're not trending, then there's no trade to be had. I'll have to move on to the next stat. The benefit of having, and Austin has multiple stats, right, throughout his gunship and stuff. The benefit of having multiple, it doesn't have to be stats. It can be strategies. The benefit of having multiple opportunities is you can be picky. It's Monday, right? We're in an elevated regime, and the market's more volatile. It's Monday. I'm not looking to take a bunch of size and start the week with big red. I can be picky. I can wait. I can be patient. I can take trades that are the most optimal trades. I can scalp too. I can take quick 1Rs with a lower risk. Maybe instead of risking 1%, I might risk 0.25%, right? So I might risk like 250, 300, and take a quick 1R. And if I can collect a couple 1Rs in the morning, that's like $1,000, right? So it just depends, what the market's doing. Allow yourself to be picky, right? Especially going into the beginning of the week. There's no reason you have to jump into subpar trades. You're trading for you and no one else.
Yep, and nobody truly gives a shit if you make money or not.
Nah, nobody cares, man. You might get some internet fame for couple days if you hit like a big win, like Lanto or whatever is $1 million trade. But nobody's even going to remember that trade in a week, right? Like nobody cares. The Twitter,
Everybody's just trying to get their own.
Social media is so fast moving that nobody cares if you had a big trade or a big loss.
Like I want to make sure that like Chris is good because I eat breakfast with him every Saturday. I want to make sure Austin is good because I hang out with him every day. Like, but in reality, like you got to take trading on your own. That's why some of the best, like most of the best traders, the consistent ones, build these Frankenstein systems. Like you see, I do, that Austin does, that Chris does, that makes sense to them, right? Because like they've hit their maturity level to realize nobody gives a fuck if you make money, and it's your job to figure out whatever you need to use to be repeatable with your decision making, manage your risk, and show up every single day, right? And do it for you and your family. That's all that freaking matters.
Yeah. I was like back in, I mean, if you've been following me for a while on X, those of you that have, back in like 2025, I was sharing like weekly P&L recaps, sharing trades. I would share like my whole month's performance and stuff like that. And, you know, I just got like, I hit a point where I barely post on X now. I had a point at some point, I don't remember. I like went on a month-long vacation and I came back and I was like, I got no motivation.
Dude, I enjoyed reading those. I remember you posting those a bunch. I enjoyed reading those.
I just got no motivation to just do that anymore, man. It's like, for what?
Yeah.
Right? Like,
Yeah.
I'm not trying to monetize my X account, right? I don't care if I get 5 million impressions in 3 months. Like, I don't.
Yeah, that's
so what is the point, right? If you're not looking to monetize your social media presence, then who cares? Right? Like you're just doing it for no reason.
I did it. I'll tell you why I do it. I did it out of an act of rebellion, because back in 2024, 23, 24, somewhere around there, this dude said that I couldn't trade with statistics using live price. And so I was like, well, that's kind of a cool challenge to like document in front of everybody, is like,
well, you guys also got a brand, right? Like,
well, that too, right?
You have to post content. Nobody's going to give a shit about your brand if you're not posting content.
That's true.
Like me, I don't.
What I find the most fascinating in human psychology is people will complain about like all these furus and all these crazy, you know, you get the stereotypical stuff, but yet who gets the most attention? These people with like, oh my God, follow me, I made $2 million. And it's like, we're here every day sharing trades every day, not just when we feel, not just when we win. Like you guys saw me lose twice here, and who knows what this third trade will be. But like, if you guys want to see real trading, and if you want to see the realities of real trading, like this is it, right? Those $1 million payouts, those freaking just, oh my God, I caught a 10R trade that's worth 10,000 points. Like those two things are just, you can't, it's not realistic. Yet that's where everybody gravitates to. You know,
my best and my worst days don't even get shared. I don't, you know, like I might post a chart with some executions explaining a concept or something that sparks my mind. It'll have some executions on it. I'll be like, hey, look at this. But like my best days and my worst days, they don't even get shared because, well, like, you know, who cares, right? Share the concepts, share the information that somebody needs to. If you're trying to better other traders, right? Share what they need to better themselves. But these guys that are just constantly every day P&L this, P&L that, like I don't know.
It's the structure. That's the most valuable piece, right? The structure, the
much value in it,
foundation, how you got to that conclusion, whatever.
I do coaching on the side, and I don't advertise it because I honestly am not trying to have my week filled with coachings. Since I started offering coaching through NQ Stats, I think I've fulfilled like 8 people so far, and it's structured. It's process specific. It walks through their individual processes, refines it from A to Z, and every single one of them has said something along the lines of, this has fundamentally changed my trading. And that's not from posting P&Ls and posting screenshots and posting all that. It's from just explaining fundamentally what they need to do to get better. So if you're sharing content like that, in my opinion, that's what's going to better other traders versus seeing what some of these other people share is, like, hey, I made $30,000. Like, cool, dude, you made $30,000. How does that help me? Right? Like,
yeah.
Oh, you took a 1 minute inversion and ran it 1,000 points. That does not help me at all.
Very true, bro. Very true.
So, trying to figure out, how I want to structure my social media presence. I don't know. I don't post a whole lot on X anymore. Kind of got burnt out with it. Not interested in it anymore. But still like helping people, helping them learn to.
Yeah, X is a cesspool of losers. Let's be honest. Like, literally, like, they go out there with smoke and mirrors. They lie to working class people's face. They ethically do everything unethically. They have no values. They do it for ego and pride trips. Like, I don't give a fuck about
Like,
those
even if
people.
they're not lying, right? Like, even if you are making Grand Slam trades every day, great. But how does that help someone else?
Yep.
If you're just posting, here's my 20 Apex accounts that I made 5,000 on each. Like, even if that is 100% true and you're doing that day in and day out, how does that help someone? It doesn't, right? There's no context. There's no fundamentals. There's no structure. It doesn't help anybody.
Yeah, I find value in watching people execute.
Remember, every single day, these people need to, if you're just trying to help people, you got to walk them through every single day, not some cherry pick trade, right?
Yeah.
They need to see you win. They need to see you lose. They need to see how you manage your risk. They need to see all of it. If you're going to lead by example all the time, right?
That's what I was doing, those free month-long coachings. But man, I'll tell you what, doing a free month-long coaching every day of the week for a month with random people, it is rewarding and it is exhausting at the same time.
Yeah, it burns you out real quick.
I did it for like 4 months, and I was like, this is taking too much time.
But dude, I think you produce so much good value across the community with just NQ stats, and whenever you come on here, whenever you do present yourself, like, there's more than enough. Look at that volatility regimen that you just went over. Like, not many people think that into it, right? That's like legit real edge, right? So like, I know we appreciate you at the Daily Profile on the pack side. We appreciate you and we value you, but at the end of the day, that's because like me and you have a compound for the nuclear holocaust that's coming that we're gonna have to be able to. If I can't trust you in trading, I can't trust
Rolling
you.
out up north to the mountains.
That's right.
Y'all come up here with me to the Appalachian Mountains.
We've got our own Appalachian Mountain. It's in
We'll have a good
Blue Ridge,
time.
Georgia.
Blue Ridge, Georgia.
We're gonna do one around this area just for the initial, and for us to store our toys. And then we're just like, if shit really hits the fan, like we'll just travel to Blue Ridge, Georgia.
Is that where the Blue Ridge Mountains are?
Yep. No, the red ones are. Anyway, guys, I gotta jump. I gotta knock out some stuff for this veteran nonprofit. Chris, thanks for coming on here. I really appreciate you and look forward to having you back at breakfast soon.
Yeah, man. Get you later, dude.
All right,
See you
later,
later,
Austin. Good trade.
See you later, bro.
Oh, to update you guys, I am down $400 for the day. Like I said, I'll wait for probably Q2 of 10 o'clock to see if we want to continue this expansion, or I'll just wait for the afternoon. All right. If this is one of those days where I have a red day, oh well, it happens. All right,
Happens, bro.
And to answer Ann's question, I eat Mickey.
Yes, gay. Fucking gay.
Oh my god. Who is this and 180? That's funny. I didn't even see that. You looking at anything? You trying to structure your IB trade, Chris?
Trying to see if we can get into some trendy markets, right? So looking for that 40 to 60% pullback. If we can get moving, right? We're just kind of stalled out here right around the 10 a.m. open. If we can get moving to the upside, look for a pullback and run it. Have we broken prior week high yet. We are 975 is prior week high. So
Super
I would like to see that saved, right? Because prior week highs, prior day highs, those are always, targets. You're looking for outside weeks, right? Inside days, outside weeks, statistics favor that you're not going to be inside, right? It's more likely to be outside. So I want to see that prior week high saved at 975. And if we can get a pullback here into the most recent range up, looking for some longs and taking it to the high for that IB break. So we've got 20 minutes left for this IB trade to set up. And at the same time, I'm also taking advantage of being in a elevated regime. So I'm going to be looking for those one-to-one scalps. Oh, excuse me.
Well, did you see how, so we took I was telling Chris this last week, and if anybody does like to trade the initial balance, and use the statistics Chris shares, one kind of, I guess, front run statistic that you can use to kind of see which direction that initial balance is either going to be made, or if both directions agree. Chris was saying this earlier, when things line up together and have multiple reasons to go bullish or bearish, kind of just makes a better quality trade, right? Well, one really cool statistic that I'm leveraging right here, right now, is the 9 o'clock high and low. So statistically, 9, 10, and 11, those 3 hours of time all the way until noon, only one side of 9 o'clock gets hit most of the time. So like, here's the 9 o'clock low, and then here's the 9 o'clock high right here. And so you can see 10 o'clock swept the 9 o'clock high. So because now I know statistically this low, most of the time, it won't always, it could hit today, but most of the time by noon at a minimum, this should remain. So then your initial balance, Chris, if I could forward project where let's say this is the initial balance range right here, the 930 to 1030. And then here's the midpoint. So you're already bullish because we're above the mid. But then because we swept that high, if let's say we do, then you get an entry or some sort of pullback like you were talking about, and then you're trying to get long somewhere here. Well, now you have 2 for 2 of if we do come down here and take this low, that's out of statistic. We don't typically do that. And that's even more indicative of a range 1 lack of follow through day. But then to your point, if we do the trend, these are my targets up here, 31,009 and 31,028.25.
Yeah, I'm sharing.
You sharing your screen?
Yeah, whenever you get.
There you go, bro.
Done.
Oh, nope, I just lost you. Where'd it go? There it is.
Is it working?
Yeah, you're good now.
Another thing that these distributions show me is, if you notice these, you might not be able to see it, or you might have to zoom in or something, but you'll see like P82, P78, P58. Those are referring to percentile. So percentile, that price goes below that. Right. So at a P82 on the day, that means only 18% of sessions over the last 5 years have closed above this SDEV value, right? So price is currently at high of day at 39.68 or so. Only 18% of sessions over the last 5 years have closed above that. So we are up pretty good on the day, right? If we zoom out, we see how this day is distributed so far. We've gone down, we set our open low, pushing into our high, looking for that close eventually, close of session. So when I'm looking over here at p-values, I can see, okay, only 18% close above the 5 day. Only 22% of AM sessions have closed above the current high in the AM session. We're at 58, so that's not statistically, relevant, but it starts to give me, framework of how more likely is it that we're going to push up here and close somewhere up here, or should I be expecting some type of, mean reversion type of stuff, right? So when you're looking at targets, prior week's high is right here at 39.75. that puts us probably somewhere around the 83, 84 percentile. So only 16% of sessions close below that. Are we in a trending regime, or are we in a elevated regime where I can expect snappier, more mean reverting price? We're in elevated. We're not in a compressed market. I'm not looking for something like this, right? In a compressed market, I'm looking for something like this, right? We're in a snappier market. So if we're getting up into tension, right? P82, P84, only 16% of sessions close above that level. I'm looking for more of a snappier pullback. Is my profit target reachable? Yes, it is reachable, but should I be expecting large continuation for runners? No. I should probably take full exit and be done with the trade. We are not in the regime that is going to favor holding runners long term. We're in a snappier, more volatile market. We're probably going to get more pullback once we breach this target. So now that we're pulling back into this range, right, we're pulling back into this unmitigated range down here. We have this whole New York AM coming into that 40 to 60% range. This is where I'm going to be looking for potential longs for that IB to play out, right? So IB low set first. If we run from where IB is, this stupid thing is in the way. If we run from where 930 low is to where the current high is, we are above the mid. I want to see that mid hold. What I'm looking for is coming down into that morning range. I want to see that mid hold. I want to see some structure starting to form to come out of that retracement, and I'll run it to the high. Low was set first. So far, high was set last. We're coming down. If we can hold the mid and hold above, I have dual confluences saying IB high break. But what I do not want to see is trends start to change. Live price is key. So looking at live price, see we're coming down into this hourly distribution. I would be expecting a bounce here. I want to see a bounce form. I want to see my confluences form. And I want to see that structure form coming out of that mid retracement to run it back to the high. As it starts to play out, we might be looking for a trade, but coming down into that mid range, looking for that run up to the highs. That is what I'm looking for. And full exit at the top, not looking to hold runners because the regime that we're currently in, being elevated, does not support slow grind trends to the upside. Doesn't mean it can't happen. Doesn't mean the day can't be an outlier day. But I'm asking, for price to go up here, I'm asking it to go outlier. I'm telling price, I want you to be an outlier day. I want you to be an outlier session. I want you to be an outlier AM. I want you to go beyond the norm. And this market regime that we're in is not going to favor that type of price action. So let's see if we can get a trade here.
Got your bounce there. It was actually funny, dude. You were like, I want to see a bounce here, and it perfectly bounced off your cursor. I don't know if you noticed that. That was pretty funny.
Why is it not showing? There we go.
We got a question here for you, Chris Echalake. From where you measure your 40% to 50% retracement to long?
I'm in a long here. What I do not like about this long is that there is lows that we did not break. That could go and get broken, right? So I'm using half risk, not using full risk. We're in an elevated regime. I'll get to that question in a second. We're in an elevated regime. Price is more volatile. I should be expecting more volatility. I'm going to adjust my risk accordingly. I'm not going to be looking for full size trades. I typically would take my risk and use a wider stop, but in this scenario, I'm just using a lower risk value. This might come and stop me out, and that's fine. More times than not, this is going to work in my favor. But it's reduced risk because of the regime we're in, and because of the fact that price likes to move from highs and lows. And there's a loss. Price likes to move from highs and lows. So if we're going to come down and we're going to take this low, that's fine. Getting in preemptively before that low, you need to account for the fact that price is going to want to move from highs and lows. Sometimes you can front run it and maybe it doesn't take the low and you get in early, and that's okay. But we've come down, we've taken the low. That low is blown out. we are starting to downtrend. If you notice how price is forming here, pullbacks up. We break that in control low, pullback down. We're breaking lows. We're setting lower highs and lower lows. Price is starting to downtrend. This is not what I want to see going into an IB trade where I'm expecting IB highs. Just because we're coming down into this mid-range isn't the ideal area to be looking for longs for me. I want to see price get back above that midpoint and then run it to the high. But I also have to be mindful of live price, right? Just because the stat says one thing doesn't mean today is going to be that day. You have to account for what live price is doing. Stats is what happened in the past. That's not what's happening today. Use all the information you have at your disposal, but you have to account for what is happening today, right? If live price is downtrending and aggressively moving to the downside, but your stats are saying favors longs, well, that doesn't make any sense, right? Or why are you going to go long just because something historically says longs are favored when live price is saying, hey, that's not the play here. So there's that low that was knocked out. That's cool. That's what I wanted to see. I got in a little early. I paid for it, right? Paid half a risk for it. Next trade I'm going to take, it's going to be another half risk. I'm not risking full risk today, being that we're in an elevated regime, being that I don't need to risk full risk to get to this high. I'm not expecting trend continuations. There's not a lot of meat that's on the table to this upside. So I want to get in a trade. I want to collect, 1 to 3 R or so and just be done. Typically goals for the day is somewhere between like 2 to 4 R. If I can collect 2 to 4 R in a day and that's my day, that's great. I don't have to sit around all day trying to collect infinite R. Right. And I don't structure my wins or losses by cutting, X amount. I risk 0.5% to 1% of my account per trade. I would have to take, 50 to 100 losses in a day to blow my account. It's never going to happen. So using a lower risk like that, it just allows me to be a little more picky. It allows me to be a little more patient. I don't need to take trades that are subpar, and I can take trades with lesser risk if the market is more volatile. I can take trades with higher risk if the market is less volatile. And how many confluences I have is going to build the confidence to take a higher risk trade. What was the question that was asked earlier?
We had one by Echelaki here. He said, from where you measure, I'm assuming he said measure instead of measure your 40 to 50% retracement to long. From where do you measure? I think he's referring to when you key off the low to the high of the IB.
Oh, okay. Yeah. So in this scenario, from New York Open to current, we've not established any directional trend, right? We've gone up, we've gone down, we've gone up, we've gone down. There is no trend. So when you're looking for range, where do you draw your retracements? In the event that we were trending, that's easy. That's easy to say, okay, where do I draw my retracements, right? You're going from most recent price leg. So you want to see that pullback to that 46% and then a pivot out. Live price is not doing that. What we have at the moment is choppy price, right? So we've got this type of nonsense. So what I want to use when we're chopping is, first of all, maybe I avoid trading altogether, right? But I'm not going to do that. This market is not bad enough to avoid. But when you're chopping along and you can't get out of that New York AM, I'm just using the whole range, right? We're coming up into that high. I'm using the whole New York range since New York Open, whatever has been established during that initial bounce window so far. I'm looking to retrace down into half of it to get back to that upside if the stats favor, right? If the low is in, if the high is in, if we're above the mid. But look what is happening at the moment. Let me turn some stuff off here and just remove some stuff out of the way. We've got IB low. We've got IB high. We've got the low was set first, the high was set last, and we are below the mid. These are conflicting confluences. All right, one confluence is saying up, one confluence is saying down. Now there's 5 minutes left, right? It could change, right? We could push up here in 5 minutes and get above that mid, sure. Probably not likely though. I have conflicting confluences. So taking that trade earlier was front running. I was trying to get in early. I was trying to bet that we're going to come down, revert out of that range, and start to, move back up to the upside. Didn't happen today, and that's fine. That's why I'm using half risk and aware of the regime we're in. This is not going to be, I'm probably not even going to take anything else on this IB trade. Look for further trades throughout the rest of the day or potentially scalps, because I have conflicting confluences here. This low is probably going to get ran. It's probably going to get ran because we're downtrending, right? We're setting lower lows. We're setting lower highs. There's nothing uptrend about this. So that
There's that 9 o'clock low too.
Yeah, that low is probably going to get ran within the next 10, 20 minutes. And that's okay, right? So that's what I'm seeing at the moment. Now, again, noting the regime we're in, can I leverage scalps? Right, here were all those, this stream button is in the way. Here were all those quick pivoty scalps on the 30-second. Lots of opportunity to leverage, like four separate trades in that window. Now we're getting into this choppiness, right? This choppiness as it pertains to short-term trend versus medium-term trend, and the distributions between those two on the 30-second chart. This is not something I can scout for 1 hours. I need to see those sharp pivots. I need to see pulls away, snapbacks. When that crossover happens, that is telling me that the shorter term trend is changing against the larger term trend. When I say larger term, it's not like hours back, right? It's, maybe 30 bars back. Shorter term trend is snapping back through the larger term trend.
Chris, not to interrupt you, just real quick.
Yeah, go.
I didn't want to interrupt you as you were going through that, so I took that short below 930. There's cash flow number 1 just hit right now. My second target to take the majority of the risk off of this short is 727.25. That's the New York 1 low to go false, because now we're confirmed choppy. So my targets are more compressed, like what you guys hear Chris saying. They're more tight. They're not as long. I'm not trying to shoot for the moon, because now my systems have confirmed that we are more rangy today because we took both sides at 9 o'clock. One New York 1 classification that aligns with the choppy market is a false. And so now, why am I holding this trade to the false? Because we have an in-stat high in Q1 and an out-of-stat low in Q2. So typically we make high in Q1 of any hour and a low in Q3 to Q4. So I'm trying to now structure the rest of this trade to get the majority, the lion's share of this position off here at the New York 1 low. And then if we make a bearish 10 o'clock candle, I'll just be looking at taking the final one off here around 700 even. Back to you, Chris.
Yeah, with the somebody asked about the tool. Google Ascendo Trading, just kind of how you would think it would be spelled. I don't remember the spelling, but Ascendo Trading.
Sounds like Harry Potter.
Yeah, they have a risk tool. It's a drawing tool that can totally manage your risk and orders and all of that. That's the tool that you saw me using just a second ago with that trade. But well, I replicated it, right? Like I made my own version, copying it, but it's essentially the same thing.
This is what we call, Chris, the wet wick. We call this a wet wick. You know how, like, if you were to like light a firecracker and the fuse is wet, like delays a little bit. So like when we have a lot of these statistics stacked below price and it takes a hot minute for price to aggressively do the mean reversion, this is what we call the wet wick. It just takes a little bit.
But yeah, see, like I can hit I have a couple different hotkeys, right? I have hotkeys for scalps, which was like a quarter risk. I have hotkeys for half risk and a hotkey for full risk, right? If I want to take a half risk trade, let's just say I want to short the high here. I will stop at this high, just random high. Now, note that the risk value amount USD on that red line, it's set to 500. Well, it's set to percentage base, but you see it's about 500. The quantity is the only thing changing. The risk doesn't change. It's still going to be right around 500 for a 0.5% risk. Quantity is going to be adjusted. Now, I can hold shift, and it's going to adjust to market price. If I left click, it's going to market me in and set my stop order and my target orders. If I let go of shift, I can tell it where I want my limit order to be. I can just turn it off. Right? If I want to do a full risk, I can hit a different hotkey. And now I'm on a full risk. So now you're seeing that hover around 1,000. And again, quantity is the only thing changing. This tool is awesome. So if you're a NinjaTrader user, highly recommend that you go check this tool out. It just takes all the mental math away. You have to do no mental math. You set it up one time and that's it. That's all you have to do. Set up a couple hotkeys for different risk values, right? You can tell it static dollar amount, static contract amount, percentage of the account. There's a couple different ways that it works, but no scalpy opportunities. We're not getting any clean moves that I can scalp here on this lower time frame, even though we're in an elevated regime. Looks like the bulk of that opportunity was during that first 30 minutes of market open. Maybe we'll get some more throughout the rest of the day that I can leverage. So nothing there. IB is already a bust, right? Conflicting confluences, broke to the downside. Next up is noon curve. So if you're familiar with NQ stats, next up would be the noon curve stat. If I can get a trade off of that stat, that would be another larger trade, right? Like a half risk trade, half R trade, half percent risk trade. Scalps will always be a quarter risk, right? I'm not, I'm trying to scalp, right? I'm leveraging quick volatile moves. I'm not trying to get, and with leveraging quick volatile moves can also be quickly get stopped out, right? So I'm not trying to use full risk on those scalps. That's why, just leveraging a 0.25% risk. But so that's what I see, so far in the morning. Total to start the week is negative 0.5 R. And I guarantee there will be more trades during the day. We're in an elevated regime. There'll probably be some scalp opportunities. So we'll see what we can come out of the day with, but also see how noon curve sets up. But again, it's only Monday, right? I'm not running into Monday with the goal of making 20 R today. It's Monday. Still got, the rest of the day and then 4 more days to close out this week. So patience is king. You don't have to chase anything. You don't have to take trades that don't make full sense.
I'm holding this micro to weekly open here at 591 even.
Yeah, dude. Hopefully you get it.
Now, don't get it twisted. Now,
Weekly open. We just hit weekly open.
Weekly open on MNQ?
That's the same MNQ, NQ, yeah, 3689.
I got 582.
Your weekly. Are you on the September contract? Did you roll over?
I'm just on the continuous.
Check what contract you're on.
Let me see. What's the symbol for this month? For this quarter?
If you just type in MNQ, it should put you to the latest.
Well, I use TradingView is a continuous, so it might be, if I do the actual contract, it might be different.
I don't know when TradingView roll. I thought
I got weekly open at 581. Are you using the right weekly open?
Yeah, it's automatically calculated based off of this session's open.
Sunday, 1800 open. I have 581.50.
Unless my weekly dev script is bugging, maybe because of the holiday or something like you said. I don't know.
Yeah, I'm not sure.
But yeah, I guess it is a little lower than what the script is showing.
Dude, I thought I was smoking crack over here.
Yeah, it's down in the 80s.
Yeah, I'm just placing this right above the weekly open. It ideally, we're confirmed more choppy than not. So I'm not really trying to keep the risk on this trade super high. Already took 3 hits, right? So I'm really just playing defense today and trying to take the lowest hanging fruit with this runner again. So Chris likes to bully me on my runners. Okay. So the cash flow is already paid for. The risk in this trade has already been covered, the majority of the risk. So this single trade is positive. Like if this goes and hits my stop, it's now turned a positive net impact into my P&L. But the exponential compounding, the the real return that I'm trying to look for with my edge is those fat tail distributions. I love looking at the market in terms of fat tail distributions. And so if we have a statistic here, and live prices is still confirming, if live price from 10 to 11, we know that quarterlies, we have an in-stat high of this hour, and we've actually made the second highest statistical low, which is a Q3 low. So statistically, the wick could be in for this 10 o'clock. And if now I get a pullback, I'm not going to be so shocked. But the other side of the coin, the higher probability is whatever we do this 15-minute candle here, starting at 10:45, I'll be looking at this low to be taken at whatever the Q3 low is. So let's say we do make a lower low. I'll be looking at this Q4 to take the Q3 low. And so I'm just aligning these live price levels with the statistical retracements we have on the day. So if live price is being accepted below 9:30, which is the opening bid of the day, that's bearish. If the 10 o'clock hour is taking the Q1 low, that's bearish. And so if bearish, if live price tells us where, statistics tells us where to. If bearish, where to? Well, I've already captured the majority of the high price. So my first target here you can see was at 757.75. That was the high strike rate portion off of 930 with the intent of going false for New York 1 at 725. Second target was right there at 725 to go false. And now this final micro is to do that exponential damage. You guys hear that cliche all the time with runners do damage. This is the damage I'm trying to get. Is now, if I didn't take any losses today, I would probably try to let this runner go to a new low a day because we have an out of stat low a day. But I took 3 losses. So I'm trying to just get as much off the table as possible with what my edge can provide. And so I know that we've done this much favorable price movement. I know that we've done this much favorable price movement. So now what I'm trying to do is I'm trying to get this 75th percentile. So it's low probability, about 20 to 30% occurrence. So it could not happen today, but it is exponential. And you can see that midnight open, P12 mid, and the weekly open, all 3 of those are stacked right on top of each other. So this is how I trade every day, is I'm aligning live price levels. I'm aligning levels that make up this daily candle. And then I'm trying to see where they intersect with the statistical historical probabilities of what we use. That's what we do. And we're bearish out of your IB, Chris. But yeah, I don't like the fact that we took both sides at 9 o'clock. That's the only thing really keeping me off of a lot of expansive moves.
Yeah, man, it's a volatile morning, right? We're in a elevated regime from a session, hourly, and AM perspective, all 3 elevated. So you're seeing it play out in real time. Big range. If you see my chart, you'll see the hour, right? The distribution level that we're at in the current hour. We're down here at a negative 1.5. What does that translate to? P97. Only 97% or only 3% of 10 a.m. hours have closed below this low, percent-wise, right? Not price-wise, speaking to percentages. So from the hours open to this low, only 3% over the last 5 years has closed below. We're in an elevated regime. The market is more volatile. It's not unlikely that we could see lower lows. We're expecting bigger distributions. So I need to make sure I'm accounting for that with my risk, right? So, and at the same time, you can get snappier trades. Look how when we get down into it, think of price as a rubber band. Every time-based range is a rubber band. An hour is a rubber band, right? The farther you stretch price down, the more tension is on price for it to pull it back up. And you see that with the percentiles. Farther we stretch this hour down, only 3% of hours close below the low. There's a lot of tension on price to snap it back up. For an elevated regime with higher likelihood of snaps, more volatile price, it's not unlikely that we can get a rapid move to the upside. You just have to be aware of what regime you're in and how you're structuring your risk is kind of the bottom line. But Yeah, getting this deep into the 10 o'clock hour, it's not the norm, right? It's not the norm to come and close down here. That is not the norm. The norm, right, would be somewhere around the 70 percentile. What happens 70% of the time, right? 70% of the time, we should be closing somewhere above that 1.0. But we're in a more volatile, more recent volatile state. Those are the days that you can expect those outlier moves. So being in a elevated regime on both the daily, the AM, the hour, the current hour, 10 o'clock hour, right? If we go to that regime filtering, you can see the 10 o'clock hour is highly elevated, right? We are elevated. We are elevated on the 10. We are elevated on the AM. We are elevated on the day. And I am seeing it play out in real time. We are setting a wide distribution. We get down into this 2.0, it's like a 99%, right? Only 1% of hours, 10 o'clock hours, close below that negative 2.0 in the last 5 years. That should tell you something, right? If we're reaching this far down, that should tell you something. It should tell you that the market is not moving relative to norms. It is very expansive. It is very energetic, right? There's a lot of volume in these candles. Look at the range of these candles, right? If you measure just any one of these 1 minute candles, I'll pick even one of the smaller ones, right? Just that 1 minute up bar is 0.15%. What does that translate to in price? It's a 45 point 1 minute candle, and that's one of the smaller candles.
Crazy.
That's one of the smaller candles, and it's 45 points. So that should kind of paint the picture of, like what kind of market we're in right now. It's a lot more volatile. If you're betting your normal risk, more power to you, but take advantage of the state of the market and adjust your risk accordingly, or use wider stops, right? Don't be trying to use those precision swing lows and swing highs, because you're probably going to get ran over. It might just tick you and then take off in the direction of your favor. But yeah, that's it. That's it.
Well, and you bring up a really good point, Chris, because I tell people this all the time. What you're talking about with those people here, you said, because you just said it, right? It's a lower probability we take this low with your statistics here, but people fail to understand. You have to put context to these numbers. Yeah. If you could close your eyes and envision, well, what would price look like when it's making this lower probability movement? It's not unlikely. It's not like we're just now going to reverse. No, that's live. That's a live price signature of statistics, that if we do something minority or low probability or something that is still realistic but not occurring as much, that's your trend. That's your ripper outside of a distribution. If it's an hourly distribution and we're maxing that hourly distribution, we're most likely in an expansive hour, right? So that doesn't mean to now start trading the reversion. That means live price is agreeing with the minority, not the majority.
Yeah, reversions is, how does this hour form? Every hour, every day, every 40, every 4 hour, every candle, right? If you can take the New York AM from 8 a.m. to 12 p.m. and just visualize it as a candle, it's going to have an open, low, high, close, and then, just like this hour does, right? Your reversions, and Austin has his quarters, right? I do things in thirds. And that first third of that hour, right? That first third, I'm looking for that high or low to establish, and it's going to typically establish at those plus or minus 0.5s. And then you're going to see that pull through, and then you're going to see that close. Where that will typically occur is those 0.5s, right? And then you'll get through the open, and then ideally in a normal state, you would see some type of move down for an expansion and then close back inside the 1.0. That is a normal hour. That would follow price norms. We're extended well beyond that. This hour is going outlier. We're down at a 2.0. Only 1% of hours, 10 o'clock hours, close below this low. So it tells me we're in an outlier low. I'm not going to try too long in an outlier low. I might scalp it, right? I might try to take advantage of some scalps for a quick 1R, but that is not the same as trying to position in long for some type of big move up. We're going outlier to the downside.
Real quick, my targets are changing here because now we're opening up this final 15-minute candle of the hour. So this is where I like to be. I like to make money still being wrong. So now that we have a new low that's due for this hour right here, for this next 15 minutes, if I'm wrong, boo-hoo, I get stopped for this runner. If I'm right, I'm now adjusting my target to where I can still be wrong and be right and make money. Now, how do I do that? If we're due for an in statistic low and my higher time frame target is P12 mid, midnight open, weekly open, these levels down here, how can I still get a position off of this trade without getting these levels hit? Even though they carry a lot of statistical significance, I like to front run my targets in front of high probabilities. So if this low gets taken, I'm going to take 5 basis points projected below this low, because usually price, people like to say to the tick a lot, but price doesn't usually react off of a singular level. It usually reacts in a zone. And so I like to base my targets off of a zone of reaction, not a single to the level reaction. So could I place my target here at the Q3 low at 612.50? I could, but I like to visualize what realistic price does. And what realistic price likes to do is it likes to take highs and lows and then react in zones like this. So no matter if I'm right and we do continue lower and take these levels below, well then great, I'm out of the trade already. If I'm wrong, but we at a minimum come down and wick this low, I can still be out of this trade most likely. Back to you, Chris.
Yep. So we're coming into the end of the, and I only trade until 12 p.m., right? So realistically, there's like an hour left here. Going into the 11 o'clock hour, what's the 11 o'clock hour look like? So what regime is the 11? It's also elevated. Makes sense, right? The mornings have been elevated. Should expect most of the morning hours to be elevated or somewhere close to elevated. So looking at this 11 o'clock hour, it is also elevated. So what that means, going into the 11 o'clock hour, again, not expecting anything to be slow, not expecting anything to be slow grindy, not expecting tight ranges. I will be expecting larger moves. And if this is going to be a noon curve trade, I can put the overlay on. I can see noon curve. So there's my AM so far. And here's my PM targets. These are mean medians. This is my AM range. This would be my PM range that will set up later after this starts to print. So here's my AM box so far. My medium highs.
That's your distributions?
Yeah, those are my distributions for where is the mean median from the 8 a.m. open. And if this is going to be a down move, right? Like if we're expecting noon, this is your noon line right here. I'll paint it. Here's your noon line. If I'm expecting a new PM low to print, right? Here would be my expectation. This is my mean median for those lows of PM lows. This is my mean median of PM highs. This is my mean median AM lows, mean median of AM highs. So if I run from the 8 a.m. open straight across, there's my baseline, coming up into that mean median, coming down into that mean median. Now, what I would want to see is we're going into the 11 o'clock hour. We can reach lower, right? We're in a more volatile state. So something along this nature, right? We want to see that price start to move down and then give me some type of retracement that I can fade back down to a new PM low. That would be my ideal trade. Now it might not play out exactly like that line, right? We might get some chop here and move down or something, but during that 11 o'clock hour is when I'm going to be looking to get short potentially if it sets up and I have my logical targets. I need to account for the fact that we're in an elevated regime, right? So it's not going to be full risk. I'm also going to be a little more aggressive on my trade management, my BEs, my scaling, etc. I need to ensure that I'm trading an elevated regime, a more volatile market appropriately.
Chris, look at it. This is why I love Chris so much, guys. Look at both of our charts right now. This is my gunship chart. And look at Chris's chart. What did you say makes those boxes, Chris, for the people in the back? Say it one more time.
That is just your 8 a.m. open to your median
to median, right?
High of the AM. This blue box is AM. So where is the medium high of that box? Where is the medium low of that box?
Look at how I derive these boxes. In real time, we are literally seeing this. If we take the gunship, because this is what I do in the most simplest way, it's the same thing Chris does, just in a different flavor. That's it. So Chris's box up here got interacted with. My box, and what do? The same thing. Here's the average line. Here's the median percentiles. And I do the same thing. Median to average, or in your case, you say mean to median. Look, mean to median. And we're just tickling the median distribution to the downside for New York, for the New York portion of the daily candle. That's what this is. This is covering up until noon, the distribution of just the New York portion of the AM candle. Same stuff, bro. I didn't even know you could do this. Look at this. We can just literally be side by side. Look at that. We can hold hands.
Right. So you've also, like Austin uses quarters, right? We've also got quarterly confluence. If you go to NQ stats, you'll see quarterly confluence. In this scenario, though, we've broken the high and the low, right? High and the low of that quarter one, that 8 to 10 a.m. We've broken the high and the low. So there's not really much edge there. And again, this is a very volatile morning. We're in a volatile regime. Makes sense. So there's nothing out of the norm happening here. It's just we're in a volatile state. Price is more volatile. No edge looking at quarter confluences. So I need to revert to, okay, where are we going from a trend perspective? Price is always going to move in one of two ways. It only moves in one of two ways. You're going to have, let me get out of this black area. You're going to have trends, or you're going to have range. It's the only way price moves. Can't move any way else, right? I mean, you can go downtrend, but it's just the opposite of an uptrend. It only moves trending up or ranging sideways. Now, when you're trending up, and I'll take a picture of this so I can draw. Let me finish it. All right, take a picture of this real quick so I can draw on it. That's not the picture tool. There we go. All right. So in an uptrend, right, when does the trend change? And that's just the inverse for the downtrend. So you have legs of movement. You'll have retracements. Those retracements for continuation should typically occur around that 40 to 60%. So that 40 to 60%, that is your retracement zone. Price is going to set a leg of movement. It's going to revert, retrace, right? And you're going to get a new leg of movement. It's going to revert and retrace. You're going to get a new leg of movement, new leg of movement, new leg of movement. Now, these are in control lows. Every time a high is broken, the in control high is lost. You have a new in control high getting set. This is coming up into this pivot. This is the in control low. This is the in control high. Price is either going to revert and continue, right? It's going to either come down and then go up for continuation, or it's going to break that in control low. If it breaks that in control low, that is early indication of a trend change, right? It could just be a sweep, right? You could just go whoosh, sweep it and go. When does it confirm? It confirms that down leg occurs. This 2 becomes a 1. Down leg occurs, retracement up into that 40 to 60% range. And if we break the new 2, your downtrend confirmed. And that is the same for downtrends. This is obviously an uptrend change. Be the same for downtrend change. You can apply this to any time frame. This is how price moves. Now, it's always not as clean as this lines show, right? It sometimes can be a little more volatile and sketchy, especially if you're viewing on a 1 minute. But if you go to something like a 5 or a 15, it should be rather clean most of the time. But this is how price moves, right? So you're going into those legs of movement, you're breaking those in controls. You know, it shifts. That 2 becomes a 1. You get a new 2 for a down leg, 46% retracement, and new 2. Right? Are we going to continue, or are we going to break to the upside? So price will always move in that way. Now, how does this translate to back to the chart, right? So that's cool and all, Chris, but how do I use this? We're looking at what price is currently doing. Let me get this noon curve indicator.
I'm fully out of the shorts for anybody still following along with this short. Let me know in the chat who got these dang runners, because it was very low anomaly, so it wasn't like it was super obvious, but fully out. And Chris, when you are finished with that, we got a question for both of us by Johnny Carty, Cadian, but definitely finish this first.
All right, I've just overlaid just a drawing tool, like a little line tool over current price. So I'll move it over to the side. What are we seeing here? All right, we're seeing lows being saved. We're seeing retracements. We're seeing that 40 to 60% retracement. Pivot out to the upside. We're seeing trend change start. We're seeing 40 to 60% retracements. We're seeing almost a 40 to 60% retracement, right? Pivot back down. We're seeing another 40 to 60% retracement. And yet again, getting into that 40 to 60% retracement. So we just got into it, right? If this is going to be trend continuation down, this is the zone that it's going to occur. And what I would be looking for is that trend continuation down. Or it's going to break that in control high, come back for a retracement, trend confirmed when it breaks that new 2, just like the example was showing earlier. But just watch how price plays out. Right? We're in the 40 to 60% retracement. We're down trending. If we break this high, potential trend change. But more than likely, if we're going to trend continue, the move would be to the downside. Excuse me. Had to cough. But again, we're in an elevator regime, right? So things can be a little more abnormal. The price can move a little more volatile. If we do end up breaking this high, you would be looking to see a trend change confirmation by seeing that 40 to 60% retracement and then a break of that new in control high. That is how price will always move. It is applicable to any time frame, and that is the basis of how I execute live with some other custom tools that, you know, one of them being this one down here and some others that aren't overlaid on the screen at the moment. But that is the core of how I execute.
I appreciate you sharing it, man. I know a lot of people follow you for your NQ stat stuff, so I'm sure these little snippets can definitely help and give more context too. We have one question here by Johnny Cadian. I really like this question. Johnny Arcadian says, hey, both, do you guys use a daily loss limit, a maximum number of losing trades, a drawdown percentage? Like basically, Chris, what he's asking is just, you know, what is your measure? And then I'll get into mine. What is your measure on when you're just kind of done for the day? You can't really, you just took too many losses, whatever. How do you lock it up for the day?
I've been trading for a long time. I'm past the point of like my P&L for the day affecting me mentally. I don't view it in those buckets of time anymore. I also never risk really much more than 1% of my account per trade.
Mm-hmm.
I don't limit myself by wins or losses or down this amount of R, up this amount of R. I take every trade that is applicable to my strategies. Now it's a little different if you're in a prop account, right? You're defined by daily loss limits and consistency rules and things of that nature. But if you're on a personal account, I don't think you should be restricting yourself to X amount of loss or X amount of win, because unless you can predict whether the next trade you take is going to be a win or a loss, then why restrict it, right? If you could predict that, you would never lose. So if you cannot predict if your next trade is going to be a win or a loss, what logical sense does it make to avoid that trade? If it is meeting all your criteria and it is You know, it's part of your process, right? It's a full process trade. It meets all the criteria. Everything's there. Take the damn trade, right? Why are you going to avoid it? So that's my mindset on it.
Yeah, and I mean, honestly, my answer would be pretty similar, Jason, if you're still around. Let me see, what's your name? Yeah, Johnny, my bad. I'll put this back up here for anybody else. For me, I'd say like even this 9:30 trade or the 10 o'clock trade that I took, either one, it's knowing the variance of your edge, right? And when that edge drops off. So like for me, I know that 3 to 4 attempts is about max when it comes to just the 9:30 trade. When it comes 10 o'clock, same thing, about two to 3 attempts. And how do I get these numbers? Do I just pull them out of my butt? Where do they come from? They come from numbers. They come from me pulling the statistics of the different movements that I'm trying to capture in the day. And I know how many times this MFE is available for X amount of attempts. And then I apply that. I'm not a robot. I apply that to my analysis. Okay, so for instance, today, I took 3 losses here for 9:30. Couldn't get a 9:30 movement. Come into 10 o'clock. 10 o'clock locks in a Q1 high. So I know I'm in a bearish 10 o'clock hourly candle. I still know that we have a false below us because Daily Profiler tells us we go false more than we go true. Well, the false today was at price level 727 for those of you that's not in the boot camp. So because I was able to see this with my analysis, I was not bottlenecking what Chris just said here. I'm not just not taking the trade, okay, just because I lost. I'm just going to make sure my risk is defined. And if we just literally did this, if we just barcoded the entire day, I know that I have 2 to 3 attempts on this movement. And if I can't get out of 2 to 3 attempts at 9:30, 2 to 3 attempts at 10 o'clock, there is nothing on this day. And then exactly what Chris said too, is like, I'm not sitting here risking 2 minis, 1 mini. I take 3 to 6 micros per trade. That's never, and how do I get 3 to 6 micros? How volatile are we? Is the VVIX expanding? Are we contracting? Is 9:30 humongous or small? Like these things that allow me to define my risk is what's telling me what my max loss per trade is. The thing a lot of people kind of do this as a cookie cutter answer is they'll just say 3 attempts, or they'll just have some random number like max loss or a max risk of this much. But that doesn't really give you, it's not indicative of the edge you are trading. That's just general cookie cutter advice some prop firm gave you that brainwashed you into thinking this is how you're supposed to actually trade. No, like you'll hear a lot of professional traders like Chris, they'll say the same thing. It's like, I'm not okay. I can lose 2 to 3 times in a row. I'm managing risk. If I lose 2 to 3 to 4 to 5 times in a row and that just instantly blows everything up, well, I'm doing something wrong, right? I should be able to withstand some variance within my edge.
You should be able to trade every trade that your system provides in any given day and not blow your account, even if they're all losses. Like there should be no situation where you blow an account in one day. Now I know that's a little different in a prop account where like you might have a daily loss limit of $1,000, right? And you're taking $200 risk trades. It only gives you 5 losses. But like I'm not trading a prop account, right? I'm trading a personal. If I'm risking 1%, anywhere from 0.25 to 1.0%, it is physically impossible for me to blow my account unless I start to do something wrong, right? I mentally like start taking larger trades, revenge trading, spiraling out, all that stuff, right? But structurally is impossible. There's no scenario where I'm going to take 100 losses in a day. It's not going to happen. Or 200 if I'm doing only 0.5% risk trades, or 400
the statistics of your edge, right? You didn't just randomly be like, well, like your edge has high accuracy, because it's backed by, has statistics baked into the accuracy of what you're trying to trade. So if you know the variance of the IB, right, you are making it to where it's structurally impossible to sit here and put you in a bad situation.
Yeah. Yeah, I'm not a fan. Now, I think if you're going through the process development phase of your journey, right, and you're trying to piece together your strategy and figuring out what works and what doesn't, then sure, right, have some arbitrary cutoffs in there to kind of help contain you, right, like bumper rails in a bowling alley. But eventually you're going to get past that point, and just having hard rules like, oh, I'm only going to take 3 losses, I'm only going to take 3 wins, I'm going to stop if I'm up at $500. So those are arbitrary things that make no sense once you're past the stage of having a sound process and having control of yourself, right, to execute your process. Those rails, they don't make any sense, because if you're controlling yourself and you're following your process, you should be taking every trade that appears within the time window that you're trading, unless you're some savant and you can predict the outcome of the next trade.
Jim Simons, slave to your system.
But again, right, we're here in this 11 o'clock hour. Hour is elevated. AM is elevated. Daily is elevated. I would not be expecting this hour to be stagnant. Price supports further downside. Here's where that shift in trend would occur if this high was broken. It was not broken. So we're getting down into that 40 to 60% retracement. I don't want to see this hold. I want to see this start to break through. Right, and this is not meeting the confluences I need right now. It's too early in the 11 a.m. hour. I want to see positioning for a noon curve short somewhere in the backside of this hour, because a lot can happen between 11:07 and 12 p.m. Right, and if I'm looking for a new PM low, a lot can happen between 11:07 and 12 p.m. But again, it not expecting this hour to be stagnant. Right, so might give us some more push to the upside, might give us some more push to the downside, but the range that is set here, this boxy little range, definitely expecting to get out of that, right? Whether we get out to the upside or whether we get out to the downside. Not expecting to stay in here for the remainder of the hour, because the hour it's an elevated state of volatility. But yeah, not many, no setups today on the broader NQ stats, right? ALN was already over by the time I got on stream. IB was a bust, and noon curve is yet to be determined, but plenty of scalp opportunities. Oh, fuck, I just missed another one. Dude. Dude. Look. Just missed another 1 hour. Dang it.
Bowie. What's up, Bowie? Bowie's our London trader. He says, I just bottom ticked this whole thing and caught it on recording. You know what to do, Bowie. Release the floodgates. Yeah, I'm pretty much done for me, man. I think I agree with you for continuations to the downside. I do think that's a really good probability for a new low in PM. If this 11 o'clock shows signs of a bearish hourly candle, so in the next 5 minutes, if we continue pushing to the downside, especially if we take this 10 o'clock low, yeah, I think we could maybe make a new low in the PM. Now, this is where we call this a range 2 potentially setting up, Chris, where we have the 930 like this, and then we finally start to push away from 930, and then by 11 a.m. plus, so anytime throughout the day now, if we start to head our way back up to 930, we make like this apex move, right? Whether it's this way or this way, and we call this a range 2. So sometimes in this type of situation, we may get that PM low and then immediately sweep it. People like to call this, right, like sweeping a liquidity or sweeping a low to then go higher, whatever. And that's where you'll see those. Now, range 2 is a lower probability. We don't, in terms of the 4 classifications of the day that we have, range 2 is always one of the lower ones, but that's the live price signature. And these are the distributions. You guys see my screen here. This is the distribution of the different types of days that we have. So obviously we range more than we trend. There's your range 1 day. Range 1 day is when we chop around, make out with 930 for the whole day. Range 2 is what I just explained here, is if the 11 o'clock candle gets us back to 930 or 12 o'clock, 1300, anytime that we make this apex move to come back to 930. DWP is a trending price action. So when we directional with pullbacks, so when we do a directional move, but we have these healthy pullbacks, and then DNP, which is the lower probability. And this is what everybody tries to trade every single day. And that's when we just move in a straight line, directional with no pullbacks.
Again, man, it's Monday, right? So if we're looking at Mondays, what do Mondays typically do, right? Open, high, low, close of the week. Mondays going into Tuesday night, that Tuesday early AM is typically your wick getting set, right? If you go back and look through any week, you're going to see that wick of the week typically getting set in that like Monday, early AM, Tuesday time frame. The week could present a lot more opportunity as it starts to expand. The point being, don't be any rush to like, make your week on a Monday. Mondays they can be good, but Mondays are not the most wide moving days, right? Mondays are typically your manipulation of the week. And then you'll get your expansions through, your Tuesdays, Wednesdays, Thursdays, and your closure on Friday. That's why you don't often see much red folder news on a Monday either, right? Your red folder news typically is happening in those Tuesday, Wednesday, Thursdays. And those are most of the time your expansion days. So don't be any rush to try to make a big bag of money on a Monday. You got the whole week ahead of you, and Mondays is not the most optimal day in terms of price movement. Doesn't mean it won't provide good trades. It just means it's not the most optimal day in terms of price movement. You're going to get bigger movement throughout the rest of the week.
You use kind of roughly the same thing, Chris, where like you're trying to see that Monday to Tuesday weekly wick and then vice versa, Thursday to Friday.
Yeah, I got my chart up, so look over here. These are just weekly distributions. You can see it blocked off, sectioned off by days. So that Monday, Tuesday time, right? Getting into that Monday, into that Tuesday is typically where I'm going to see that manipulation occur. Open low, high close. That was just a bullish right into close of the week. And again, right, your Monday, Tuesdays, you got your manipulation on the Tuesday, and then your expansion through the week, and then your closure on a Friday. Those pivot points on the weeks typically going to happen at your weekly plus and minus 0.5s for your distribution levels.
Real standard deviations.
Yeah, there you go. Your pivot of the week at a 0.5. We get pretty close down to it at the open of that day at a 0.5. Here's another week. Your Monday pivot 0.5, run up through the rest of the week. These are just going back as far as I can go, right? So on this week, you hit the 0.5 pivot back to the open and then blast off, right? So didn't set the wick of the week that week. And again, 0.5 pivot, damn near 0.5 pivot. So a lot of times you'll see those 0.5 pivots set your weekly wick around that Monday, Tuesday time frame, right? So there's another one. And then you get the pivot there, but blast on through. This is kind of like a doji week, nothing significant there. Big volatile week last week with the news, not abnormal. And then playing off of that. So into this week, we've almost made that 0.5 pivot to the downside already for this session with the Monday low. That could be your manipulation for the week, right? We could start to trend up for the rest of the week, going into that weekly high, going into that elevated regime, getting into that, reaching higher into the week, right? It's only Monday.
What's your point? Because you said you like to see those reactions off the 0.1 of the week.
Yeah, the 0.5s, so plus or minus
0.5. Okay.
Typically where your wicks will be set.
And so you can, I'm looking kind of close. So you see that 0.5, that down move right there. That's what you're talking about.
Yeah, it gets pretty close on that one. I mean, I say some of the better examples were just the multiple ones I circled back over here, right? Like all of these are 0.5, 0.5s, 0.5s, pivots. And then sometimes you'll have those volatile weeks where, you know, it just goes all over the place, doji weeks. But most of the time, if it's a classic open low high close, open high low close, right? Like expanding week, not a doji week, but an expanding week, like a normal week, go to a weekly chart, right? You're going to get more candles that are expanding candles than you're going to get doji candles. You should have significantly less dojis on a weekly chart than you do just up bars or down bars. Now those up bars and down bars, the first wick of the week typically is going to occur around that negative 0.5 or positive 0.5. Then you'll get your expansion through the rest of the week, and then your closure on usually around like a Thursday or Friday closes out the week. But
Thank you.
Nothing on the scalps. And
Bowie.
clock hour back to the
Bowie wants your permission, Chris, to have you in a recording for the channel.
What does that mean?
Bowie's my so he trades out of London, but then he takes clips from the PackTV and then posts them on the channel. So he's just asking for permission.
Oh yeah, go for it.
Oh, MP is there. Chris, will you be around to show the noon curve? Well, we do have so if you guys see the schedule down here at the bottom, we have we're actually running late. So we don't have ambiguous hour today because Cody's out and PTFX is out. So we did this kind of extended session, but we have Bootcamp Focus session at noon with Justun. And that's where, like, if you guys have questions around the bootcamp, anything where if you are a bootcamp member and you want to bring your questions, bring them then. But Chris, you've been very generous with your time, so I don't want to press you into. You're just going to be here all day with me.
That's all good. I'll be probably hopping off here soon if this trade doesn't set up.
So what trade are you looking for now? Give us
just the run of the lows.
In here. Okay.
Run of the lows. I want to see price get down into this little pivotal low, get out of this 40 to 60% range. I would like to see some type of pivot up to get short on and run it to the low. Probably be like a 1 to 2 hour trade if I can get the setup.
Now it's pretty interesting. So, because fractally, do you do basically the same thing on an hourly that you do on the weekly, where you're looking for those 0.5 reactions for the wicks? Because I know you said you think in thirds instead of quarters. So is essentially like how I say the Q1 high of the higher low. Do you look at it as this is the first third, and then is it also reacting off the 0.5 of the hour? Is that how you find the wick? Like, how do you give me your brain or your mindset and how you use statistics and live price to find the wick of an hourly candle?
Yeah. So and it's the 0.5s, right? Your plus or minus 0.5s of any time frame are typically where your manipulation wicks are going to be set. So in this scenario, right, the 11 a.m. hour, we've not gotten into the plus or minus. We've just been consolidating around the open. Not ideal, right? If I'm looking for a short, I want to see some type of meaningful high bid, getting made that I can assume, okay, maybe the high is in, and we start to go down through that expansion. I pulled the numbers on this for any time frame. Your middle portion of any time frame is about 15 to 20-ish% that is going to set the highs and lows in that time box. Your first quarter or first third and third, right? The last third and first third. Those are your 40, 50%, right? So a lot more significant of a, from a time perspective, more likely to set highs and lows here and here. Now, where, right? Like the question is like, okay, I got the time, but what about the price? Those are your 0.5 pivots. If you go back and here, I can actually show you. This is going to turn on every past hour, like going back forever, how deep this chart goes back. So 9 o'clock is always a shit show, right? Volatile. And again, take into account that we're in an elevated regime. So market is going to be more volatile than the baseline 5-year. But that doesn't mean that you're still not going to get pivots. So going through the the overnight session, right? Whatever time frame we're in here, we're in 2 a.m. This is just a full-blown up hour. You get a 0.5 pivot here, consolidation back to the open, doji hour, right? You start to try to form a pivot, you don't, you consolidate around the 1.0. 1.0s is your closures, right? So think of 0.5s as your pivots and 1.0s as your boundary. If you look at any kind of like standard deviation math, right? So I can actually just pull this up. Z-score to percentile. Measuringu.com is one I like to use to show people this. We're one-sided because we're directional. And what is a 1.0? 1.0 equates to 84% probability. So if I'm directionally betting, we're going to go up, and that's 84 percentile, right? Or only 16% of hours of the 3 o'clock hours, because this data is gathered for every individual hour, right? Every individual hour has its own unique distributions. That's we'll see. Some of these are tighter, right? Like from the open to this 0.5 is tighter than from the open of this hour to this 0.5. And if you go into you can see it expands once you get into the like New York time. So every hour has its own distributions. But your 0.5s, typically your pivots, and your 1.0s are typically where you're going to get your closures within, right? So think about it as like, what's the hotkey for a region? Shift F2. So think about it as like prices most likely, and we're looking at just this 4 a.m. hour, right? So actually, let me just use a rectangle tool. Prices most likely to close within this box for that hour, right? But where is it likely to pivot? Well, it's most likely to either pivot, do something like that, or pivot and do something like that. But it's most likely to close within this box, within the boundaries of the plus or minus 1.0. So if I know that, I can start to go through historical charts. I can see my 0.5 pivots. I can see closures within the 1.0. Again, down in that 1.5, 1.0 pivots, closures within the 1.0s. And this is nothing more than price viewed as a rubber band, right? You're going to stretch it too far to where tension gets put on it, and it just mean reverse back. Now, occasionally, the rubber band's going to snap, and you're going to go outlier, right? And those are like these hours, right? But that's not the norm. That is not what happens most of the time, right? So in this scenario, the hour just broke, the rubber band broke, and you get closure up at the 2.0. That is not the norm, though, right? That only happens like 4% of the time. What would be the norm is closures within the 1.0. And so that's how I, visualize and understand how price moves. Is every hour has its own unique distributions. Any time bucket, right? Like a 3 hour, a 4 hour, a 15-minute candle, a daily, 6 hour candle. It doesn't matter what time bucket you put it in, but any time bucket has its norms. And I view on an hourly perspective because my trades typically don't last that long. Like I'm not holding a trade for multiple hours, usually in and out within, 1 to 15 minutes. But
yeah, that's how I am too. I mean, most of my trades are probably around that short of a time period, but it's those runners, man. Sometimes I'll be in a trade for freaking 2-3 hours if we're slow.
Yeah, it's that overnight session.
Yeah.
Pass on that. Just like to be in and out, man. In and out, get my money and move. Or
you can, if that thing's getting in your way, by the way, you can click the hide button.
Oh shit. There you go. Again, like we're 24 minutes into this hour and we're hovering the open. Like we're not going anywhere. This is not setting up to do what I want it to do to justify taking a short to that low. It's just not, right? I would want to see meaningful moves. I would want to see, price come up, give clear pivots that I can short from. We're not getting that. We're getting chop. That doesn't mean that this hour can't expand in the last half hour and push down into the 1.0s. Sure, it can do that. It's just not giving me what I need to justify taking a short, at least not yet. So.
Yeah, this is This is prime range 2 behavior right here, where it's really looking like it's going to entice you to take a continuation. Then we rip right to 930. Could be wrong, but I'm feeling in my plums, Chris. Feeling in my plums.
We're gonna rip to the upside.
If we get back above price level 680, that's when I think maybe we're in an out of character New York session here, and we're just going to range back to 930 and break a lot of hearts. But if we stay below that, if we stay below 680 even, that's Q1 high of 11 o'clock, then maybe this is just a late down move where Austin will be wrong. Well, that's my pivot. That's my pivot. If we stay below it, continuations, but where we're chopping right here, we took Q1 low. If we come back and take Q1 high, so you know how I told you earlier, like think about, okay, what would live price have to look like to make an expansive move that's above average price movement, right? Well, or above average, above median, whatever. So if you go, and this is anybody this is some free stuff right here. If you want to go and look at any doji candle, any hourly candle that's a small body and big wick, right? And when I say doji, I don't mean just a typical stereotypical small, like just looks like this, like a spinning top. People have different things. No, I'm just talking about a lack of follow through hour where the body is smaller than the wicks. And so the anatomy of that, if you study the anatomy of what makes a doji candle, the signature that most of the time occurs is when we wick both sides of the Q1. So, and we could be doing that right here, right now, where at 11:19, we took the Q1 low. So if you split the 11 o'clock candle into 4 even segments, you can see we took the low here. If we do then come back up here to 680, that's confirmed that we're in some sort of small body. So here's the open, and this would be what the body would look like if we take the high, and then the wick would be from here, and then wherever we make the wick at the upside. And so what does that mean? Well, typically we see doji start to form at reversals or swing points or whatever. And so if that doji signature does happen, then that's confirmation. So why am I saying if we get back above 680, do I think we get to 930? That's why, is because then the next hour, I would want to see if we form a doji candle, 12 o'clock, take 11 o'clock high and reverse. But if we continue to the downside, I want to see us close. So you can put this on your screen, Chris. The 587.75 will be where Austin is either right or wrong for continuation. So that's my that's my pivot for continuations to the downside is 588, and then a reversal to the upside would be 7969680.
Gotcha. Yeah, I don't like this hour. I don't like the choppiness we've had for the first half hour. I think I'm gonna hang up the idea of noon curve lows. Now, that doesn't mean I can't shorten long with scalps, right? I'll still take those if they present. But the remainder of the day for me, the next 30 minutes, I'm going to resort to scalps, right? If we get any meaningful pivots, right, big moves away from the mean and that I can catch for a quick 1R, that'll be what I'm targeting. But not liking this chop. It's not setting up for the directional indication I need. It's not doing what I want to justify taking a short. Doesn't mean that it won't come down and take that low. Probably will, but it's not giving me what I want, and it's Monday, and I'm not in any rush to take trades today.
I respect that, dude. And sometimes it's like that.
Sometimes it be like that.
Listen, we all wanted Chris to come on here and be a furu, take a nice furu trade, but sometimes it's just, let's be patient. And that's fine too.
See if we can get some scalps, though. I think we're going to get a couple more before the hour's up, especially when you can start getting down into that low.
That's what I'm saying, dude. Like, it's still showing continuation signs on this hourly candle. It's just ugly. Like,
yeah, it's not
expansive.
It's definitely not expansive.
Like this close right here at 30, we got 30 seconds left on this 1 minute candle. So this is how I kind of read continuations off of the potential wick being made. So and this is where I like to take scalps too. If I were still trading today and I were to take like a mean reversion or a continuation scalp, this would be what it would look like. Is we have a bearish confirmation of the day. So then if we have now a bearish confirmation of the hour, if this Q1 high is locked in, you see this 10 basis points right here. So we still have not made a single body close below it. That would be my scalp for a 5 to 10 basis point trade, because where does this 5 to 10 basis points come from? Just like how, Chris, you use the 0.5 standard deviation. So for me, my 0.5 standard deviation is 5 to 10 basis points off the 5-minute high and low. So because now we came into this 10 basis points right here, if we reject it, this is live price telling me statistically this may be the wick of a doji. If we close through it, this is telling me we are in the body of a bearish hourly candle, and maybe we make a new low in Q3 to Q4, and that's where your low gets taken. But we still can't even close below it. And that's just a statistical calculation of where most of the wicks are made. That you'll see most hourly wicks from a price percent standpoint is around 5 to 10 basis points. And then you guys got to see Chris today. Chris showed you guys from the standard deviation standpoint that he finds in his research most of the wicks are made around that 0.5 standard deviations. That's so cool to see. I really enjoy this.
I want y'all to go back to the recording and count how many times Austin says statistics.
Dude.
Bet you it's at least 200
5
times. 200 times today.
At least 5.
But yeah, garbage hour so far.
Yeah, why'd you bring this bad price action, Chris?
I don't know, dude.
Bad price action. That's what we love. That's my favorite word. All right, let's see. We got 10 seconds left on this candle. Do we finally close below this 10 basis points where it's price-wise? That's 597.25. Let's see. 3. Oh my God, are we literally going to? We're closing right on top of it. We're closing right on top of it. Look at this. Closed right on top of it. That is funny. That is funny. Look at that. I love this stuff, bro. Take a shot at tequila every time he says statistics. Listen, guys, I'm borderline autistic, all right? I've told y'all this many times.
Alcohol poisoning by 8:30.
What word should I say instead of statistically? I'll just say I'll use fake terms. I'm gonna call every probability from now on is just going to be a liquidity level. I'm calling it liquidity from now on. This liquidity high has a high liquidity of taking this low, and we took that liquidity here. And so now we left this liquidity. And if we stay above this liquidity, we're going to the liquidity of the time, take this liquidity high. Liquidity. That'll get some of the algos going.
There you go. It is 11:34, and we are still in the range set within the first 5 minutes, pretty much. Not ideal.
Oh, are we gonna get a close? Oh, we closed. Oh my God, like 1 point, but we closed. We got it. We got it right there. One by just a point, maybe 2. So there's the close. That's my confirmation I need to tell me that we're maybe in the body of a bearish hourly candle. And that would be that little signature I would need to say, okay, now maybe we come for that low that Chris is talking about. Second, I'm trying to attract all the other people that come. People don't listen to Mick and I unless we say order flow or liquidity or breaker or any term that has to do with something that's not actually proven to be what it is. If you say liquidity 3 times in a row in a mirror, I see team in the oh God. Dude, that's funny.
That guy. Is that guy still doing his social media thing? I thought he like quit social media.
Well, which time?
I don't know. I thought he quit for
Which
good.
time are you talking about?
I thought he said a couple months ago or whatever, I'm gone for good, bye, or something like that.
Yeah, he's back. You gotta get that liquidity, bro.
Dude is master marketer. You want some YouTube revenue, make 2,000 videos showing your strategy and put 1/2000th of your strategy in each video. So they have to watch all 2,000.
Endless loop. Because every 5 to 10 years, you're going to have new traders, right? You're going to have like a new generation of traders.
You just call it the 2027 model.
This is a good topic, Chris. What is your view on when people say the market conditions have changed? When you hear the term market condition, what's like your knee-jerk reaction to that?
Well, I mean, I view market conditions.
Do you view it as like volatility? Do you view it as like price level getting hit? Like, what is your
volatility has definitely gotten larger. The ranges we're seeing today are much greater than they were a decade ago. But price is still moving in the same way, right? It's still going from periods of condensed to expansion, and from expansion back to compressed, and nothing has changed. It's just in Q 10 years ago was trading at what, like 10,000, something like that, 5,000.
Different price levels.
Yeah, now we're at 30,000, right? The moves are bigger. Percent wise, you know, a 0.1% move back then was, I'm just guessing, right? Like a 0.1% back then was 5 points. Now it's 50 points. We're just in a different time. It's not necessarily that the market conditions have changed. We're in a state where more people have access to the market. AI is now a thing, right? They got rid of T3. Now it's same day settlement, and you got 0-day options every week or multiple times a week, right? Like the landscape has changed. So yeah, I think conditions have changed in a certain sense. But like the market is still doing what it's done for 100 years, right? Like it's people that were trading back in the 50s. The same concepts and same strategies are applicable today. It's just that now the market is a little more volatile.
Yeah.
I
think that's the lost and I think that's what causes a lot of like just disagreements is like we're all saying the same stuff. It's just the terms, right? Like it's the actual term itself. And it's like market conditions. Well, we got to define what is a market condition. Is it volatility? Is it just how much price is moving? Is it the way this daily candle is being built? Are we just doing out of the norm movements? I don't know. Like it's always this like weird vagueness of when people say, well, market conditions are changing, but okay, well, let's be specific. What do you mean? Because when the newer trader hears somebody saying the markets are different, they think that it's, the way the markets are moving, like, oh my God, the way the price goes up and down is different. But I can definitively show you, and Chris can too, statistically, the ebbs and flows are the same. It's just how we get from point A to point B, aka volatility, that changes. And that I agree with, right? Obviously, like that's provable.
It's also perspective too. Like when they say the market conditions are different, what time horizon are they looking at? Like in the last 3 years, like, yeah, we might have went from a period of trend to a period of volatility. If you were pre-COVID, if you started trading like right before COVID, and all you knew was uptrend, buy the dip, right? The market was just going up like every day, and then COVID happened, and now you're in this new thing you've never seen before.
Yep.
Makes sense that you would say the market conditions are changed, but there's always periods of trend, and there's always periods of high volatility. Market crashes are nothing abnormal. Got market crashes going back to the 50s.
Just normal volatility of the market.
.5 pivot, current hours low. Just happens to happen way late in the hour. All right, I'm gonna hang it up unless we can. Oh, looks like we might be setting up for a little scalpy scalp here. Let's see. We got Foreman up here. 1104.
What's up?
So we might have a little scalp opportunity here. We'll see.
Okay.
For a 1 hour.
Looking for a short to this new low?
Nope, just a 1 hour.
Oh, just a 1 hour. Okay.
Quick scalp. Just taking advantage of the expanded volatility we got going on. We're in a expanded regime, right? I've already covered that. Now, at this exact moment, we are in a expanded price leg. So what I want to see, I don't want to try to short right before this high. That would not be smart. I would like to see this high get taken and then a sharp pivot back down. No. Is it going to give me that? I don't know. Hopefully.
We have no wick on that candle either. That's something I always find very interesting is any candle that doesn't have a wick, because, OHLC typically form wicks.
This is going to be a bust. Shift is already happening before the high. Blech. Not getting anything today, man.
Hey, it's all good. We show the realities of trading, bro.
See how this theoretically plays out, though. Had I taken it before the high, let's see how it plays out.
Brooks says, how did they really keep track of all the trades back in the day? They show in old movies guys running around with a pad in their hand, writing down the trade being yelled out.
Back in the day, the only information you had was daily bar data. People drew their own charts, right? So they would draw their own candlestick charts. Candlestick charts have been used for thousands of years, going back to like ancient, Asian culture, right? That's where candlesticks originated for trade. But like in terms of U.S. economy, people were drawing charts on graph paper, right? The newspaper would print today's open, today's high, today's low, and today's close. There's your daily bar. And that's what people would draw on their graph paper and make their own charts. Now with that, you can apply math, and right, you can have moving averages and RSI and some of those old school indicators that have been around forever that just use bar data, right? The open, the low, the high, the close, and volume. So like newspaper would tell you Today's open was X. The high was X, the low was X, and 1,000 barrels of oil was traded. So it gives you the information you need to make a daily chart. That's how they tracked it for decades until the market went electronic.
It's pretty cool. Yeah, they did a lot with, was it rice? Grains of rice?
Yeah,
That's what started this whole thing.
Yeah, all commodities.
Yeah, and I think what Brooke, you're talking about, like the floor traders, like with those pads. I don't know necessarily. That's a good question to ask somebody that has that experience. But I remember listening to one of these floor traders talk a little bit about like what they would do, and that's where like they would put their orders. So like if they, you know, because they got different hand gestures for like, are they buying, selling, how much are they closing? And so like that's where like they would balance their books, right? Like at the end of the day, they would, this pad would basically be their P&L of orders, and then those orders would be what, you know, balances the books. That's how I perceived it. I could be completely wrong, but that's how when I was listening to the explanation of those pads, when they hold those pads, that's what I'm thinking those pads are, is they would write down like, oh, okay, you shorted NQ. Okay. Cover 2. Okay. Then you're writing that whole thing on the pad. So at the end of the day, when they, you know, see all the orders, that's how the book is getting balanced, balancing the budget essentially. If anybody here knows any more about that, because I'm actually a super big nerd about that stuff, I would love to know more. Do you know about that, Chris? The pads they use? Don't let me interrupt you if you're looking for a trade. I don't want to distract Chris. He's locked in right now. Does anybody have any questions about anything we did today? We did kind of an extended PackTV for the New York session. This is really fun. I've had a good time. I have a good time talking to Chris. I like talking to traders that not really speak the same language, but just have the same level of mental maturity about trading.
I think it just boils down to just defining your own process, right? Like defining your process. What are you doing before you get to the charts? How are you setting up your day? How are you executing? How much risk you're using, right? What's your entry criteria? What's your entry triggers? How are you going to manage risk? Right? What are you doing at the end of the day? Just having a full defined process.
Do you live a disciplined life, Chris, or do you kind of, you know, just I won't say do whatever, but like, do you have things in your life that you commit to being disciplined to more often than not, other than trading, outside of trading?
Yeah, in real life, man, it's like coin flip.
Yeah, because I've noticed it's kind of like an either or. There's no like gray area. Profitable traders.
Gray area.
Go ahead.
I would say I fall in the gray area.
You fall in the gray, yeah.
Yeah, like not everything is discipline in the real life, but trading it has to be.
Well, it's like some traders, you find that they use all of their mental discipline on the charts and then they're complete jack wagons off the charts or whatever. But then
I am, dude.
Some people like, dude, that they just have to build their entire life to be the same way they want to be in trading. So I think it's also different personalities too, you know.
All right.
Here's your short.
I'm actually gonna be looking for a quick 1R if this sets up for a long. I want to see that low get busted first. So watching as this pulls away, right? This trend oscillator pulls away from the mean. I want to see the low get taken, which it just got taken. Now what I want to see is price not immediately zip up. I want to see it form on the oscillator so I can actually get long.
There you go. You got your sweep.
Yep. So just waiting. This is
now, are you trying to trade this sweep? Don't let me talk. Go take your trade first.
Oh, go ahead. I'm waiting for it to form.
Are you taking this sweep for that? You know how sometimes we do those noon curves like you're talking about where we do the pullback to then continue? Is that what this idea is essentially? Like we now took that low, let's pull back to set up for maybe a new low by PM?
Nah, the noon curve idea I'm done with, just based off how choppy 11 a.m. hour was.
Gotcha.
Yeah. This will be a half hour risk. Well, it depends how high it gets. Might do. Yeah, we'll do a half hour. Let this play out. Wait for that to show me that trend wants to change. The short term, right? The immediate price movement. There it is. All right, let's see if we can get a fill. We're in on 5.
That tool? Is that tool you were talking about? Just did all your risk for you?
Yeah, and I'm gonna take full exit at 1R. If this pays out, cool. If it doesn't, it's just not my day. Don't need the tool on there anymore. Already got the orders in. Be a little more aggressive on my stop movement here. So I will be trying to go break even probably about when we get to 75% of the way there. So we get about there, I'm gonna go break even.
What price target is that, Chris?
My 1R is at 633.
Okay, I think you got a good target. Yeah.
Break even is at 621.
Because I'm looking at the opening price of 1145. Because now that we did this low, I really like Chris's trade because we made an in-stat low of this hour. So now in the Q4 hour, if we did what we statistically need to do, we typically like to see those prices retrace back to the open of either the hourly candle or the 15-minute candle. So the opening price of the 15-minute candle is 648.75, which is way above Chris's target. So I dig this.
If it hits, it hits, and I'll be neutral on the day. If it ends up being an L, then I'm negative 1R for the day.
Stupid pirate.
Arr. Arr.
Come on, baby. Let's go, market makers. We need Chris to get his Furu trade in.
See if it happens.
Who is this?
Not looking good.
Yeah, Second's asking about Sergeant's time training today, guys. If you are in the Pack Trade group or the boot camp, if you're not even in the boot camp Pack Trade group, one little mentorship piece of the Pack Trade group we have is called Sergeant's time training. So I let the Pack members book unlimited amounts of hourly sessions with me between the hours of 12 to 13, between Tuesday through Friday. Anytime, you got an hour, you can pick my brain, you can ask questions, whatever you need, a part of your strategy. And so, yeah, we don't have any today because it's PackTV, but we got 2 this week. And then we do them as a roundtable discussion. So we don't do them in private on a one-on-one call. We do it as a one-on-one, but in a group setting, and that we all contribute to the conversation. So I'm not licensed to give financial advice. I'm not licensed to give trading advice. I just tell you all what I do, and I share with you all the tools that work for me. Super special, Spartan.
So the whole point of this scalp, right, is not to get into a trade where I'm having to hold for an extended period of time. It was I'm trying to leverage the regime we're in. I'm looking for snappy trades coming out of a deep, mean, expansion, looking for that quick reversion. It's just not giving the follow through to the upside, right? So is what it is. Let's see if I can take this off, get some points back, reduce my risk, and just get out with a 0.1%.
Holy, it's a freaking hurricane outside. Jesus. Is there an anniversary event? Man, we dropped the ball with that. I'm not even gonna lie, guys. Yeah. Oh my God, dude. This is actually, we just hit it. Chris, you were on the PackTV session where the pack has officially been 3 years old.
Closed.
You closed?
Yep. Negative 0.6 R on the day. That'll be it for my day.
You had I mean, it was a good setup. You had a lot of.
Just the follow through is not there today, man. It is what it is. Still got the whole week.
But yeah, we dropped the ball with that ultra. I do apologize. But Chris, let me not take up any more of your time, dude. We got 4 minutes, and then we're going to move into bootcamp focused. One thing, because last time you were on here, I asked you what like it would be one piece of advice you give people. This time, I want to ask you even more granular. What is one piece of statistical advice, like for the aspiring statistical-based trader that's super new, very little experience, but wants to get into statistical-based trading? What would you tell them is something that could lead them in the right direction?
If you were brand new to statistics and you're wanting to get into statistics,
like common pitfalls that they could avoid or common tips to use them.
You gotta get past the entry wall first. So I would say get into a chart, and if you see things that you are viewing as a potential pattern, like this is how I got started, right? I saw things, right? I saw things that appeared to be recurring patterns. And then I was like, okay, I mean, I've been coding since high school. I'm good at math. Why don't I try to apply some of this to the market? So I started coding, scripts to pull the data I wanted to see. Like, if you have no coding background, excuse me, if you have no coding background, it's not an excuse, right? AI, send it, get a data file and send it to AI and tell it what you want. So that not knowing how to code is not an excuse. You're just being lazy. So, but if you want to get into it, you first have to have an idea to test, right? So come up with an idea, and you want to know how often, if this happens, how often if A happens, how often does B happen, right? And that is going to send you down the rabbit hole of statistics, right? You first have to have an idea that you want to test. And I guarantee you, once you start testing that idea, it's going to spark more ideas. You're going to learn more things. You'll start learning what mean is and median and MAE and MFE and mode and all this stuff, right? You're going to go down a rabbit hole of information. But you first have to have at least an idea to test. So if you're looking to get into statistics, have an idea, right? Is there something you notice that happens more frequently than not that you want to know? How often does that happen? And then go from there. There's a lot of nuances, right? Like if you're coding strategies and stuff, I wouldn't rely on AI for back tests because those often could be very skewed. But AI does a really good job on just data crunching numbers. Where it fails is crunching strategies. It has a lot of nuances with forward biases and data leakage, etc. It does not do a good job at performing good back tests and those being accurate, but it does do a very good job at crunching numbers. So that would be my advice, right? Just come up with an idea, go down the rabbit hole. There's no single source that I would say go to this site. It'll tell you everything you need to know. Go to this guy's YouTube. It'll tell you everything. There's nothing like that. You'll learn the best just by going down the rabbit hole on your own. That's my advice. Come up with something you want to test and just go down the rabbit hole.
Go down the rabbit hole. We got some questions here to round it out from what you just said. NP Bait, is there any good repos with historical NQ OHLC data? Now, before Chris says it, I will tell you, I love Data Bento, and you can even see Super Special Spartan just said that. Data Bento gives you 150 free credits. I love Data Bento. You can literally get like 5 years of NQ data, ES data for free. Like with that 150 credit, you put in your credit card, sign up. You can have like $150 worth of free data, OHLC data. What would you say, Chris?
So, I mean, I'm on NinjaTrader, right? I have the CMA data bundle for $12 a month. Gives me access to all gold and oil and all the CME products, RTYYM, et cetera, right? But if you just want NQ, just buy the NQ data package for $4 a month, right? And if I just duplicate this chart, I'll show you what $4 a month gets you, right? Take all these indicators off, This is a 1 minute chart. Somebody type in the chat what kind of interval you want, like what time frame you want. Just anybody. First one to respond wins.
You're not getting anything from me. His name's OHLC. That's funny.
Who had the question? Who had the question of
NP bait?
NP bait. What's the time frame? 5 minute. Okay, cool. 5 minute. You win. 5 minute chart. I want to see back from today's date back 20 years. So we're going to go to 06. 5 minute data. Oh shit. This is an NQ. This is MNQ. MNQ didn't exist back then, I don't think. Let me change this to NQ. So let's change this to NQ. And then we'll remove all the indicators. We'll change this to 5 minute data. We'll set the look back custom to 06, 20 years ago. Apply. Okay, it's going to load. Up here is loading. This is what $4 a month gets you. It'll load, right? It's just going to take a couple minutes to load, but this will give you 20 years of 5 minute bar data. Now, tick data. Tick data, on the other hand, I think NinjaTrader only goes back a year for tick data, right? Like if you want tick data, every individual tick included in the data export, I think it only goes back a year. So if you're looking for tick data beyond a year, you'd have to go through some, third party. But just baseline minute data, I don't think you can find cheaper than NinjaTrader, man. All these third-party data providers, $100 for 10 years and all that. Like NinjaTrader, it's $4, man. Look, there, it's done loaded. I'm gonna slide this all the way to the left. 6/22/2006. So I have 5 minute data from June 2026 or 2006 all the way to present day. That's $4 a month. So if you can find something that gives you 20 years of 5 minute data for cheaper than $4 a month, you let me know.
Now, can you download that like TradingView, where TradingView lets you download the chart data?
Absolutely. I have a script that I built. Chris stats. Oh.
So you can build an actual script that just scrapes this?
Yeah, print the CSV, right? And what that's going to do is it's going to print the open, the high, the low, the close, and the bar date, the timestamp, right? So it's going to give me the date in column A. It's going to print me a CSV file. Date in column A, time in column B, open, high, low, close. And I can add whatever other variables I want, volume, the current RSI value, like whatever I want. But that will allow me to print it to a CSV.
Dude, that is dope. That's actually, I didn't even know you could do that. You just gave me a bunch of ideas now. I think you just probably, there's 48 people listening right now.
Yeah. Here, look.
That was insane value that everybody needs to listen to.
Here's a NT data file 5 minute. This is what it looks like when I print to CSV.
That's pretty cool. Didn't know you could do that.
Yeah. So,
well, there you go, guys. Don't even use Data Pinto. Go get a prop firm, get some data, or just pay $4, whatever. All right. Is there any other question? So we got 48 people in here. So guys, as we go through this bootcamp focus session that we're about to, if y'all have anything, drop them in the chat and we'll just get to them while we're also going through James's questions. And you don't have to be in the boot camp. You can be a free viewer. If you want to understand anything, if you guys see my screen right now, we have the gunship currently on and activated. So we had a lunch break short. You can see right here, we had a front run. Front run took us to the downside. Cash flow has already gotten hit. And so now we're just looking, and this is the algorithm. This is the gunship algorithm here, and we have it printed on the chart. All right, we got Mr. James Meeks. So we're going to roll the intro and let's get right into it.
Did you find value in the Bootcamp Focus team?
All right, we don't have an intro. You guys see that? I guess the intro's just gone. I don't know what's going on. I don't know what happened there, so we don't have an intro all of a sudden. All right, let's get Mr. James Meeks in here. What's up, James?
What's up, man?
How you doing? How you doing?
You know, just surviving.
All right, so one thing we love to ask everybody when we kind of get them on any sort of like stream like this is, what is your honest opinions, criticisms, anything when it comes to the boot camp before we get started?
Well, honest opinions is I think the boot camp is great. Number one, the videos are spectacular. The problem I have is that, you know, when you're watching the videos and you don't really have anybody to give feedback to, right? It's really hard to just stay focused. So you may get trapped on a video that keeps you, you know, stuck for that time, you know?
Yeah.
So the best thing that's happened is like these live sessions with people that you can get into and talk questions. And since they've been through it already, and they can really help you navigate the certain part you're held up at.
Yeah.
So,
well, and that's kind of the main thing we wanted to create as a community, right? Is like you get the baseline information, but then you get the gaps kind of filled in as well. Do you want to really put in the work? If so, well, hop in the sessions with other people that are in the same kind of level as you are,
right?
And you guys can kind of feed off each other a little bit, right? Like I'm sure you probably found something that was like, oh my God, this is easy, but then something else is difficult, like we're about to get into. And then vice versa with somebody else, you know? So that's
100%.
Kind of the environment where you can really grow from.
Yeah, 100%. The videos are super helpful. I mean, I think it's just, you know, getting the context down, getting through them. And then once you get through them, then you can go out and brainstorm with other people. I mean, if you get held up, I think you don't want to get held up for too long because you want to continue on because there's so much information that just jot it down in a chart and say, hey, this is what I had trouble on. This is easy for me. And then the next thing is you're just sailing with the boot camp members.
Yep. Going through it together. All right.
Yeah.
So what can I help you with? You said you had problems with MAE, MFE. Let's get into how we can clear that confusion up.
I mean, to be honest with you, I was just talking with Connor a little bit about it, and he's been a great help since I got into this. But you know, I think my thing is just visualizing, and I think I may have found something sweet that I didn't see before after putting it all up, which was a good thing to talk about today. So,
yeah, you want to share your screen, or you want to?
I can share my screen.
Okay.
Let me see how to do this.
It's just like Discord. There's a little button in the middle on the bottom.
Yep. See if it pops up.
See here. There we go. I got you.
So basically what I was having trouble with was visualizing this. This is a 12-hour candle from the 6 a.m. to the 1800, right? And my thing is visualizing that 12-hour candle before it happens.
Okay.
So I know that, you know, when we replay this back to here, right, and we open it up and we have you know, this whole thing open up, right? At this point, you know, we're trying to see where the 12-hour candle is going to go and finish and do all this stuff throughout this time period.
Right.
You know, with this opening up with the MAE on a green candle being at the bottom, there was no wick on this candle this morning, right? So, you know, there was nothing I could predict from just a 6 a.m. candle. But as moving forward, as time goes on, you know, we still have this. We don't really know which direction the market could go. But on this 7 o'clock candle, you know, with this huge wick pushed up, right? I could, and this little wick down here, I can confirm that this could be my MAE until I get into a point where I see, you know, and this could be the MFE, right? So, you know, at what point, my biggest thing is like, if I'm going off this, you know, I'm trying to predict the market direction, right? Along with other confluences that are happening in the market.
So let me stop you right there. So that's the first thing that maybe you're kind of coming at this the wrong angle, is we're not ever trying to predict, ever.
Okay.
We never have a bias. We never have a one direction of the market. We never try to predict anything, because is that blue box right there? Is that 100% probability that that's the MAE?
No.
Exactly, right? There's another side of the probability. So what do we use, James, to allow us to know when the statistic is being realized? What's that one major component we talk about?
You got me at a standstill right now.
So if statistics are below price, do I just go short right away?
No.
What do I wait on?
You wait for the statistics to happen. I mean, because here,
what words are very important. All
Yeah.
right. What do I wait? What do I wait on to confirm? Somebody in the chat, help them out. What do I wait on to confirm that a statistic is now going to most likely be hit?
I need the most help I can get, guys.
It's all right. It's all right. You're in week 5, right?
I'm on like week 4. I mean, I got
Week
6 last
4,
week.
yeah.
I mean,
so come on, somebody help them out. Somebody in the boot camp. There's a little bit of a delay, so we're going to have like this awkward 10-second delay. Live price. Does that sound familiar?
Yeah.
James, right? So live price. So that's what we do. Is this is what gets a lot of people destroyed in trading, is they think that trading is about solving which direction price is going to go. That's not it at all. Mm-hmm. Yes, we make money when price is favorably going in the direction, but the system and the decisions we're making, at least from what we do in statistical based trading in the community, is we look at both sides of that probability and let live price tell us which side that probability is being realized on. So if you're telling me, well, then I'm having trouble understanding if is this blue box right here, essentially, let's dumb it down to the dumbest name possible. This blue box, is this blue box resistance, or is this blue box going to keep on telling us we're in the body of a 12-hour candle? Well, what do we have to work with? Because you're in week 4.
Mm-hmm.
So you have or have not went into the boot camp yet?
I have not.
Sorry, not boot camp, daily profiler portion.
I have gone into the daily profile a little bit.
Okay. So then I'm gonna test your knowledge here. What is the 4 major times price makes a high or low of day?
We got the Asian session.
Which is what time specifically?
1800 to, let me see, I got it right here. 1800 to like 1900.
Okay, that's statistic number 1. Statistic number 2 for high day, low days. Which one?
London session.
London session. Then if neither of those are in statistic, what's the next checkpoint?
New York 1.
All right. So now right there, well, not New York 1. Be more specific, time wise.
Oh, the 7:30 to
nope.
8:30.
Is that what the daily profiler says? High day, low day?
No, it says 7:30 to 11:30.
Let's get a little bit more granular. So if you go to the daily profiler, reset all your filters, click profiler.
Yep.
Tell me what the majority, if you look at that high day, low day table, what is that table showing you? Is so you just said it correctly, 1819, you said that 3 to 4. What's that next major uptick in that distribution table there?
Give me 1 second. It's logging in.
No, you're good.
Okay. Okay, so I have the Asian session, right, in the daily profiler.
Yep.
In the Asian session for me, it says 1800 to 2:30.
Well, that's include here. Let me. I want you to see what I see. So I'm just going to put this on my chart. You're looking at a different metric here.
Yeah, let me see if I gotta.
All right. So just this is what I'm referring to. Just this high day, low day chart right here.
Mm-hmm.
Okay. Within just an hour time, because if I had, a 7-hour runway of a high day, low day, well, yeah, that's going to be right most of the time, right? But if I could just dwindle down these chunks of time into an hour.
Right.
You just said 18 and 19, which covers, you see how this giant uptick of distribution is here?
Yeah. I
want you to visualize these bars. Think about it like this. These bars are like little tallies. And if you could visualize this chart being built over the course of 4,000 days,
mm-hmm.
all it's doing is just adding a tally to every time the high day, low day was made at this specific time chunk of
Correct.
and each of these bars are 15 minutes.
So then we're looking at 9:30. Yeah, okay.
9:30 to what?
To about 10:30.
10:30. Now, what's the final time?
Final time is around 15:30 to, yeah, around that.
Yep, end of day, right? Power
Right,
hour.
end of day, right.
So now let's go back to your chart. Go back to your MAE that you had a issue with. Now, what I just told you.
Mm-hmm.
Now I want you to tell me, well, how do I know? Because we just went over it. How do I know that MAE
From these histograms down here.
which is what? Is it price or time?
This would be time.
Time. So look
Yeah.
at that current time that we're in of that blue box. What time is that?
Oh, it's 8:30, and there's not much data down here on that at that time.
So when's the next data?
Right there at 9:30.
All right. No, so now we got the statistic. All right, we're cooking. We're cooking with freaking peanut oil and every other expensive oil. I don't even know what's that expensive oil they used.
Olive oil.
No, what's that? It's freaking some type of fat. I don't know. It's a really expensive fat they use.
Ghee.
Ghee, that weird, nasty looking crap.
Yeah, exactly.
All right, we're cooking with ghee right now. So
we're still not in the range. I mean, we still have no data, but then once we hit that 9:30 candle right here is saying that our MFE or MAE could have been put in.
Yep. Now, what do we use to now not blindly just take the short? What do we use?
Live price.
Okay. Now, what live price component at 9:30 can allow us to now see where this reversal can most likely take place?
The 9:30 candle.
Dude, you're freaking. Let me just print your graduation certificate.
This is all new to me, guys. So don't take it with a grain of salt. So when I get into this 9:30 candle,
yep,
right, this action on both sides. I mean, I was sitting here watching it.
Yep.
This action. I'm not taking any trades yet. And I won't take any trades until week 16 if I make it all the way through with flying colors.
Good.
No, but what I did see though is that once price did break above the 9:30, right? We closed in price at the end of 10 o'clock. Price was there. I mean, this is the way I think though, based upon this 9:30 MAE, right?
Mm-hmm.
At 10 o'clock, that this candle right here now gave me a higher probability chance of taking a short trade, because this was saying that out of the 21 days out of the last 76 days, we have made an MFE at this time.
And Jay, tell me what 10 o'clock did that you learned in module 1. Tell me what 10 o'clock did from a live price perspective that confirms everything you're saying.
10 o'clock's Q1 took out the 9 o'clock candle.
All right, did the sweeper.
Yep.
Number 1. All right.
And then it created an instat high within the first quarter of Q2 created an instat high right here.
Yep. Well, Q1 took an instat high. Q2 took a Q1 low.
Yep.
Now, what do we use to tell us if we are in the body of the wick of an hourly candle?
What do we use if we're in the body? Well, okay. Go ahead. Say that again.
What tool do we use to tell us if we are in the body or the wick of an hourly candle? Somebody help me out.
Help me out.
And while we're waiting for answers because there's an awkward delay, dude, the funniest thing just happened in the chat, and I didn't even put 2 and 2 together until I just heard you. Is this Shane Gillis?
It could be.
Are you trying to make some side money with your comedic career?
Not yet.
Dude, you sound just. You can tell me I mind, and I won't. Do you mind if I ask you where you from?
I'm from Rockville, Maryland.
Okay, Rockville, Maryland.
Yeah.
Dude, I was stationed in Bethesda before I got out.
Walter Reed.
Yeah, well, Rare, not the hospital, the research lab.
Okay. Yeah.
Yeah, I got property in Pasadena.
Oh, nice.
Yeah, I got some rental properties there.
Are you're not around here anymore?
No. I
Thank
moved out
God.
when I got out, but
Yeah, I'm about 10 minutes from NIH Walter Reed.
dude, we were neighbors, bro.
We were.
I lived in Silver Spring
Yep.
for a year and a half. There's in Silver Spring that apartment well, there's probably 2 or 3, but
I'm going to tell you where I lived in Silver Spring. It was White Oak. It was in the towers.
get out of here.
I swear to God.
What year?
2000 and I think that was 2008, 2009.
Oh, then never mind. Okay, this would have been 2020 to 2022.
Okay.
So,
I heard Mike Tyson owned those things.
Oh, really?
Yeah.
That's funny. Yeah, I did. I had to get out of Maryland, bro. I don't know how Maryland pride you are, but I had to get out of that. I had to get out of that place.
It's too liberal for me, but that's just me, and I'm allowed to talk like that because I support my values and my.
So you are Shane Gillis. Yeah, dude, I'm the same way. Like, dude, I love my guns, and buddy, when I go there, so fun story, and then we'll get back to the bootcamp focus. When I first moved there, because I had weapons, right?
Mm-hmm.
And I moved there from Fort Bragg, North Carolina, completely different environment. I was in a combat medic unit doing, cool guy outdoor stuff. And then I got put in a cushy lab, right? Well, when I go there, I'm like, how do I open carry or conceal carry and, keep my car? I call the conceal carry permit number because I was on the portal. Yeah. And it wouldn't let me move past. There was a part of the portal that said, can you please upload documentation proof that you need a concealed carry? And I was like, well, I can't get past this part. Like, I don't have proof. I just want to freaking apply for it. And I called the number and she was like, well, no, you have to have proof. Like, you have to have like a police record of being attacked or stalked or something, right? Or you have to have
money.
Or you have to have a job that requires you to have a weapon. And I was like, well, I don't have either. I'm in the military. I'm active duty, but I just wanted to defend myself. And she was like, well, I'm sorry, you can't have it. And I was like, so let me be straight. Hold on. I was on the phone. I said this verbatim. I said, so I have to be attacked to then be able to defend myself. And she said, sorry, sir. That's the policy. I lost it. I was like, nope, gotta get out.
You should have staged a fight.
That's what I'm saying. I should have put on Facebook Marketplace trying to earn my concealed carry permit, $50, and just punch me in the face somehow.
Yeah, exactly.
All right, let's get back to it. So we took the 5 to 10 basis points. Jason helped you out here, right?
Yeah.
This is what lets us know we're in the body or the wick of a candle. Do you see how when price broke out of that 05 box there, what was that? 10:07?
Yep.
Give me that exact time. What was that?
10:08.
10:08. So at 10:08, do we go false or true more when we break out of that 10 o'clock 05 box specifically?
False.
Okay, so if we broke above the 05 box and we're rejecting the 5 basis points, you see that 5 basis point rejection right there?
Yep.
Statistically, the wicks of any hour are made between 5 to 10 basis points. So now aligned with your 12-hour MAE, right, or your higher time frame perspective, now combined down to the 5-minute time frame to inch or 1 minute, whatever, your smaller time frame.
Yep.
Now we can see the anatomy of where that MAE is most likely being set. Is it with live price? Does that make sense?
Yep.
And now I challenge you to just I tell every bootcamp member this, to solidify this learning that you just did, to like really make that neural connection. You got to go do 50, 100. You just got to do reps of this sequence, right? So just start just put that MAE indicator, Jerry's indicator on your chart, combined with your analysis that all the way, how to now read live price, right? Your quarters, the 5 to 10 basis points, your 05 boxes, your previous hour high, low, mids. Now how to read price, and how to understand the statistics of the high day, low a day, and you now know the understandings of the MAE, MFE of the 12-hour. Now you just got to put it all together and see what it looks like when everything clicks. Like today it clicked, right? But there's going to be days, James, where you're just going to be wrong. Like that's what people in the education space of trading don't want to actually admit. I will admit, sometimes our tools just get it wrong because that's trading. But when you are able to align positive risk management with statistics that over the grand scheme of 100 trades are going to be accurate, you're kind of baking in that consistency. You know what I mean?
Yeah, yeah.
So all you got to do is be okay with sometimes, dude, I'm going to be wrong. Like I don't know if you watched me trade today. I got stopped 3 times before my runner hit, but that just is what it is. Sometimes it's like that.
You're going to take losses.
You're going to take
a loss, you'd be a perfect human being.
Exactly.
Yeah.
Or if you're Shane Gillis. Shane Gillis never loses, you know?
Yeah. My wife's always right.
Or if you're a wife, if you're a wife, that's it. Or IRS and the wives.
Her to trade.
We actually do have a married couple in the community. That's funny.
So here's my question also. It's like I'm doing this replay on the 6 o'clock on Thursday, right? But my chart's not showing up.
Let me see here.
Is that, I mean, it shows up back here. Shows up here. But when I hit a live replay, it doesn't. Let me see if I can't reset the chart. So it pops up on every 6 o'clock. I mean, I guess I can.
So you're saying if you go into replay mode over top of any of these days, they don't populate?
Well, just like here, if I go back and select a bar, let's do this 6 a.m. is not showing up here. It may be something. Oh, I get it. Only because I
think you have a specific day selected.
Yeah, exactly.
Yep, that's what it is. Yeah.
So I just do all. Got it. Cool.
Well, was this helpful?
There we go. Oh, 100%.
Heck
I mean, yeah. It's just,
And
constantly going back and back testing and fucking forward testing and back testing. And
do you want me to give you a little bit of homework?
Yeah, sure.
All right. So there's 2 different versions of homework. And anybody listening to this that's in the boot camp, I challenge you to follow along because James is only going to get better. And maybe James can help you out if you're newer. So do 50 samples. And you can take notes however you want. I try not to tell people how to do too much of the, like I want you to add your own way of learning to it, but do 50 samples of actually going into replay mode and waiting for price to tap into those MAEs, then doing exactly what we just did. Where's the current high day, low day? What's my daily profiler analysis? Does 930, reject just like what we did today, or does it do something else? Whatever. Do that 50 times and take detailed notes of whatever you need to take notes of to really make that connection. And then the other 50 samples, I want you to do the hindsight version. So just like how you have your chart right here, you see how you can look back at every day?
Yeah.
So I want you to do the first, now this is very intentional. Anybody listening, pay attention. Do the first 50 in replay mode. So do it as if you don't even know what the day is going to be. And now a little exercise I like to do is I like to pull up a random contract. So go up in your symbol search and just type in NQ and then click that little drop down arrow button beside NQ. So click, no, it's like type in Q. So
right here.
No, you gotta search it first. Just click NQ in the search bar.
Right here.
You gotta put Q. No, you gotta put Q.
I fucking put Q. What are you talking about? I put NQ.
There you go. Now click. There you go. You see how you can see all the different symbols for the different contracts?
In different times, yeah.
Yep. So let's just pick a random one. Do NQU, and then instead of 2027, let's go back to 2022. So type in your search bar there, NQU 2027.
I can't do 2027.
I'm sorry, 2021. We'll do 2021.
I mean, if I could do 2027.
Yeah, we found
fucking awesome. Exactly.
Now click enter. And now it's going to take James to the actual contract of 2021 NQ of whatever time period this is. Now, before you even go back to go all the way to the front of the chart where it brings you. Nope, you just went out of replay mode.
Okay. Here, I'm in the front of the chart.
There you go. So hover over the price axis and just like, you know how you can zoom in on get out of that select bar thing.
All right.
And then just make your candles super small to where it looks like it's just a straight line. So no, not that way, the other way. hover over your price axis, not your time. That's your time.
Oh,
Yep. And now just squeeze it down to where it's a line. You can't even see anything. Now you can't cheat. So then you'll go back to a random day. You'll click select bar, select a random day in replay mode. Click select
bar,
day. Yep.
Right here.
Yep.
Whatever.
And then that's when now you can do those 50 samples
now I
that
can
way.
see, yeah.
And then you'll do the other 50 samples, pick another contract, and actually look in the hindsight and look back on. Let's practice. We're doing the other 50 samples. Let's go to that third day to the left. You see how we broke through the MAE? So every day I want you to act like a scientist here and like reverse engineer what were the if then live price signatures that told me this wasn't the MAE for reversion, but we were in the body of a 12-hour candle. So like go into replay mode and click select bar and start it right where, no, not at the beginning. Start right where price starts tapping into that MAE.
Right here.
Yep. Click it right there. And now go into the 1 minute time frame. Or maybe the five. You can't, you have to stay on this chart. So go to like the 5 minute time frame.
Yeah, 5 minute. Okay.
Oh, you can do 1 minute. Okay. Whatever. It doesn't matter. And just go forward to 9:30 and make it stop at 9:30.
Go backwards to 9:30.
And now what I want you to do is the same steps that we did just now.
Yeah.
And just do it with 9:30. Like, look, did we break above 9:30? Are we false for New York 1 or are we true? Or have we took one side of New York 1 yet? What's the current high day, low day within this daily candle? When 9:30 opens, like let's say we take the New York 1 high like this. Yeah, so we're long for New York 1 right now. So go forward now to 9:30. Let us break above or below the 9:31.
Come on. Yeah, see.
There we go. So now we got the 1 minute. Well, you're on the 5 minute, but it's fine. We're kind of like doing this speed style.
Yeah, that's fine.
And then, okay, now what time period do we know, James, that gives us the probability that we're most likely going true? What's that cutoff time period that statistic of going false drops off?
Like 10 o'clock?
A little bit earlier than that.
9:45?
9:45 to 10:15 is typically that time range.
Yeah.
And so that's really where we're looking for those live price signatures, okay, between 9:45, 10:15. Are we continuing and doing the low probability of the true? Or are we reversing, doing the 9:30 four-step reversal to then go false? Because now you're in the MAE zone, right? We just seen on the 12-hour candle that we're in the MAE zone.
Right.
So if we give live price signatures of going true, we know that isn't the MAE. We're in the body of a 12-hour candle. But then if we reject that zone, and you can even go back to the 30-minute and take a rectangle tool and just trace over the MAE zone, because it's going to be different depending on the time frame. Yeah, so take like a box tool and just trace over top of that blue box.
Over this blue box right here.
Yep, to show where that meat and potatoes of the MAE is. And now go back down to the 1 minute. And we'll just see that box that you just drew. You can turn off the time and prices when we're on the 1 minute so it doesn't clutter up your chart. There we go. And now that box that you just drew, okay, are we in the MAE? Are we getting above? Let's see, let's go back to 9:45 or go forward to 9:45. We're above 9:30. We're bullish. All right, what time is that? 9:45 is the high of day. Let's see if we either get below 9:45 and then get below 9:30, where now we can say that's the MAE, or if we get above that MAE and above 9:45, what is that showing signs of? What type of New York 1?
A long true.
And then if we're long true, James, is that a choppy day or an expansive day, most likely?
Expansive day.
And if we're in an expansive day, James, does that mean 3-hour line or apex?
3-hour line.
Buddy, where's my printer at? I'm printing off the
Edit it off now.
Daily profiler certified trader. I'm just replacing your name with Connor here.
Yeah, exactly. Well, he's the one that has been helping me out a lot. So go figure. You know what I mean?
See, people that winners. It's infectious, right? Like surrounding yourself with people that really want something. And that's what, in my opinion, a true mastermind is it's infectious. Like we're all learning at our different paces. We all have our different journeys, financial backgrounds, blah, blah, blah. But it's infectious to when you surround yourself with people that want the same things you want. Dude, we got James up here that was helped out by Connor. And if you're in the boot camp, you know Connor, dude's free. Either Connor or Rowie is streaming like almost every day, helping out people. Like that's awesome, dude.
Get on every day and just, and in the meantime, watch my videos and now doing my homework. Feel like a sixth grade kid again.
You're learning how to walk.
Exactly.
That's dope, dude. All right. Is there anything else I can help you with before we end it off here, bro?
No, I think it's good. I mean, I got a lot of work to do still. And, I think that people should just get in and do it. I mean, it's a hell of a thing, especially with the statistics, probabilities, just helps you out.
It just lets you scale when you're wrong, right? It doesn't help you win. You can win by just clicking the buy and sell button, but it lets you know the scalability of when you're wrong. That's it.
Yeah, exactly. And it's, it's actually, it's amazing the amount of, just over the last 4 weeks, what I've learned in just 4 weeks based upon what I previously learned in the last 2 years of trying to do this stuff. Yeah, I mean, I was thinking the end, it's going to be fucking amazing.
Dude, you are scary, Shane. You have to be related to this dude. Now, I can't get it out of my brain. Everything you say now.
Well, where did he grow up? Like Harrisonburg, Pennsylvania, like 2 hours away from me? He could be my long lost brother on my mom's side.
Do you watch Kill Tony at all?
Yeah, all the time.
Oh my God, dude. We're gonna be, man, I hope you stay in the community. You sound like a cool dude.
Yeah, we'll be all right. We'll make it,
yeah. All right, dude. Well, James, it was great talking to you. I hope
you too, brother.
Hope you got value, and anybody listening, I hope you also got value from James just having the courage to be like, yeah, I'll come on here and ask a question. And then now other people get to benefit along with you.
Shane Gillis 2.0. Here we go. See me live at the Anthem.
There you go. We're going to see Shane Gillis live trading. All right. See you later, brother.
All right, guys.
Heck yeah. That was Mr. James coming in. All right, ladies and gentlemen. Well, this has been a great PackTV. Like, I think sometimes the most fun things in life are some of the most impromptu, I guess. So Justun had to leave. He got sick. So I kind of just said, all right, we'll pivot and just have somebody in the boot camp that's willing and free to right now to come in and hop on stage. And we just did just that. So anybody in the boot camp or in the free side, feel free to go and listen to the recording. This is all recorded because it's live on YouTube. So that was really cool for anybody that's struggling to kind of understand how to align MAE, MFE with live price. There you go. So I am going to wrap this bootcamp focus up. We have re-engineering at 3 p.m. EST. So take your phone outs. All right, do it with me. Take your phone outs. Scroll down to your alarms app. All right, and do this. Do it with me by the numbers. We're going to go to alarms. We're going to click this plus button, and we're going to say at 3 p.m. EST. That's when we're going to come back up here and re-engineer. If you want to stick around, I'm going to be live streaming the gunship. So let's get that shared right here, right now. This is the gunship. Just to give you a little bit of a rundown, this is measured moves, statistical measure moves that create the daily candle. If you guys want any other instruments before I hop off here and get some work done for the day, because I've been streaming all morning, drop in the chat. What instruments do you want to see the gunship apply to for the PM session? I got the NASDAQ, the YM, and oil. Those are some of the most commonly traded instruments anyways. but we can easily change this to anything you guys want to see side by side with each other. Currently, we got shorts activated on lunch break to the downside for the gunship, and then same thing for. Let's take a look here at the Dow Jones. Dow Jones, we have shorts activated to the downside, cash flow already covered as well for the lunch break. And then for oil, unless you guys want any other instruments, drop your instruments if you want anything different than what you guys see here. But for oil, we have shorts activated as well. So oil doesn't typically move the same as the indices. So this is pretty interesting to see all three in the same direction. Typically, we see oil do the opposite of what NASDAQ does for these gunship moves. So I'm very interested to see how this moves and how this how the outcome of this lunch break move has. So with all that being said, ladies and gentlemen, I don't see anything in the chat for any additional instruments. I am going to hop off here, and Mickey and I will be back here at 3 p.m. EST. I'm going to turn some music on. Hope you all have a wonderful rest of your afternoons. And I'll see you all later. Bye, guys.
Did you find value in how Austin and Mick trade and analyze the market? You can find them on X here. Watch them trade daily by joining the Pack Trade Group Discord in the description.
Parameters daily and Are you stuck doing market shenanigans? Stop trading on feelings. Luck is not a strategy. Trading demands discipline and a detailed business plan. Stop rushing to failure. We teach objective statistical trading. We turn market noise into quantifiable facts with our bleeding edge tools at thedailyprofiler.com. Journal your trades, your thoughts, your wins and failures. It ties everything together into a single place. Your journaling software isn't just a diary, it's your personal risk manager, locking down your risk parameters daily and weekly. Let the platform show you the advanced statistical analysis of your decisions and their outcomes with a professional grading system, including backtest valuations, generating deep insight, and showing you exactly where you have to focus on. Master the Daily Profiler. It instantly defines the market environment. Utilize the 4 steps for perfect reversal alignment. You gain instant clarity with our indicators. See the exact levels, 05 boxes, hourly, quarterly, and 3-hour logic. We provide the foundation for your success. Forget guessing candle fortunes. Our candle science uses previous open, high, low, close patterns to predict the next bar's probability. This means replacing subjective chart storytelling with objective statistics only. Knowledge means nothing without execution. That is where the pack steps in. Join an elite community focused on collaboration. Get guidance from experienced squad leaders. True mastery requires live market repetition. Our job is to move you from familiar to proficient to mastery. Stop guessing what happens next. Define your risk. Own your process. Start your journey today.
All right, let's get this thing going. Anybody on? Like, y'all guys are quiet as shit in that chat. All right, so we're going to re-engineer today. All right, and what a fun day. They gave us a wet wick firecracker, so that's fun. Okay, so at 8:30, as we broke out of the 7:30 to 8:30 box, we knew that we had a short false. They bought up the Tokyo markets, they bought up the Frankfurt markets, and we went long. So we know that there was a 70% chance, a 77% chance to go up to come down between now and 11:30. Right? There's like a 19% chance to continuation and not to be able to take out this 7:30 to 8:30 low. Right? So let's get into the data and look at it. So we knew that short false broken, and we went long, right? Right, so 77% chance to go up to come down, 22% chance to keep going up between now and 11:30. So if we saw the false, right, we knew that it would go up to come down, right? We knew we plotted our high of day. We knew that the high of the day was going to be between 9:30 and 10:15, right? This was the mode to median was 0.7 to 0.8. We knew that the low of the day was either going to be here, which wasn't likely, or the end of day low of the day, right? That was a more likely scenario, right? We know that our low of the day mode to median was from 0.2 to 0.7, right? We knew if we wanted to make the reversion, right? We had plenty of reasons like P12 mid, right? Which I didn't pick up on this, right? But unlike most days, like the drop off is from 10:30 to 11 o'clock for the P12 mid. Under these, Asia did this, London did this scenario, right? We knew that settlement liked to get filled on a Monday. So settlement fill today was very, very likely. And then we knew that Globex and midnight had higher than normal hit rates between now and 11:30, right? Drop off time is still 10:15 for them. Right, so we have a pretty good understanding of that. We knew that we're approaching the candle science, right? 30 to 50th percentile and the 50th to the 70th. This 30 to 50 percentile right here was off of the 7:30 to 8:30, right? And then the 50th to the 70th was above, right? We knew that we would make our call on a true versus a false, right? If we could do 4 things, right? Step 1, bridge through the low of the day or the high of the day for a long false. Check. We did that before the market even opened. Step 2, could we breach the 50th percentile of this MFD? Step 3, could we make it 40 basis points outside of the 6-9 box, which is the high to low of the 6 to 9 range? And then step 4, if we fail to do a 4-step reversal, if we started seeing the 4-step reversal getting below 9:30, getting below 9 o'clock's 50%, getting 10 o'clock taking up the 9 o'clock low, 11 o'clock, making an instant high at 10 o'clock, right? Then we knew that we were to bet on the false to go up to come down, right? So, right, let's open it up. Let's go to the 1 minute. We knew that, okay, before we got into this, right, we knew that we were going to line up the gunship 50 cash flow target 50% and 70th percentile with these red boxes as it opens up, which will display when that time comes in the re-engineering. All right, so we're going to go to the 1 minute. We're going to pull up our 5 minute. The right of it. All right, we're going to put on our time frame boxes. All right, we know that 9 o'clock hasn't opened up, so we're going to fast forward to 9. All right, 9 o'clock opens up. We start breaching out the top side of it. This can be the high of the day right here. But now what's paying attention to, are we doing a DWP range 2 signature, or are we doing a range 1 DMP signature between now and 10 o'clock? So we start breaking to the downside, right? Anybody took the sells, you got plenty of opportunity to cover your queen, right? We start rejecting the 10 basis points, start sucking back into the range. Start bursting out of the top, right? This is not a DWP or a range 2 signature, so now our daily classifications are DMP to the upside or range 2, right? Or DMP to the downside or range 2, right? So we start feeding into the MFB from the 7:30 to 8:30. 30% probability. We're coming up on this 40 basis points. This is the line right here that we have to call it true versus false. And then we start sucking back into the range, right? 9:45 opens up. We decide to make another attempt. And we just, there we go. So coming into 10 o'clock, we don't need these anymore because we know we're going into the higher probability anomaly area for the daily probabilities, right? The candle science MFB percentiles. Right, so we know opening this up, right? This is going to represent our hourly flag. This is going to represent our 3-hour flag. Right, this is going to represent where price is the highest likely to go after 12. This is going to be highest likelihood at 11, right? We're going to start in a C2 state. We know that the current opening price matters, which is at 9:30 low for the 3-hour and the 1-hour, right? The moment we take out this high, then we will go into a C2 state, and the current opening will matter, right? And then we'll use quarters to guide it where this 11 o'clock probability flag will go, and we'll use line versus apex signatures to guide where the 12 o'clock wants to go, right? We know that it's the second hour of a 3-hour, 9, 10, 11, and that we're looking for a sweeper or a sweeper above these highs for an apex, or a Q3, Q4 quarters break for an apex. If we can't get those, this lines up, and we should be breaching this area right here where the 40 basis points off of was in this 50th percentile. So we switch our thinking to trues. All right, 10 o'clock opens up, takes out the high, sucks back into the range. All right, takes out the high, starts sucking back into the range, right? Now, we know that price is going to do two things, right? It's either going to come up with this high flowing cash flowing target and then bounce down, or continue going up to this one and then this one. These represent the trues. If we have any rejection from here, it represents the false. So we're going to go down and touch these high probable targets. All right, makes sense so far? Cool. All right, before we get into this, why do we look for quarterly sweepers or hourly sweepers, right? We can see that there's a 68% probability up here, right here, right? And so we break this opening price, which we just did, right? Which is flipping probabilities downward. So we need to see a Q1 take out Q1's low for this to be a valid, bringing the probability flags down, right? And then if we start accepting this 41%, because right now we have a 65% probability right here and a 68% probability right here after taking this hourly high, right? So if we take the mid, it's saying it wants the lower probabilities over the higher probabilities. right? So now, right, we're going to guide our trades off of Q2. Q2 opens up, takes out Q1's low. So now, just like we do every hour besides the 8 o'clock, 9 o'clock hour, we're going to expect a Q1 high, a Q4 low, right? Which means if we're getting a Q4 low, we should be breaching this. Right now, our probability flags have shifted down, right? So 11 o'clock, we expect to take out that. 12 o'clock, 3 hour, we should be below here. Why? Because we just got an apex signature alert. So now we're going to wait. And from the hourly, we got the confirmation. We get below the 10 basis points, bam, right? It's that simple. That's all she wrote. Right? Takes out 10 o'clock, Q1 high. Right? Now we're reaching the areas below. Damn it. What the fuck? So if you took any longs out the gate, right? If we use the probabilities for the 9 o'clock opening range trade right here, right? We already, when we go over it every day in the Discord, right? We know that this is the cutoff, right? This is the line in the sand that says, yo, you might want to exit longs, bro. Right? We got the luxury of getting that signal right here at 10:16 when Q2 took out Q1's low. Right? So we got in way before even the data picked up on it, right? This data is legit over 20 years. Right? This data is adjusted to the local volatility, right? Which means the last quarter's range. Right? So we know if we can't even make it to this high probable cash flow target to the downside, and we talked about this during the trade war game this morning. Now I'm going to target here, here, and here, right? Because it supports the higher probable long false movement. And I can see that settlement, which is the cash flowing target right here, is aligned with the cash flowing this, right? So the next target is down here. And then we knew that P12 mid Globex open in midnight, which had high probabilities, remember, of getting retraced, also aligns with this data right here, right? And there you go. Q1 high, Q4 low for the 10 o'clock hour. Probability flags flip down, right? They flipped down at 10:16 when Q2 took out Q1's low. Took out this high, and then Q2 took out the Q1 low, right? So we continue to expect a 3 hour line downwards, right? We know our probability flags will stay down, right? So we expect 12 o'clock to take out this low, and for this 3 hour to take out this low as well, right? Now, because we expand it so much, we can expect some retracement. So we're going to see, does it swipe this low to suck back into the range, or does it do a wick rejection to suck back into the range? All right, so we know that the line that matters for us is all the way up here, right, for Q1 of this hour. We can't even breach the previous hour 50. We start breaking out of the 05 box downwards, sucking back into the range. Q2 opens up. Q2 takes out the low. We expect Q1 high, Q4 low. Now the line in the sand, that will tell us Q1 high, Q4 low, or doji will be this quarter high until Q3, and then it'll be Q2's high. And then we start expecting a doji hour. Q3 opens up. Now it's this high, right? Probability flags are down here. All right. So now Q4 is opening up. You bridge Q2 high right there. So you got your doji alert for this hour. You're going to get an inside hour doji unless we start running. All right. We start sucking back down to we take out this high, and then we just breach that where the probability flags are, right? So your 3 hour line, or your apex for the 3 hours, right? Now we see that 12 o'clock's opening up. We know we're looking for one thing or three things, right? In the first 15 minutes, a perfect line signature, a false 05, or a first 5 minute lower high to be put in for the line signature for the next 3 hours. We know that our probability flags for 1500 now are still down, and we know for 1300 is still down. Right? We know we're going into C2 state, so this previous hour opening price matters. We know that that our 930 trade is done. So you can get rid of that. We hit target. Right, and then now we're going to look at this 3 hour. Right, we take out the lows. Right, so we have a perfect line signature line to the downside. We got to wait for this hour to develop to see if it stays through at least minimum Q2. Right, and then we got it turned into a first 5 minute line up. Right, so based off of Q2, that will give us a signature if we're expecting up or down. Q2 or New York 2 is forming during this time. Pretty big range. All right, so now we got a first 5 minute line up, right? We jumped over the opening prices, so right now probability flags are up for the 14 and the 1500, right? We breached the previous hour 50. Again, we're wanting the lower probabilities over the higher probabilities. We're expecting Q1 low, Q4 high. And we suck back into the range. Right, the quarterly low that matters now is this Q1 low for Doji hourly. Q3 opens up, that low shifts up to the Q2 low. All right, we get a Doji alert right there. Right, so we're expecting this hour to be a Doji alert. Right, we know New York 2 is open. We're just waiting to break out on one side. Till we do that, we've got to read live price. Q4 opens up. And we continue to do Doji price action. And there's your hourly wick right there. More wick than body. Right? You got a first 5 minute line signature up. We can delete that. That's no longer needed. We know that the hourly opening price that matters is this one right here. Probability flags are up for the 1400 hour and for the 1500 hour. Unless we get a line or apex signature during the second hour. O5 box opens up. We just flip the hour probability flag down. The 3 hour will come down once Q2 takes out the low. Because then we're saying this is a false O5 break, and I would bet more on this signature to the upside than this one to the downside. I'll wait for the quarters to confirm. Right now we've got a DMP signature to the downside. Q2 opens up, starts ripping towards the highs, and takes out the highs. So now we got a Q1 low, Q4 high with the probability flag down, right? Awkward situation. Doesn't happen all that much. But we're in a range. Right, Q3 starts breaking Q2's low, confirming a Doji alert. And we're just ranging inside 15 right here. So we expect one side to get hit and then the other side to get hit with speed, the midpoint to get hit with speed, or we're going to continue up for this 5 minute line up. And that's what we're going to do. All right. 1500, we got a 3 hour line up. This is the open price that drives. This is up 2 for 1500. So this opening price, we're opening up in a C3 state. We breach this opening price, right? We know the probability flag flips down, right? When we get into a C2 state, a higher low needs to be taken, and then we base it off the current opening price and the hourly quarters. We fail to take out that opening price. Q2 opens up for the hour. We take out the high. We're expecting Q1 low, Q4 high to the upside. And we still haven't broken out of New York 2. We're not going to get data for the afternoon. Doji alert right there, right? We took out Q3, took out Q2's high, right? So you expect more wick than body. You don't get it, but there's your re-engineering for the day. Pretty easy day. Struggled with the 930. If you took 2 losses, you got a late wick firecracker, which happens, right? It waited until it just wanted to plant. Remember the pivot times, right? There's 4 major pivot times to put this in, right? So this high, right? That can come in 4 different times. There are 930 to 945. That happens the most. 945 to 10. That happens the second the most. So if I was a betting man, 930 to 945, that major pivot is to come 2 to 3 times a day. The 945 to 10, 1 to 2 times a day. 10 to 10:15, once to twice every 2 weeks, 10:15 to 10:30, right? Once a month maybe, right? Like you gave your perfectly easy sweeper signal at 10 o'clock, at 10:16, right? You confirmed that that was the major pivot when Q2 took out the low and just started puking. And then if you're really scared or hesitant, right, you had to just wait for the 9:30 break, right? Remember the 4-step reversals, right? We broke 9:30 and never came back, right? You can structure risk around here. Now 9:30 was bigger, like you see me do all the time. Like I'll enter here, stops here. I'll enter here, stops above here, right? If the range is this humongous. If the range isn't this humongous, then like, or I'm trying to wait for the pullback into these levels so I can keep my stop above the 9:30 high, right? Cover my queen 10 basis points, and then just get stopped out for a quarter of what the 9:30 range is. All right. Other than that, pretty successful day. Hopefully you guys read it well. What questions do we have? All right, ladies and gentlemen, this was a fun day. I see the people that ask all kinds of questions in the Discord have ignored the fact that I'm not going to answer I'm not going to sit there and obsess over the Discord chat to show up to my war games. Ask questions. Show up to the Bootcamp Focus. Schedule a Bootcamp Focus 48 hours in advance. I'll show up at 12 o'clock. Bring you up on stage. We'll have a conversation. Or your next time that you can ask me questions is 1500. All right, that's it. In the random breakout, Foz, can you help me interpret the histogram at the top? Sure, bud. Right. So let's go back to the 5-minute because we want the quarter volatility. Okay, the range. Right. Let's get rid of this and this. Actually, we can keep this on. Right. Right. We're going to put the random false break on. And so this indicator, you can do it any time-based range. Anytime based range. I only teach you that 7:30 to 8:30. You can do it on a 1 minute. You can do it on whatever time based range, or you can do any cutoff time. So let's say we're really here. I'll give you a really nice one right now. Let's say we want to go 9:30 to 9:45, since that's all the hot wave at the hottest wave on Twitter is going to be, right? And then we're going to say, why is this not working? What the tarnation? Oh, okay. That's because over the last 20 or the last, there we go. I was like, what the fuck? Let me change it back. What is it? No, it's 9:40. Yeah, that's the one, right? We can see over the last 70 days, right? I don't think this is right. I call bullshit. Maybe it's, oh, you know what it is? It's 9:45 to 10, maybe. Thing's glitching out on me. Either way, right? Let's say not 10 o'clock, right? We want to say 9:45 to 10 with a cutoff time of 11:30, right? We can see that over the last quarter, right? We went true 59% of the time. We went false out of this, and this is your probabilities for MAE, MFE. Now, what we do 7:30 to 8:30 with our cutoff time at 11:30, right? And so we know over the last quarter, we went true 50% of the days, we went false 49% of the days, and we're on a 1-day false streak, right? This is glitching out on me because of the holiday, right? So right here, right, this is the 30th percentile. This is the 50th. This is the 70th, right? You pretty much know that. And then as price is going up, after we break out of that range, we know we have the MAE, which starts all the way down here. This is the 30th, the 50th, the 70th. A pullback. And as we move up, this will move up with it, right? So let's move up a little bit and you watch how that moves up. So we start moving up, you can see it moving up, right? We start moving up, it moves up, right? And we know that our cutoff time is 11:30, so this all this data stops mattering at 11:30. Right? We move up, it moves up. Right? We move up, it moves up. Right? And then at this point, right? Like the moment you go false, right? So you could be targeting this and still get a true day. The moment we go false, we're using this 30 to 50 percentile and the 50 to 70th percentile for once we go false, this is the MFE of that. So this is the MAE of it, the initial break, and this is the MFE of the false. This is the MFE of the true, right? This is the time data, right? That's supported behind it. And as you can see, green is MFE, red is MAE. So anything past 1015, you're more likely getting a true day if you have not already reclaimed the MAE 30%, 50% probability, right? And the green, so you can see that most of the time, right, we continue putting the MFE in. Once we pass this, that's another, I won't say it, but like, because I don't look at it, but you could use that to identify the true versus the false, right? And on the days we go true, you can see majority of the data, right, lies at the end of the session of the 11:30 to 12:30, 11:30, right? For the MFE, the days we go false is right here. So the left side of the median MFE is false, right side is true, right? And then with this, right, left side is for a true day MAE, right side is for a false. And you might have to listen to that a couple of times, but try to understand what that represents, right? It's definitely something I don't talk about enough because I know it automatically in my brain. But good question. Is that breakout indicator where, no, the 40 basis points for the true comes off of a study that I found. Well, actually a study I did on looking over the last 10 years, anytime the 730 to 830 was a true, right, it usually breached that 40 basis points, right? Anytime it was a false, it can even make it up to the 40 basis points. Majority of the time. All right, let's see, any other questions? Purple and gold, for that represents the MAE time, or the false MFE time. So you don't even need to focus on that because you should have targets. This is kind of overkill, but like, let's put this back on, right? So this is once you go false, meaning you cross the 730 to 830 low, you know your target in here, and the purple is the MFE, and then after you go false, you get an MAE, right? And that's what this is representing. Telling you, this is a free indicator that nobody knows about that I've been promoting, and it's probably like the coolest statistical tools you ever find. And it's free as shit. All right, all you have to do is go to my trading view, your profile, blah, blah, blah. Go to my scripts, and it is the range breakout MFE MAE research tracker tool. Any other questions, along with all these awesome other indicators I've built throughout the years? All right, one thing I want to tell you bootcamp members, because it's basically bootcamp members and PAC members, right? Like, so we released this awesome MAE MFE tracking tool. And if you look at my chart, I have the gunship light on, and it's just randomly, like you can see my thing right here. Right, if you go to Twitter, right, and this is for those that showed up, right, and you go to my pinned tweet, or if you go into Andrew, Trades Don't Lie's pinned tweet, right, you'll see this awesome thing right here, right, and you click on this article, it says how to connect Claude to TradingView, right, and you follow the instructions. If it has a picture, you do what the picture says. If it has writing, you do what the writing says. Right, and then you have this awesome little TradingView bridge that hooks up to your TradingView, so you can build indicators from it. You can collect data from it. So, like all you guys whining about the boot camp, having to collect data for your business plan, you can easily. This is the wrong one. You can just come into here. Nope, not Trade Journal. Right, you can come into the boot camp. Right, you can come over to week 8. Right, you can build your little, come over to you, collect the MAE, MFE data. Bam, this is right here, and you can connect it with this cool little tool that Austin gave you, the gunship light. pullback, front run, breakout, 1800, 03, market open, lunch break, and you can have it just collect your data in sample for 100, out of sample for 100, 3 times. If you get fancy like I do, you do different volatility states, and you can literally have it just collect the data right here without you pressing a fucking button. So maybe you guys should try that sometime. I don't know. It seems like a cool idea to me. Or you can get real fancy with it and do NinjaTrader. But I'm just auditing this to make sure that I'm not, and it's already worked. And since this is the tool that I'm giving you guys for free, and that's all free. Besides the gunship light indicator, you can build your own. Right? That's, you got to be part of the boot camp for that. Right? Which displays the MAE, MFE, and the 4 moves. All right, what questions you guys got? And yeah, don't use Claude dashboard. You got to get VS, right? There's instructions on how to do VS and all that stuff, right? But yeah. Actually, NinjaTrader, we got a NinjaTrader MCP and CLI. And the biggest thing is make sure you're not using the MCP. Make sure you're, when you're collecting the data, you use the CLI, which you have to tell Claude. The CLI is more accurate and more productive than the MCP. One day we'll release the bridge to the NinjaTrader, but not anytime soon. We got it for Quant Tower, we got it for MTU5, we've got it for everything. IBKR, we've got it for everything. All right, what other questions you guys got? See? Let me show you guys this. Finally, somebody listened to me. He did it over the weekend, and he collected all his data in 40 minutes. Crazy. But yeah, that's all I got. You guys have a great day. Now I'm going to play a gangster song. I can find it.
Welcome, this is PackTV.
One more time, it's the time. Drez catches sings. All my brothers in the rain. Karl with the bummer going in, turn the page. Miguel catching 10 points, me and not the same.
That was the wrong one. Play my intro now or die. Aw. Oh well. It was worth a shot. Later, haters. I gotta end this damn thing.